Get a little chat back if you guys can hear okay. Good to see you, Bob. All right, everybody can hear okay? Just want to do a quick audio check. Good morning to you, Gillis. All right, good. Well, welcome for day 2 of our Cyber Expo. Looking forward to seeing everyone back here. We've got a great lineup today at the Cyber Expo. We're going to be running up until 4 o'clock. If you can make all of them, that is fabulous. If you can't make all of them, don't worry. It is going to be recorded, and there will be highlights for all of you to kind of, as long as you subscribe to our social net media, you'll be able to get those alerts really quick. All right, so once again, who's been here for the second day? Just out of curiosity. Just let me know, is your day 1 or day 2? You've been here just today is 1. If you hear yesterday and today, just write 2. Just want to see who's been here. Been here for 2? 2, both, Michael, Bob, good. Vince been here for twice. 1, John, okay. All right, good. Well, just came to hear you today, Larry. Okay. Well, thanks for being here. All right. So anyway, like I said, we're going to be talking about swing trading, options trading, Forex trading, accounting, traders that need to know how to control how to deal with accounting and trading. So many things we got to cover. And this is like the most important part of trading. You got to get educated. You got to learn, and you got to surround you people that know what they're talking about. And you need to find someone that is going to be a good fit for you. So I'm going to start off talking a little bit about, like I talked about yesterday, some entries and exits. I want to talk about some stocks that we traded. There were some of you here that were here yesterday that were on our watch list. And I want to bring up some of those stocks and show you how valuable they are, why they went up, and when you need to know when to get out. And most importantly, how to control those losses. So, before I continue, just really quick little risk disclosure for all our presenters here. We are not going to make any guarantees or promises that this is going to make you $1 gazillion, okay? You're going to drive the next Ferrari, and you're going to quit your job and you're going to settle down in the Bahamas, okay? There's only things guaranteed is death and taxes. There's a very high risk in trading. I think I even showed you yesterday that it is literally a 90% failure rate without proper education. It does vary to student to student. So please be very wise. Don't go out there and trade something that you can't afford to lose. All right. So what I like to do right now is I like to just go to the market really quick and get quite excited what's going on. I want to start off with this stock right here, GV. Now, who here remembers the stock GV from yesterday? Anybody here remember this stock? Some of you do? Okay, good. I want to bring up, this is our professional trading room. And I want to just scroll up here a little bit from what happened yesterday. And, there we are. Okay. That's the 28th. No, we went too much. We need to find this one. This is the 4th. Right here. This is what I'm looking for. Does everybody see it right there? Actually, let me get my crayon so you guys can look a bit closer. And I just want to show you some of the stocks that we trade and, basically what makes these things move. So right here, you'll see this little order right there. Okay. And this is the stock that we're looking at on the watch list. This was actually at 9:18. Okay. This was yesterday. And these were all the stocks that made some big moves yesterday. Okay. The big one was this GV. That's what I want you to focus on. Now, let me just clear this out. Let me bring up my execution system. And right now, we're just looking at the trading room. By the way, all of you here are invited to come to the trading room. Okay. I'm going to give everybody a link. We are here all day. Okay. Now, let me just X out of this and let me bring it up. So that right here, fellow traders, here's 9:30. Actually, let me go a little bit. Maybe 2 days might work. Okay. So here was 9 o'clock. That was right around about $2 a share. And then you could see here, we usually start at 9 a.m. The trading room opens up at 7:30 Eastern time. And you could see, and could everyone just do the math really quick right here? What did this stock do here from the day we did that order until where it is today? How much money was it up? Can everybody do the math? Let me see if everybody's paying attention. What is 2 minus 7? How about that? Everybody knows simple math? Come on, don't be shy. Could everyone just write the number 5? Okay. Bob, what about you? Courtney, what about you? Don't be shy. Alex, Alan, 5, right? Now, let's just say you didn't make $5, okay? Because $5 on 1,000 shares is $5,000 times that 5 days a week times 52 weeks. I mean, shit, that's a lot of money, right? That's all 1.3 million. I forget. I don't want to go that crazy. That's a little nuts. Let's just say you made $1. Okay, just one. Let's say you got it at 2 and you sold it at 3, or maybe you chased it at 4, you got out at 5. So if you made, or you know what? Let's even do less than that. Let's say you made 50 cents. You didn't have to make that big run. 50 lousy stinking cents, right? 50 cents is $500 on 1,000 shares times 5 days a week times 52 weeks. It's about 130,000. Okay. Anyone happy with that? You didn't have to make 5. All you do is make that. Now, the question is, sounds like a pretty good job, right? Well, the question everybody's asking, does anybody know why the stock went up? Let's see, been trading for a while. What made the stock go up? Anybody know? Murphy said buyers. Gillis said buyers. Brooks says buyers, right? So you're telling me it wasn't the Fibonacci. It wasn't the MACD. It wasn't the VWAP. It wasn't earnings, okay? Its news did have a little something to do with it. Actually had a lot to do with it. But why did it go up that much? You know, like, well, I thought it was good news. You know, basically they got some big funding from some Arab and it's a flying car, you know, AV flying car, you know, whatever it may be. The point is that it went up and it did exactly what it did for one reason: buyers. And that's what we're going to talk about. We're going to talk about level 3 and level 4. All right. And we're going to talk about how we find them and everything else. Because listen, we are right now in some very difficult, dangerous times. The market is down literally 300 points. And when I bring up this chart right here, look at the Dow right here. We were up to 4,400. We dropped all the way down to 4,200. That's 2,000 points. Then we had a rally. Then it came back down. Then we had another rally yesterday. Now we're back down. It keeps hovering right here at 42,400 shares on the Dow. Does anyone know why the stock is bound? Why is the Dow not going lower than 42,400? Anybody know? Because I was just showing you one stock that was moving, but what about the rest of the market? Why is it? Okay, the news is it has to do with the tariffs. There's buyers. It's called program trading. It's called algorithms, okay? Things that you guys probably didn't know that exist, but I'm going to show you how they do. So let me, so we know everything that's happening. People are saying there might be a recession. There's, you know, maybe it could be the next tech bubble, the dot-com bubble, the COVID bubble. You see the tariffs, what they're doing. You're seeing the layoffs that are happening. You know, and you're thinking, do you jump in? Do you not jump in? What do you do? Okay. Well, listen, everyone here, I'm going to give you access to my book for free. I'm going to give you access to the trading room, you know, do it to get in there, do a trial, because if you're sitting at home by yourself and twiddling your thumbs, okay, and hoping for the next best thing, or don't know who you're talking to, whatever, this is why it is such a very big failure rate. All right. So just by sticking around, like I said, everyone, I'm going to give you my book. It's a great fast read. People love it. Just for sticking around here, I'm going to give it to you. Okay. But before we do that, let me just introduce myself, because some of you don't know who I am. I live here in New York. It's the financial capital of the world. I'm one of the original day traders that started back in the late 90s. I've been a 12-time champion at the Traders Expo. I beat every trader I competed against. Forbes wrote a big article about us, a bunch of kids tormenting Wall Street. Obviously, I'm not a kid anymore, but back then I was 22. Now I'm 53. So it was a very fun time. And I just want to clarify something very important. The technology that we had back then is the same technology you have today. The only difference that changed is back then you had to be licensed, you had to work for a firm, and you had to pay $20 to $30 a ticket. Today, you get free tickets. You don't got to work for a trading firm, okay, and commute and live here in New York. And that's why more and more people are getting into it. But the difference is back then till today is a lot bigger failure rate because of one reason and one reason only. It's too easy and too convenient. And that's why you're here, because you're here to make a judgment that if you got an IRA, if you got a pension, if you're looking to change career and you tried it, you know that someone's got to teach you to be part of it. So I like to put the fear of God in people because this is why people fail in trading. And I hate seeing it. And I know for the same reason, like I just spoken to someone last night, a gentleman, Carmine from Italy. And, want to become a student. And here's somebody that's got over $100,000 in the market. Okay. And he said, I was doing great up until, till December, January, and I kind of lost it all. Okay. And my biggest thing is this, and this is what you don't want to be and be in his situation. I always ask him, who trained you? Nobody. He did himself. Well, who are you trading with? Nobody, by yourself. So my thing, as I always try to tell everybody, would you give your money to someone to trade your account, which a lot of you do right now with your pension? Because and only reason and would assumed the guy obviously learned finance and has a good team around him and everything else. Well, some of you want to take matters in your own hands, and that's the problem that you have. So listen, it's not about me. This is about you. So my goal is I'm here to teach you just the basics of trading. The basic of trading is just following the big money. If you understand how to do that, you just won about 50% of the battle. So let me show you exactly how we do this. Let me show you the comments because entries and exits have a very big, implication of how people become successful and how they become failures. Now, the GD stock that we showed you just now, here's Carrie. Carrie did great on the stock. Look what she did right here. Carrie, you'll see her in the trading room. Is she there right now? Where's Carrie? Is she here? Carrie, where is she? She's there every morning. Did she take off today? She did so well yesterday. She took off. Yep, she's not there. She took off today. I'm just looking over here on the left-hand side. You can see people from Chicago, Seattle, Vancouver, Burlington, Cleveland. There's people from all over the world here. So anyway, Carrie actually had a really good day yesterday. She bought the stock. She did phenomenal. You can see it right there. Jetson's trade, one-day swing, 270 out at 650. She did great. Congratulations to Carrie. By the way, you're going to get to meet her and everyone else that's in there that trades. Anyway, regarding about what we teach and how we find these stocks, it all starts by using the right tools. She was there this morning, Gillis. Well, I guess she just took her money. She ran. That's probably what happened. All right. Anyway, what I want to cover is basically NASDAQ Book Viewer. Okay. And I'm going to show everyone where to get it. And most importantly, I'm not going to show you now because you'll actually do more harm than good, but I'm going to give you 2 videos about 5 minutes long, how to download it, get the right one and set up the defaults and how to trade with it. But let me go through some basic moves. I've done a lot of education for NASDAQ. They want me to do presentations because they know that if you guys know how to trade, you'll become very successful at it. This is how we kind of utilize following the money. Now, the NASDAQ exchange, let me just explain something to you. When I started 30 years ago, I had to pay $1,000 just for this data, okay? And that's why a lot of people never traded because just like you, a lot of people are like, oh, I don't want to spend. I mean, obviously some of the smart ones back there will be like, oh yeah, this is great data. I'll pay $1,000 a month for it. Listen, you're buying into a business. It's not free, but it doesn't cost $1,000 like I paid 30 years ago. Doesn't cost $100. It costs $15 a month. You basically have a seat on the exchange. Can I ask you a dumb question? Who here wouldn't pay $15 to walk and watch and trade on the floor of the New York Stock Exchange? Right? What does it cost to go to the New York Stock Exchange? Does anybody know? Anybody ever been there? Anyone ever try to get access to work on the floor and follow Goldman Sachs and Morgan Stanley? Go find out. First of all, you're not allowed in there, okay? Number one, not just a security purpose, right? But it costs millions. It used to cost millions. And NASDAQ, what they did is like, well, you know what? If you want to pay millions, go on the floor. You want to trade with us? It used to be $1,000. Today it costs $15 because they know the more people that trade in the exchange, the more money they make. That's why NASDAQ controls about 50% of the volume of every stock that trades. But let me get right to the training part of it and show you how we utilize it. We're looking at a stock right here, and we're looking for buyers, okay? There's a big buyer right down here. You could see it. Around 600,000 shares. And you're talking literally almost, what is that? 16,000 orders. Here you're watching the video. It goes down. It hits a number at 110. And look where the stock is. It goes to 119 in one day. How is that even possible? Well, and how would you have known it's at 110? Well, we went to the exchange. We looked at all the orders. I did an assessment. That 3,000 is a hell of a lot more than I would trade. 700 is more than I would trade. And shit, there's a freak. It is almost 600,000 at that. And that's more than, and that's combined of 16,000 people. What do you think is going to happen when you get to 110? You think it's going to go down or you think it's going to go up? Because how many times have you missed that trade? Well, the question is, are you looking at the left of the chart? Or are you looking at the right of the chart? The right is the future. The left is the past. All right. Let's go look at another example. Look at this stock, how it hits resistance. Stock goes up, hits 40, and comes back down to 38. How we've known and had a game plan to get out at 40? Well, when you look at the chart, I don't really see any resistance, but when I want to look is where are the sellers? And there's that big seller right here. 124,000. Now, is that a lot? Well, when I look at everything, it's more like 3 and 4 digits. I see a 5 digits. I see a 6-digit number. You damn well. I think that's a big seller. And there's about 182 orders out there that make it. That's around the entire world. You think I want to question that guy? Oh, this guy's these people don't know what they're talking about. I just heard some analyst on TV said the stock's going to 42. Oh, yeah? Okay, great. Put an order at 42, but you got to get through that 40 first. And you know what? How many of you here were this close, this damn close to get out of position, but because you didn't, you gave away that profit? Happen all the time. I don't even need to even ask you that. All right? That's why we're here. Let's look at some trades that we did this week. Apple, for example. They do it on every single stock. Apple is dropping, right? Okay. What do we need, everybody, for a stock to stop going lower? Let's see. I'm going to ask everybody that question. Vinny, was Gillis the only guy here talking? Brooke, what about you? Carlos? What are you guys doing over here? Michael, Phil Murphy. Listen, I'm not trying to pick on anybody, but I'm just being very honest with you. If you can't talk and don't know, if you don't have the answer, that means you don't know what you're doing. Okay? That's the only reason why I'm doing that. I'd rather you be wrong here than do it with real money. So look at everyone's answer there. And by the way, please don't take it the wrong way. I'm a little brash. I just hate and bothers me and it upsets me when I see people lose money in the market. Okay. I'll give you an example. Right here. What is the failed rate of people trading the market? Okay, I'm asking ChatGTP. Okay. Failure rate is extremely high. 80 to 90% of traders lose money. Okay. Why do they lose money? Why they lose money? I mean, what? I'm sorry. I meant why, not what. Poor risk management, risk too much capital, ignore proper position size, emotional. This is all AI coming up. How do I become a better trader and I don't fail? Discipline, education, risk management. Okay, there you go. So these are the reasons what we're here to talk about. Control emotions, keep a journal, study behavior patterns, avoid over trading. I mean, do we really learn from successful traders? Oh, wow, that's interesting. That's something I think we need to know, right? Follow traders with proven track records, not social media hype. I think that's a really good one too. That's why I don't really like it. Join communities, mentorship programs, read books, trade courses. Okay. Everything that the reason why you're here. So let me move that over to the side because that's why we're here, right? All right. So let's look at Apple. And stock is going down. And like you all said, what's going to make it go up? Buyers. Okay. So let's go to the exchange. It's not the Fausto indicator. It's not the, it's not these fancy programs out there. We're just going right to the exchange, right to the exchange. Okay. Buyer out there at 22.95, right? For 100,000 shares. What do you think, fellow traders, is going to happen when we get down to $229.50? What in theory you think that could possibly happen? Murphy said it's going to bounce. Gillis said it's going to go up. Anyone else? Bob said it's going to pop. Really? Okay. It's going to bounce. All right. Now, my question to ask all of you is this. Did you need an indicator to tell you that? Did you need me to tell you that? Right? Did you need, the TV or somebody else to tell you that? No, you figured it out on your own. Right? Well, let's go see what happened when it got down to that number. Okay. Started at 236, came all the way back down, hit that number at 229.50, and at right around 11:30, and then it went right back up to 236 in about an hour and a half. Now, did you need an indicator to tell you that? No, not at all. So I want to do a quick poll question really quick. All right. And if you're a student here at Cyber Trading, please do not answer this. All right. Let me bring up can we bring up a poll? Yeah, there we go. All right. Here we go. So let me launch this. Do you have level 3 quotes? Let's see how you guys will answer this. And as you answer this, let me share this right here. Daily traders is estimated at an 80 to 90% failure rate. Okay. All right. This is going to be a pretty cool statistic. Okay. Everybody ready? Everybody done? Everybody answered? Some of you didn't answer. I don't know why. If you don't answer this question, I'll take this out of note, or you're probably a student. Okay. That's the only reason why. All right. I'm going to end the poll. I'm going to share the results. 71% of you said no. 10% says you're not sure. That's about 80%, right? What did that number say? 80 to 90%. All right. Now, if you knew, right? If you just knew this small little information of where the street is buying and selling stocks, how much smarter and better trading decisions would you have made? How about this? If you knew you had a lot of sellers out there and you're losing money on the stock, do you still want to own it? How many of you still have a stock that you wish you should have sold a while ago? It happens all the time. It happens all the time. Does anybody here own Bitcoin? How about this? Bitcoin also trades with IBIT. Okay, you got IBIT. That's the reason why I'm bringing it up. All right, so we got IBIT right here. So IBIT obviously took a big dive. Okay, took a huge dive. Now, when we looked at the NASDAQ book viewer, we'll notice that right around this price, around 49.80, we started getting this big block order of 77,000 shares looking to be bought. Well, is this the basic entry we're looking for? Well, you saw what happened with Bitcoin lately. Got destroyed, had a huge run up when the announcement the White House was having this whole conference today. The stock the next day tanked because the tariffs kicked in. Then all of a sudden, these buyers stepped in, and now you could see over the course of the day at 11:30, the stock went up to 51.40, and all started right there. How would you have known that? Because of that. So those were really good entries for buys. Now, the question is, on the exit, what about on the sells? Let's look at Palantir really quick. Okay, we've been a big fan of Palantir for almost a year now. We've done really well. But the question is, nothing goes up forever, right? Nothing does. Anything could happen. COVID could happen. A plane crash could happen. Finance, anything could happen. Trump could all of a sudden say we're going to raise 100, cut military spending and destroy the stock. Anything could happen. Well, you don't think program trading knows what's going on before it happens? Because look what happened to this stock. A lot of sellers out there, but there's sellers at every single penny. But the real big one was hovering right at 90. 530 orders for 152,000 shares. What do you think is going to happen if you didn't have a game plan getting up to that $90? If you didn't exit, now you went from 90 all the way down to 83. All right. Now, could you guys be honest? How many times has that ever happened to anybody? You're sitting there and like, oh, I'm making some money. And all of a sudden you come back later this afternoon, like, what the hell happened? How did things just drop 10 points on me? Murphy's got a big why yes, right? Aren't you tired of that happening to you? Bob says all the time. It happened with you, NVIDIA Gillis. Aren't you sick and tired of that? Right? So like this, a lot of you here, maybe you were trained by somebody else, or maybe you never took training. But how do you think that you're going to go into a business? Because this technically is a business, right? How are you going to go into this business and think that you're going to have and be competitive of the most, probably is the largest business in the world? What makes you think that you're going to beat Goldman Sachs? What makes you think you're going to beat BlackRock? What makes you think you're going to beat, anyone on Wall Street? You're nobody. You're the ants on the floor. You're just trying to get the crumbs, right? You want to get stomped? Well, this is how you're not going to get stomped. You got to know where the street is. And that's why all of you are I'm going to invite every single one of you to come and join that trading room. And you could see people like Kerry, people like Jody and John and Lawrence and Grant and Leland. All these people have been around that have done their homework and built a very great career in this. And you can do that. But it starts off, you got to get mentored. You got to know how to play the game. And it all starts by following the order. Just this one thing that I'm just teaching is just a fraction. I didn't get into other stuff too. I didn't teach you how to find the stocks. We only have, about another 20 minutes. And I will try to get into a little more detail because I didn't really show you level 3. I got to show you level 4 too. But when it comes to this, this will at least give you a 50% fighting chance, at least a 50% fighting chance. That's a pretty big, percentage than being part of that 80, 90%. Now, let's go talk about some nuclear stocks that did pretty well too. So nuclear's had big run-ups. Okay. Now, here you had SMR, huge run, 15 up to 18. Trump is basically getting away from the Green New Deal. He calls it the Green New Scam. He's talking about taking down all the windmills out in the ocean because it's killing the whales. Meanwhile, Biden and everybody else and Obama spent trillions of dollars to build them. Now you have another president's going to take them down. And his big thing is he wants to do nuclear. Okay. He's like, and some people like freaking out. They're like, no, don't take down that windmills. We got to save the earth. As a trader, I don't get personal. Okay. I just follow who's in office and who can control what they can control. Okay. Because that's what's going to happen. It's going to affect certain stocks, and nuclear stocks obviously did really well. Now you could sit there as a trader and be like, oh yeah, this is great. Nuclear is going to take off. And they did do well, but there's always people that are going to take a profit. So personally, like you take things personal, like, oh, I'm a big Trump fan and, nuclear and this is going to be the next NVIDIA, there's always someone out there that's going to take a profit. And when you look at this stock right here and you're like, okay, you're doing well and great, but you know what? I don't care how high you think it's going to go until you get past that 68,000 share seller at 1822. It ain't going anywhere. What do you think happens next? Got a good run. News came out during the day. Then you get around 3:30 and you're like, what the hell just happened? Why did it go? How did it took all day to make that big profit and lose it all in 30 minutes? Okay. Or even 10 minutes. How did it drop so much? Well, you know what? You came up to a big seller and you weren't prepared for it. I'm for you. I'm like, listen, you thinking like it's going up. I'm on your team, but I'm not going to screw around with that guy. And that is how things happen. So who here would like to get the NASDAQ book viewer? Anybody here would like to get it and try it out and play around with it? $15. I can't believe they sell this cheap. I am so ticked off that I had to pay $1,000 for this thing, and they lowered it. I mean, do you know what $1,000 is for a 22-year-old 30 years ago? That's like paying it's like telling one of your kids that's 20 years old, hey, you're getting a job and they got to lay out like almost $3,000-$4,000 to just to pay the rent. Nobody had the money back then, but this is what they told me. You want this job? You want to make the six figures? So you had to come up and pay $12,000 a year for it. Does that seem like a problem? 98% of the people that showed up for the job thought it was a problem. Okay. I was part of that 2%. All right. But now it costs $15. Are you kidding me? $15? Who here would not pay $15 for this? Okay. Anybody here buy software? What do you guys pay? Just out of curiosity. How much, or maybe when you looked into it, what does that stuff go for? Some good stuff, because listen, these software companies don't work for free. $100, $50, right? Here you have a seat on the exchange. $15. Interesting. By the way, did I lose anybody yet? Did anyone get lost here? Anyone? No, good. Everyone's following along? Good. That's perfect. That makes me feel better. Okay. Listen, I love doing this. I love changing everyone. And I'm here today that I feel that every single one of you are going to sign up. And you know what? What's the worst thing that could happen? Maybe you find out trading is not for you. And then what? That's going to save you thousands and thousands of dollars. And you know what? That's okay. I know. Listen, how many kids go to school and said, I want to be a doctor, I want to be a lawyer, maybe a politician, I don't know, right? Do you know what the percentage of people that go to school actually don't even fulfill what they went to school for? It's like 80%, right? 80%. They spent all that money, 4 years of college, and they did something totally different, right? Well, that's why you're here. I'm trying to use a metaphor in a way of, listen, I know a lot of you here want to do it. I'm telling you how to do it the right way because I was a market maker. I don't know, some of you don't have the luxury to live in New York and live in a town where some of the biggest traders live in. Some of those people you see on TV, one lives right across the street from me, okay? You're not going to beat them, but you could join them, and I'm telling you how to do it. So you do it right or you don't do it at all. So I want to talk about one last thing, which, by the way, I'm going to spend a lot of time in our trading room showing you examples of this, all right? Because that's, let me just show you, for example, here's one of them. So here's our trading room right now. I'm going to go back to it. And do you see this right here? This is our alert service right here that you're all going to see. And you see this little screen right here? I want to point that out. And, here's all the traders. There's Grant Brockway. Here's Ireland. These are all traders. They're chatting away. They're telling you where they're getting out of it. All right. I turned the audio off because I don't want you to be interfered. But let's look at the stock Rigetti they're looking at. All right. So let me just show you something pretty cool. All right. And by the way, you can get all these. We do an alert service, so you'll get it on your phone. I don't know if you guys subscribe to Telegram or X. This is automatically linked to it, so we do post these up there. All anyone following us on Telegram, it's a free service, doesn't cost you anything. It's not like you don't have to, no one's going to harass you. Yep. Okay. Good. All right, John, are you subscribed to our Telegram? Anyone here subscribe? Rich, can we put in the link for them if anybody wants to register for it? And also our there it is right there. That's our Telegram. If you guys just click on that, there it is. View in Telegram, preview channel. That's us right there. It's pretty easy, just signing up. There's our Telegram. You could see it. And you can see we post everything there. All these images, you can go back and, you can read our blog and stuff like that. Anyway, let me X out of that and let me go back to the stock that we're looking at. So they're looking at a stock right now, which was Rigetti. Anybody ever hear Rigetti? That's the stock symbol. It's RGTI. Okay. So Rigetti, you could see here, had a really big support level. It went from like $9 all the way down to about almost $6, started going back up, came back down, but it had a huge spike right here. Huge spike. That was right around 9:30 this morning, right? Does everybody see that? Huge spike. I mean, you do the math. The stock literally ran 720. And right now it's trading at 880, right? Minus 880. It's about $1.60. If you times that by 1,000 shares, that's about a $1,600 profit. That's not bad for a day, right? Not bad. What does that come out to be? 1,600 times, shoot, you know what? That's a lot. Let's say we just got half of it, right? Say we got half. 800 times 5. Well, 800 times 5 equals 4,000 times 52 weeks. Talk about $200,000 salary. Okay. Forget about you make it just half. Now, the question is, why did the stock go up at 720? Does anybody know? Why did it go up to 720? It bounced. Scott, you're still in it? Okay. There we go. RGTI. Do you know where to get out? I'm just going to bring up here in something called level 4. You're in the options. Okay. Hold on one second. I got to go back a little bit further. All right. Now, how does stock swap and go down, everybody? How does stock swap and go down? Buyers and sellers, right? Okay. So let me show you level 4. Okay. This is level 4 right here, and you'll all get access to it. This is how we find our stocks. Let me get my crayon. So here is NASDAQ book viewer. Here's level 3, the current order book. Okay. And you'll see there's a lot of numbers, right? So the way level 4 works is that it will highlight the biggest orders on a heat map. And you could see the biggest sellers out here at 10. The next biggest sellers right around here, around 9. Those big buyers down here at 7 and 6, right? And you could see here, this is 9:30 in the morning. And these orders showed up. This is called program trading. Orders showed up right around here. So the stock, when it opened up, you see how this order showed up right here? That's about 163,000 shares, right? Do you see any sellers out there up until about 10 o'clock? Then all of a sudden, these people started showing up, right? All of a sudden, these people started showing up, right? And once they started showing up, you see how it stopped right around this time frame, which is like around 10 o'clock? Big move, huge move, right? But now all of a sudden, it's starting to hit a little kryptonite, okay? The real kryptonite is right around 10. But you start seeing that like, wow, stock went from 7 close to $9. How is that even? How would I have not known that? Or how would I have prepared for that? Well, you could see now the right of the chart. Let me do another one for you. Let's do NVIDIA. All right, NVIDIA is a good one. All right, so here's NVIDIA. So getting back to the NVIDIA that I showed you last time, look at all these. Here's 930. And look when program trading kicked in. All at these lines. A lot of them right here. Okay. Started. And all of a sudden, right around 112, it started going up. Down to stocks at 115. Right. See that right there? There's no one here up until around this price, around 120. But you see the biggest seller, 1.3 million shares at 110. Right. Now, the thing is this. Did you need an indicator to tell you that? Did you need to look at a chart to tell you that? Who do you trust more? The 1.3 million share buyer or some Chankin, whatever that guy is on TV? Would you trust more? So these are the things that we look at when it comes to trading. I'm going to do one more. I got another one here. Let me bring up Tesla. Let's look at Tesla right here. So Tesla, if you look here on the chart, has been doing. Hold on. Did I just X out of it? Oops. I just X out of it. Hold on. Let me bring it back up. There we go. Open screen. Let me just bring up a little easier one here. All right. Tesla. So you see Tesla right here. Let me blow up the big chart right here. And you could see clear as day. Look at all this resistance levels right here, right? Big, big resistance, big, big resistance, big, big resistance. Well, look where we are right now. Stock went from 480 all the way down to here. Okay. Now, how do we know that that resistance is going to make the new support? Well, you got to see where the orders are. And where the orders are right here. Look at all of them stacked up right now. 90,000, 70,000, 193,000, 283,000, right? Look at the difference in gap right here. This number is 300. This number right here is 50. It's like a $50 move right here. Why is this the gap so big? Well, we just not only see it on a long term, but now we see the future out there. Okay. Now, did I lose anybody? Did I lose anyone? I love doing this. This is awesome. I love educating people and they've seen things that like, wow, that kind of makes sense. So let me bring this back up here. And I mean, we'll see things like this. I mean, look at this stock right here. Look at this red line. 100,000, 120,000, 140,000. What do you think is going to happen when the stock goes from 450? You think it's going to hit and bounce down $4? You know what I'm saying? You ever own a stock, it goes down. How many times have you people have bought a stock and as soon as you bought it, it goes down? And how many times when you sell it, it finally goes up? You know, did you see what was out there? Now, who here would like to see more and be part of this? All right. So this is what I'm going to do. Okay. Like I promised you, we got a lot of great presenters. We got Larry Gaines that's coming up next. You know, look forward to hearing what he has to say. You got great presenters. So we want you all to kind of sample all of what we do here. So this is what we're going to do. Okay. After you're done today, I want to invite all of you guys to come and, when you watch all the videos and stuff, to come and join the trading room. And I'll show you real time, level 3, level 4, how to find these stocks, everything. Now, if you have not subscribed to our YouTube channel, our Instagram, our TikTok, here's your chance. We'll give you the links. Those are the links right there. Just click on them. Just make sure you like us, friend us, and ring the bell, because whenever we go live, you'll get the alert. So if you get time right now, just click on that. All right. Also, to give you a little history about Cyber Trading University, we are actually endorsed by almost every single brokerage firm in the industry. Companies like Metastock, Charles Schwab, TradeStation. We showcase them in our trading room. Tasty Works. I just had Tom Sosnoff, the founder of the company, all of them there. We also have a 5-star rating on Google. So if anyone here wants to look at our reviews, after 35 years, I think that's pretty good. We were also ranked #1 by ChatGTP in the industry of traders, and we're very proud of that too. But all of that stuff right there, you got to know if trading's for you or not. All right. So this is what we're looking to do. I'm asking for $9. Remember I told you NASDAQ book value costs 15. How about this? How about paying 9? Okay. Anyone here have a problem paying 9? I sell my book for $47 on Amazon. You know what? Instead of paying for it, you get it for free right now. Okay. This is everything you're going to get. All you need is take your cell phone, scan the QR code, or just click on that link that we just posted right there. It's $9. We're not going to charge any more or less. We're not going to put you on a payment plan or a subscription. If you don't want to continue with Cyber Trading University, you don't have to. But what we do in this trading course is we do live commentary. We're going to give you workshops. You're going to see people what they're buying and selling. You're going to see all this stuff, and it's all live. So we practice what we preach at Cyber Trading University. We got podcasts, just like we got Larry Gaines. He was on my podcast. Everyone here has been on my podcast. You get to watch them. You have full access to that, all for $9 that you're going to get. So you're going to get all this stuff right here, the workshops, the book, everything. And you know what? I'll give you $9 back at the end of the week. So if you feel like I'm wasting your time, the $9, all it does is it kind of just, I don't need the $9. The $9 just basically reads out to people. I feel like if you don't have no skin in the game, you're not going to take it seriously. And also another bonus I'm going to throw in there. If you do register, will give you a coaching class. I'll talk to you on the phone. And the reason why I do that is because at the end of the day, I want to make sure that if you have an issue, you want to make sure you want some questions to ask. Who's better than to ask the doctor himself? So that's basically what I do for you. So here you go, fellow traders. We got about 10 minutes until Larry Gaines comes on. So if anyone has any questions, I'd like to answer it. Other than that, go out there, start getting your class registered. And like I said, what I taught you in a week, imagine in 30, 40 minutes, imagine what you learn in a whole week, right? So before you actually go out there and start trading, you gotta listen what everyone here has to offer. Like I said, there are a lot of people in here that are gonna be doing speakings. They've taken courses. Eventually, build your own style. But it all starts here. It all starts understanding, lack of discipline, emotions. Let me go back to ChatGTP. All these things right here of why people fail: poor capital management, lack of strategy. But the one I love the most was this one. Learn from successful traders. Okay. That's where it comes in. Be part of a mentorship program. Be part of a community. These are the real reasons. If you love this job, this is how you make it successful. And by the way, fellow traders, if you can't afford a $9 or a $12 or $20 fee or a $100 fee, you really should not be trading. Okay. You should not be trading. Listen, I would love to go to one of you guys are talking about great restaurants. I'm a foodie myself, right? I'm a big foodie. You think I'm like, oh, I love that food. Oh, but then I look at the menu like $60 for a steak, but it's the best for a steak you ever had, but it's $60. Okay. Now, for some of you, did you ever pay $60 for a steak? Right? And some of you like, you treat yourself. I'm like, you know what? It was really good. The service was great. I treated myself. Yeah, could I bought it cheaper and made it at home? Yeah, of course I could. But you know what? I kind of learned a little bit what they did differently that I don't do at home. It wasn't just even having a good meal, but I experienced the what I was doing right and wrong. Maybe you buy their spices or whatever it is. Listen, this is how it starts. This is how it begins. All right, traders, I got to go. We got the next presenter that's going to be coming in. And, so here's your chance. Go out there, listen to all these presenters, listen what they have. If you can't stick around for the whole day, that's fine. We will have it recorded for all of you here to listen. And we'll make nice little, quick little shorts, the highlights of something. So before you actually maybe want to listen for them for 40 minutes, maybe you just want to hear the highlights, we got that done too. All right. Just a couple of shout outs really quick for some of you guys that registered. Al, I got your registration. Welcome aboard. Who else we got here? Frank, we got your registration. Welcome aboard. Look forward to teaching you. Who's this right here? William Gregor from North Carolina. Welcome aboard. All right. Thanks, Grant, for being here. Larry Grands, I see you here ready to go. Look forward to having you, Larry. All right, guys. Let's take a quick little break. We will be back in 5 minutes. Don't go anywhere. We got Larry Gaines. I look forward to having you're gonna have a great time listening to him. Great mentor, great educator, been around for 30 years. You definitely want to hear what he has to say because you're going to learn something. Because remember, you got to learn before you can earn. So don't go anywhere, everyone. We'll be right back. All right, traders, we're going to get started. I want to do a quick little intro for Larry Gaines. Thanks for sticking around. Hopefully everybody's enjoying the Cyber Expo. And thanks for everyone who had registered. And, look forward to having you all here all day. We got a great lineup of people that are going to be here. But I want to introduce our next speaker. Really look forward to having him. He's been on my podcast a few times. And one of the big things I liked about him is he's going to give you a very, very good, you know, perspective of what he does and how he trades and his style. Very similar to mine, just trades a little bit different as in different markets. So Larry Gaines, just tell you a little bit about him. He's the founder and CEO of Power Cycle Trading. He's basically been doing this for over 30 years, just like me. He focused on trading at a brokerage commodities firm and financial markets. Started trading crude oil back in the 80s in Houston and Singapore. He became very, very well known as one of the top international oil trading firms that he worked for. I think it was EVP, something like that. I think about it right. Managed global trading for over 10 years in Bermuda. So beautiful area, by the way. I love Bermuda. Traded billions in oil, Forex, futures, and options. Pioneered the OTC crude, back in the option trading market. So he really has a very good experience of what happened in the past and what to predict that goes in the future. He basically consults, now for hedge funds. He launched a OTC crude oil options brokerage firm back in 2009. Now he trades more options and futures, teaches others how to use his power cycle trading. He also had developed basically a price cycle trading system for options, which he's going to talk about, stocks, ETFs, futures, and Forex. And now, after all these years, he's living a beautiful, happy life down in Texas Hill Country with his wife, his lab, and his 2 college-old sons. So, like us all, we work really hard, do what we have to do, get the experience, and then just take the simple life and then just surround ourselves with great traders, great mentors, and love teaching other people the same kind of lifestyle. So, Larry, thanks for being here. We look forward to listening to you and hear what you have to say. I know everyone also is too. Everyone here also is looking forward to it. Stage is all yours, buddy.
Thank you so much for having me here, Fausto.
Thanks for coming.
Let me get my screen here. Hold on. Okay. Let me pull it up. Here we go. Can everybody see my screen? All right. Let me, one more second here. Let me get the chat up here. 1 second here. All right, think I'm good to go. One more thing I'm trying to adjust here. All right, well, again, thank you so much for having me here. And what I'm going to dive in today is how to trade uncertain markets using some really high reward, high return option strategies, the butterfly and long condor. So I would definitely say we're in some uncertainty, right? I mean, this is about as extreme uncertain as you can get. I mean, just we don't know from one day to the next what's going to go on. So when that's the case, we need to adapt our trading, and one way to do it is with a couple of different option strategies I'm going to show you here today, and they're super cool and super low risk, but super high return as well. So the following presentation today is purely for educational purposes. Any stocks, options, or ETFs mentioned does not constitute advice and should not be construed as a recommendation. Now, again, yeah, I've been trading options now for over 30 years, and I have to pinch myself when I think about that. But the thing I found that to be the most valuable go-to option strategies that can literally help any trader or even investors out there, and especially when we get into extreme uncertainty or uncertain market times like we're currently in now. So the two kind of go-to strategies I tend to fall back on will be what we call the option butterfly spread, and then the other one is called the long condor spread, which we'll talk about these two in depth. So they're what I kind of call my trading secret weapon. So the huge advantage that you get from these two strategies is their unique option framework that is designed to take advantage of both time decay and volatility. Now, these are the two main option pricing components. When we get down to pricing the value of an option, it comes down to that time decay and then volatility. So, once you have that, then you can use these two strategies in any type of market environment, which makes them really a favorite trading strategy, for these types of, uncertain times. So it just comes down to knowing just, when to use them, how to use them, and how to set up the trade. So because they're structured to require only a very small amount of your, hard-earned capital, you've got potential for trading returns that can be very explosive, kind of like lightning in a bottle. So I remember when I was trading, first starting out my trading career, back in the mid 80s, I was working for a company called Coastal Corporation, and the guy that was the head of the whole organization as far as all the trading, he would get really excited when you have a really great trade, and he'd say, "This is so fantastic! I'd like to bottle it up like lightning in a bottle." So I've always remembered that expression. And these types of strategies can be like lightning in a bottle when you get them get them correct. So the butterfly and condor, they can work no matter what the markets are doing. They can work for you in an uptrend, when you're trending up or down or sideways market environment. Really helps to take the unsettling guesswork out of your trading, eliminates the stress of having to be perfect on a stock or ETF or what it could be a futures, whatever market direction or overall market. Really helps to eliminate the time decay, the expense that we get when we are encountering long decaying options, which if you trade options and you go long, you're going to experience that time decay. So this is one thing that I love to do with these spreads, is to eliminate that time decay. So we have what we call positive theta. Now, these can also be structured for very, very low cost, low capital at risk trades. And that's what's so important when we get into high volatility, uncertain market conditions. We want to reduce our capital at risk. But these two strategies will reduce your risk, but you still have potential for very high returns on that risk. So potentially giving you 10 to 1 or higher. We're going to look at a couple trades here where we actually got about 18 to 1. So 18, 1900% return. So these are possible types of trades that you can get with these strategies. Now, the butterfly and the long condor, they can be used for hedging when you screw something up, and that's going to happen, So, and especially in a market like this, when you have a fast-moving market, positions going against you, and you want to try to hedge it, these become what I call a fast way to cover your, pronto when that position starts to move against you. And I've literally found no other hedging strategy that comes close to this kind of strategy to incorporate for your trading to make hedges really quick. So by constructing the butterfly or the long condor around a strike that is under pressure from, say, another core trade you have on, maybe you have a credit spread on, or maybe you had a debit spread on. So we can quickly not only neutralize that risk, but we can lower that risk by doing either a butterfly defense or a condor defense around that. And I had one of my members, Pam, she said, "I wish I'd known how to do this hedging before I lost so much money doing credit spreads." So that is so true. If you've ever done credit spreads, or if you're doing credit spreads, you know the pain of it when the market starts to go back through your short strike. So we can hedge that out really quick with this kind of strategy. So that's a really big plus. Now, the trade construction is very kind of simplistic when you really break it apart. So this is an example of like a call debit spread. Okay, so if you're say long a call here, and the call price here is 10.10. All right, so we're long that call, and there were short a call against it up here at that 10.20. Okay, so that would be a call debit spread. So in this example, we would be long, our cost of the trade would be a debit cost of $300. Now the spread width is 10.10 and 10.20, so that's a $10 wide spread, right? And then remember, one option contract is equivalent to 100 shares. So that would be equivalent of a spread, the width of the spread of $1,000. So we've got a $1,000 wide spread. The cost of the trade is 300. Okay, so that would be your max risk with a debit spread, which is not bad. And then the profit is the difference between that of 700. So we could risk, 300 to make 700. So really nice, what we call positive risk ratio. But we could actually lower that risk quite a bit if we wanted. And all we'd have to do is we could convert this to a butterfly by selling a bear call credit spread with the same spread width, or we can do different spread widths. We can do all kinds of different adjustments and things, but this would be an example of selling a credit spread against it with that short strike, the 10-10 or 10-20, and then long the 10-30. So we're not, if it goes straight up, we're capped. All right. So if we're doing this $10 wide spread or $1,000 wide spread, the premium we brought in on this example would be $200. And so the potential profit is that premium brought in, but look at the risk. The risk is 800. So this is what we call a negative risk ratio. We are actually, risking $800 to make 200. So you're like scratching your head. Why would I ever do that? But anyway, we'll go into it. But by doing this hedge or this credit spread and combining that with that debit spread, now we've reduced the risk, not only neutralized it, but we've knocked the risk down to $100. All right. So we had that call debit spread, long the call, short the call, then we added the call credit spread. And now we've reduced our risk. We've only had $100 of risk. Okay, so it's still a $10 wide spread on each side or $1,000. So we've got that spread width of 1,000. The risk now is only 100. So we have potential to make $900 if at expiration we're at the top. We call this the tent, the top of the tent. That would be $900 profit or a 900% return, or basically risking 100 bucks. So just a fantastic way. Now we have all types of different butterfly structures too, which I'll go into and talk about here in a minute. But that's the kind of the core look of a butterfly. Now, when we get down to what we call the long condor, this is kind of what I refer to as the cousin of the butterfly. So instead of sharing the same short strike, as a call debit spread or a put debit spread and having that short strike here, we can widen the profit zone out to give us a bigger zone of profit. So in this example, this would be, say, we did a long call condor. So we're long a call, short a call, short a call, and then long call credit spread further out. So we've got this wider profit zone. Now we can do these with either calls or puts, just depending on the market direction. That's how we can do our directional risk. So these are totally different than what you may have done in the past or seen in the past of an iron condor. So the iron condor is just two credit spreads together. You're short a call credit spread, and then you're short a bull put credit spread. Okay. In an iron condor, your total profit is just your premium received. So it still has a negative risk ratio. So you may have, say, brought in maybe you brought in $100 credit and your spread width is $300, so you're going to have a risk of $200 to make 100. So that's a negative risk ratio even on that. So totally different animal with the condor, the long call condor, or we can do it with puts. So those are the two main structures and how they work. Now, the core concept that really make the butterfly and long condor dynamic is when we get down to the option pricing components. And so what it comes down to is really to understand exactly how option pricing works and the concept of time decay, or what we refer to as the theta, and how it has an impact on the price of your option. That combined with what we call the implied volatility are the two main option pricing components. So let's take a look here first at time decay and kind of get an idea of what that is so you understand it if you're not, knowing what it is in the past. So what theta tells us, this is the kind of the option Greek theta, which tells us how much an option price is going to go down over time. So this is the rate of time decay of your stock option. And by expiration, your theta is going to go to zero. So it really accelerates when you get closer and closer to expiration. And again, at the end of the day, it goes to zero along with your implied volatility, which are the two main option pricing components. So here's an example. So this is let's say you did a butterfly here, and this is on the company XYZ, and it's trading at $45, and you're looking for a directional move, just a small move in this example to the downside to $43. All right, so we could do a targeted trade, what I call a targeted trade. So when I do butterflies or any trade, I have a price target. If we're doing something for the upside, I'll have a target for a potential upside or a target for the downside, and that's what I'm going to trade to. Now, it's especially important when you do a butterfly because in a butterfly, we're going to construct what we call the body of the butterfly at our target that we're looking for, the profit target. So in this example, we're looking for a downside move to 43. All right, so could go out and I could buy that March 44 put, pay $2.38. That'd be your debit cost or $238, and then sell against it the 43 put, and then sell another 43 put, and then buy below it the 42 put. So now I've got what we call a put butterfly, which is a dollar wide. So 44, 43, 43, 42, that's a dollar wide spread or $100. Now, you can see the cost of your trade would be your debit cost of 238 plus your debit cost here of that long 42 March put of $1.06, then less your credit received from selling the body of the butterfly there, $167, and then times 100. So that gives you, as an option contract. So your cost of this trade, your spread cost on this butterfly would be $10. So that'd be the maximum loss on the trade. Now, then your profit, you just, like take that middle strike. You can see here 43, less your lower strike of 42, less your debit cost of 10 cents. And that gives you your potential profit in this example of 90 cents times 100 to make an option contract. So theoretically or potentially, you can make $90 on your risk of 10 on this trade. So you're risking a dollar to make nine. So that's a 900% return. So that's what's so great about these two type strategies, the butterfly and the condor. We can keep our risk super, super low. So you can see what a great advantage that is when we're in a market environment or environment like we currently are, where we've got higher implied volatility or higher volatility in general, and we have all this uncertainty. So we want to kind of really reduce that risk, but we still have to, make money and pay our bills if we're traders or investors. And so we can do this with these two strategies. So that's what's really exciting about these two types of strategies when you add these to your trading portfolio. Now let's take a look at how you choose the best butterfly or long condor strategy for your trading goals. Okay. So, one major, goal, in my opinion, for every trader should be to select trades that are going to be based on what's going to provide you the most consistent positive returns with very low defined risk and not always the greatest, return. So, in trading, if you're going to stay in the game, you want to just kind of what I call chip away. You're just going to hit singles and doubles, singles and doubles. And occasionally you're going to hit that big home run, right? And then your equity curve is going to take that nice little spike up. But what tends to wash out traders, especially when they're just starting out, is you're taking big swings at the fence, looking for the big moves, and then you might get one or two, if you're lucky, and then you're going to have a couple big ones that could wipe you out. So what you want to do is have a kind of more smooth equity curve, right? Going from the left to the right, and not these big, huge drawdowns. So with these two types of strategies added to your portfolio or whatever, or just these two alone, you can have that smaller, that slower, that nice smooth equity curve because you're not going to have those big, huge losers. All right. But with these two strategies, occasionally you're going to hit the home run and that's going to spike your returns up. And then you just keep gradually chipping away. And now one of the best ways then to achieve this is then being aware of what the different option strategies are out there available to you, then understand how they work, and then select the one that's going to be best suited for your market environment, your trading, your trading style, and your risk profile. So, everybody here today, is going to have a different kind of capital margin or capital account that they're trading. John might have, a $10,000 or 5,000 account, and Barbara could have 100,000 or she $1 million trading account. So it's going to make a difference in how you trade, your risk profile of, how much risk you'd like to take. And that's another thing. A lot of traders, some traders are more, they like risk more than others. So these are things that are going to go into your kind of calculus of how you want to trade. But these two strategies you'll find are just a great one to add, and these can be done for any kind of futures contract. I remember back when I started a brokerage over-the-counter crude oil brokerage company. We did a 25,000 contract butterfly set up for like a hedge fund. Okay, so you can do 25,000 or you can do one. So it's a great for retail traders like ourselves. Super low risk way to trade. Now, when we look at the butterfly strategies, I call this kind of the butterfly family because there are a lot of different variations of a butterfly. So we can do long call butterflies or we could do a put butterfly. We can do what we call a broken wing butterfly using either calls or puts, structured for movement up or down. And we can do what I call the ninja, which is your unbalanced or ratio butterfly. There's the iron butterfly, and then there's another really cool structure, what we call the lotto butterfly that we'll look at. And then you have a whole nother kind of category, which we call hedging, okay? And these are defense strategies using either the butterfly or the long condor. And then we've got that what I call the cousin long condor. So if you go back in history, you can look at butterflies and or options in general. Options were created for hedging. Okay, so back when they the agricultural products and bonds, they created the options, and those were just to hedge the underlying securities. So a derivative. Now, over the course of the trading, they become very popular for speculating. But remember, the key thing with options is really for hedging, and that's what's really great with these types of strategies. We can really quickly hedge a position to not only neutralize it, but to reduce the capital that we have at risk, which comes in real handy when you're in a crazy market like we're in now. So let's take a look at a few trading ideas and review a couple trades here so you can get a better example of what these look like. Now, the other thing when you're doing a butterfly, we can adjust our risk and our profit based on the wingspan of the butterfly. So if you're a butterfly collector out there, probably the easier way to catch a butterfly is with a really wide net, right? So that's the same thing with the butterfly. If we want to get a really bigger profit zone, we can just widen out the wings of the butterfly. Now, if we want to really tighten up our risk, then we can narrow the wings of our butterfly. So we can really reduce the cost of the trade of the butterfly, by the wingspan, and we can increase the profit zone by the wingspan and the profit itself by that wingspan. So we're going to look at a number of different variations so you can get an idea. So the first one we'll look at is a narrow wing butterfly, and this would be on the SPY. These are great. ETFs are fantastic. We do a lot of butterflies on SPY, QQQ, the Russell IWM, or you can do the index options, or you can do futures. You can do it on anything that has liquidity and that's trading. All right, and that has options. So this would be a really narrow wing butterfly of a spread $10 wide or $100 wide spread. And this one will be an example on SPY. So here's the kind of the trade setup. This was when it was set up, it was trading at $267 with the expiration 2 days later. So these can be 1 or 2 days or 2 to 3 weeks out on the butterfly. Now the sweet spot for butterflies is typically about 6 to 8 to 10 days out. Okay, because there are a couple of reasons for that. Because you really get the big impact as you get closer to expiration because of the theta decay collapse and implied volatility, which we'll go through with these examples. So in this trade, I like to use Fibonacci a lot to map out what I call my targets. So from this swing high to low, we were looking at a kind of a target zone area here at that 618 retracement coming in around 273, 274. So you can see there was a lot of price action through there, and going back here, and there was a lot of option activity. So that was a good target for the butterfly. So the price target for this trade was going to be 273. So that becomes the body of the butterfly. And so went out and bought the 272 call, sold the 273 call against it, then sold the 273, bought the 274. So we have a $10 wide butterfly or $100 wide. Remember, one option contract is equivalent to 100 shares. So 10 cents or $10, and then the spread width is $100 spread width. So potential here is for $90 profit if it goes out at expiration at the top of the tent right there. So that's a 900% return, risking $1 to make 9. So that's a really good positive risk ratio. Now, in this example, we made $70 per spread, so that's a 700% return. So you can see these are realistic potential returns that you can gain from this type of strategy. And so here's kind of where it went out. So you can see this spread traded from 10 cents. Now it's going out at 80 cents when it was trading here at 273.08. So it's very close to the top of that butterfly tent. All right, trading at that 273, 273.08. So this went from 10 cents to 80 cents. And on 4 contracts, that's $280, okay? Or you're making $70 on that risk of 10. That's a 700% return. This was over a 2-day period. So you're getting the big advantage of that time decay. See, these two pricing components of your option is time and volatility. They both go to zero, and that's a big thing that's being sucked out, and that's what's giving you profit. A big part of your profit is the time that you're gaining from selling the sell side of the credit spread side and the implied volatility that you sell. So you get that volatility collapse and you get a super high return on your return on capital with a super small amount of capital at risk. So now the next one is typically what we do a lot more of, the wide wing butterflies. So these will provide you a wider profit zone by widening that butterfly out. Again, structured for defined risk, great for hedging. We use these for again, targeted directional swing trades. So we're picking a target either up or down, and that's what we're going to target for the butterfly, either with calls or puts butterfly. Great for what we call pinning trades. A pinning trade is where you get at expiration, the price goes out at a certain strike price and expires at a certain strike price. That's what we call a pin. These are really fantastic, a lot of fun as well. Great for, again, high volatility, uncertain markets like we're in now. Also really great for trading high price stocks. So, back when stocks, you have Amazon when it's trading over close to $2,000, and you've got Netflix, up there over 900. You've got certain stocks that are very expensive, and they kind of, changes the game, so you can't participate because maybe you don't have enough capital account. But with the butterfly condors, we can trade high price stocks because they're so cheap by the option strategy that we use, which we'll see a couple examples. Trade duration 1 to 2 weeks out, is kind of the time frame that we'll look at. Again, positive theta, no time decay. We don't have to worry about decaying options. We can get returns on our capital of 2 to 1, up to 20 to 1. Are returns that you can definitely achieve with these type strategies. So here's an example of a short QQQ, okay? This was a short trade setup using a wide wing put butterfly, $10 wide, or that would be $1,000 wide spread. All right, so we were, trading right about here. Here's the trading at 314.60 right here. Okay, and it started to break down. We had our momentum indicators. What I like to use is what I call cycle reversal here. We were starting to break down here, and so we were going to target down to this area down around 304. There was this price activity down here, some Fibonacci levels coming in close to that. So we were targeting this area here. So set this up with a put butterfly, okay, $10 wide. So went out and this trade set up. Let me show you here. We're again targeting the 304 is going to be the price target. And this is what I use. We use what we call the price target analysis, which, if you ever take my courses, you'll see what that is. But targeting 304 based on Fibonacci, price action resistance, things like that. Unusual option activity go into that. So we bought the 314. It was trading here at 314.60. Bought the 314 put, sold the 304. That's our target. Sold the 304 again, bought the 294. So it's a $10 wide spread, right? So we had this wide wing butterfly, $10 wide. The cost of the trade, our max risk was $2.10 on this trade. So if we were totally wrong, we'd lose $210. Now, if we nailed it perfect, we had a $1,000 wide spread, less that cost. If we nailed it perfect, we'd have a $790 price per spread profit, a 376% return. But if it went out in here, we still have a big return. So in this example, we're risking $1 to make $3.76 on this butterfly structure. And so here's where it went out, taking profit here on the 26th, and it was trading now at 306.17. So, it was when we started the trade setup, it was up there around 314. So now it's trading at 306. So the trade went from $2.10 was your debit cost here, your max at risk, up to 782. That spread blew out to. So that's a $572 profit on your risk of 210. That's a 272% return. versus if you were just, doing the shares and you would have made 3.6% return gain. So again, you're getting that advantage of time decay, volatility collapse, very low defined risk, high return on that trade. So going out right there. So, that wasn't max profit, but close enough. You've got a big, huge profit zone in there for that trade. All right. So that's a beautiful kind of trade example of a put butterfly wide wing on that. Now, this is another good one example that I always like to show because this one will show you a number of different benefits from the butterfly. So number one, this was back when Amazon was really high priced and before it had a split. So we could, number one, trade really high priced stocks with super low risk. We can get a great, fantastic return on that low risk. We're going to have positive data, but also you're going to see within one day, we increase the profit and the return on this trade by 400% or four times. Okay. In the morning, it was at one price. In the afternoon, it was four times more profit just based on volatility collapse and the time decay component of the butterfly. So this again, this was back when Amazon was trading at, in this example, over $1,782. So for example, one option contract is equivalent to 100 shares. So if you were to go out and at this point, buy Amazon 100 shares, that would cost you over $178,000, right? That's a lot of money and a lot of risk. Now, so we were doing this with a butterfly and we were looking for a target of 1830. So we were looking at, this was a moving average support. It was just bouncing around that moving average. And we're looking at it to finally start moving up based on momentum that we're measuring. And we were looking for this price point target based on Fibonacci right around here, an option activity of 1830. So this was going to be the target for the trade. So that was going to be our butterfly target, or the butt that would be the body. So, again, if you'd gone out and you were going to trade Amazon 100 shares, you're going to be out of pocket $178,000. But in this example, if you'd done the shares, you would have made, and you went to 1830, you would have made $48 per share. So you'd made that much money. But look at the return, 2.69% return, but your huge potential at risk over 178,000. Now with this trade, we did the butterfly, we bought the 1820, sold the 1830 call, 1830, sold the bought the 1840. So we had this wide butterfly, $10 wider, $1,000. Now look at the cost of this trade. It was 80 cents. So that's $80 per butterfly contract. And the potential return is the difference. See, so $920. So $1,000 wide spread less our cost of the trade, $80. So we have potential to make 920. If it goes out at the top of the tent, that'd be 1,150% return. So risking a dollar to make 11 and a half. Not bad. Now, even if it goes out in here, we still have potential for big return, but the bigger thing is your risk, super low risk. I always look at the risk first. So this is the other great benefit. So here you can see in the morning, this was about 9:30, 10 a.m. Central in the morning. It was trading right here, right there at 1836. Okay. And at that point, this was trading, it was 80 cents or 80 bucks. It had gone to 230. All right, so here then you're up $150 per spread. Okay, so you've got a profit at that point of $150, and then that's on your risk of 80. All right, so your return right on capital right there is 187%. Now I'm always happy with 187% return, right? But that's there. But see all that area in there? That's all potential profit that's left in this trade from the time value component and the implied volatility component, which at expiration, those two go to zero, which could be money and profit put right in your pocket. So here's this trade about 3-4 hours later in the afternoon. So this is the same day, but this is in the afternoon. So now the trade has blown out and it's gone from 80 cents or 80 bucks. Now it's trading up to $200 or $695 on that spread. So this trade is up now $614 on that spread, or a 769% return, versus if you just did the stock, you're up 2.69% return. So in the morning, this trade was, you had a profit of 150. That was 189% return. In the afternoon, now we had a profit of $614, right? And we have a potential, or not a potential, but we have that return is up here to over 769%. So this thing went up 4 times in the same time, same part of the day because of the structure of the volatility goes to zero, time goes to zero. We're sucking out all that profit in there from the credit spread side of the trade. So that is the beauty of that. All right, so that's a fantastic trade setup. Now, the next one is what we call the long call condor. So this is one we did just recently. This was on NVIDIA. And so NVIDIA was trading at 133.98, and we were looking for a upside move based on Fibonacci price target analysis that we do. And so we did this low risk trade doing the long call condor to keep our risk low because NVIDIA has been just flying all over the place. So we wanted that risk super low. So in this trade, we went basically long the 134 call, short the 137 call. So that would be your call debit spread side. And then we sold against it. We can leg in, leg out of this or do it all at once. This one we did all at once. And then we did the 143, 146 call credit spread like that. So we had this long call condor. All that area in there is your profit zone. So the cost of this trade was $100. So it's a $3 wide spread. Okay. So 134, 137, $3 there, $3 on the other side. And so the cost of the trade is $100. So that was our risk. So potential profit, if it goes out in here, is $200. So 200% return. So kept the risk super low plus a positive data trade. So that was a trade setup that we got. And then the next thing is just to get rid of that is see what happens. So this was, what I like to do is try to cap, if I see an upside resistance point, then I use that as kind of the upside cap. And that's kind of what we saw. We saw this resistance area up here. So we had that trade capped in here where we had the credit spread up in here and the debit spread in here. So we had this zone in here that we were trading. So this worked out perfect. Went out right there in that kind of zone that we thought was going to be kind of the area. This was right before its earnings the week after, which we thought it would be capped, and it was. So it ended up going out right here at expiration. So on the 21st, then it was trading here at 139.57, and so the trade went from $1, debit costs are 100, now is up to 289, and that profit then was $189 per spread or 189% return. So right there, took it off a little bit before, but that was the trade setup, and that was your profit. And that's another beautiful trade setup for that. Now, the next thing is these are really a lot of fun, and these are what we call the lotto tickets. So this is a way that you can play super low risk return type of low risk trades for huge, massive, big returns. So, but it's kind of a lotto trade. Okay, it's something that we want to keep that risk low, and the trade is going to be based on the debit paid is going to be our risk. So we're just going to put that up as the bet. And if you either win or you lose, it's kind of binary. So this is from one of my members, Bill. He said, we'll do these occasionally when we see a good setup. But Bill said the butterfly strategy in general is one of my favorites because it's the big winners that eventually make the difference in any trading account with all the so-called low-risk option strategies being sold to the public, an account without the potential to hit the big one once in a while not betting the farm or the ranch is a slow ride up a long hill. But he said this is as easy as ABC, and that's the truth of it. So here's a really cool lotto called Butterfly that we did on Tesla. And these are all, I've got alert service, and these were trades that were sent out to our alert members. And this was one that we did back. This was just an amazing trade. We did this back in February. This was not this year, but last year. But it's just such an incredible trade. So we were looking for, it was trading right here. So it was trading at 189.30, not 35. And we were looking for a target going into expiration at $200. Now, there's a lot of different things that I look at, and if you stick around, I've got a really great course that I'll give you access to if you're interested. That'll show you or teach you how to do these types of trades. So we were targeting this 200 based on a lot of different things I look at for option expiration, open interest, things like that. So we were targeting 200. So that was going to be the target. All right. And so then we set the trade up and look at the cost of this trade. Now, this is again alert trade that we sent out. So we did this trade. So we're targeting that 200. So it was trading here at 189.35. So went out and bought the 197.5 call, sold the 200 call, sold the 200 call, bought the 202.5 call. So this is a $250 wide spread. Look at the trade cost, 12 cents. Debit cost of 12 cents. That would be 12 bucks. So there's your potential profit is $238. That would be a 1,983% return. So that is on a pin trade for Tesla. And sure enough, this was just it went out. Now we'll scale out. You're not going to do the whole trade and wait for the bidder end because obviously it could go back and forth, but we'll scale out. But at the bidder end here, the last part of the trade, it was pinning right at $200 at expiration. Okay, so this went from 12 bucks to the max profit at expiration of 250, and there's your 1,983% return over an 8-day period. So amazing potential there. Now here's another one, the one that we did. This was on GLD, another pinning butterfly trade, alert trade sent out to our members. And this was, on the 8th, it was trading at 222.85, and we were looking for an upside target of 230 for this. So we targeted this 230 area up here and right here. So we went into the trade right there. Okay, we had what we call a stock reversal. Our indicators are saying go long, and we're targeting this area here with the butterfly. So went out there and bought the 227 call, sold the 230. That's our target. Sold the 230, bought the 233. So $3 wide spread. Okay, so there's your spread width, $3 wide. The cost of this trade was 29 cents. Not as good as Tesla, but still not bad. And so that was our max risk. Win or lose, we'd lose 29 bucks was it, but we had a potential to make $271. That would be a 934% return, if we hit that, or if we hit anything in between, it's still a great return. So this one was pretty close, not perfect, but close enough for government work. So it went out trading right here where we had the profit take 230.47. So this went from 29 cents or $29 to $2.32. The spread blew to there. So now we were up $203 on this spread right here on our cost or our capital at risk of 29. So that's a 700% return in an 8-day period. So like Bill said, it's just you risk a little bit to really give yourself that extra spike, and then you're kind of continue on. So you're chipping away, and then you have that big one that hits the home run. So these are things that you can add to your portfolio that can really make a difference. All right, so that's another really cool one. Now, if you'd like to, learn how to master these high reward, low risk option strategies that can literally work in any market environment, then I've got a really good package for you here today. If you'd like to take advantage of it, I think you'll really get a lot out of it. So this is my Butterfly Long Condor Option Masters course that I did live, and then this is the on-demand part of it. So this is if you want to take advantage of it, use this link here. And think here, let me put that in. So you should be able just to click on that, powercycletrading.com. Click on that, and that's going to pull up a drop down where you can sign up. So this is a course here. So it's powercycletrading.com/trade one. So this is going to be $197. You'll get all this good stuff. If you'd like to jump in to take this, let me just show you real quick. If you pull this up, this is my website if you want to go check this out. So powercycletrading.com. But if you come over here and in your payment, click on that powercycletrading.com/trade one that I just showed you. That'll pull up this drop down link here. I can put that in again here, and you'll see everything you'll get with this. Let me put that in. So put that in, or just click on it. You should be able to click on it, and then it'll pull up this link here. So for 197 bucks, you'll get the course and all of these great bonuses that I'll show you here. Plus, if you like my indicators that I use, this is a 5 study set package that I use. You can add that to the order as well. So that's what you can do there. Now, with this package, you're going to get the course, 6 hour plus course on just the butterfly long condor. I'll go through what that is. It's 197, but I'm also going to give you my as a bonus, my start trading options today, a really good, nice intermediate option course. You can go to my website. That's $197. I'm going to also give you a 30-day trial membership to my trading club. So I have a trading room that's open every day during the week from 9:30 Eastern to 10:30. So you can come into the trading room, see what we're doing. If you have any questions on any of your trades, come in and ask. That's $97 a month. But and that if you renew, it's 97. We have other packages, but this will be free as a bonus. We're going to also, you'll be invited to a follow-up Q&A, which will be kind of dedicated to the butterfly or anything that you want to ask. Then I'm also give you my option trading tutorial. This is another really good option guide and videos on option Greeks and things like that. And then another one, strategy manifesto, which gives you another 15 different option strategies that you might be interested to show you how those trades work. So a nice bonus package of over $700 there. So total course package volume or value is $1,135, and it's $197 for everybody here today. Now this is yours forever. You know, you'll have a login and you can always access it. So it's something that you're always going to have access to. And then again, just put in that link there. You should be able to uh, click on it and it'll pull that up. And so here's everything you're going to get with this package. You'll get my 6 hour recorded course broken down and easy to follow, 30-minute modules or less, kind of like a chapters of the book. You'll get the training manual of it, which is the PowerPoint. So it's a very detailed course with all kinds of great examples, trading library, all that stuff. So kind of what I call my step-by-step blueprint course for the butterfly condor trade. So it shows you how you can use it for your income, high reward type of trade setups, non-directional or directional. Great for hedging. A whole section on hedging in this course, which would be something that just is alone is worth the course value there. So there, when we get into the course, we've got part one. So start out with this course, going through the option Greeks that are vital for trading the butterfly long condor. So you understand the kind of the foundation of option pricing, how it works to make the butterfly long condor profitable. So it goes into, you know, how theta decay works and how that impacts these two strategies, how volatility works and volatility crush works for these two strategies, what that is, how that works. And then it goes into your pricing option, go through the example of, you know, time and volatility, how that makes the value of the option. So that you can kind of understand the flow of price and how that works when we're trading option, especially these two spreads. And then another big part of the course is using what I call my Fibonacci price target mapping and standard deviation kind of target mapping. So this is how we map out price targets for the body of the butterfly or the condor, either up or down. So it's based on this. So we'll go through that in the course, how that works, and you'll see you know examples of how that works to construct the targets for the butterfly or condor. And then part two, we get into all the different variations. We'll go through how, why, and when to use every different variation of a butterfly. So you'll learn, because then once you see these are with real trade examples, so then you can see, okay, yeah, I could use that in that kind of environment or whatever, or maybe no, I don't want to use that, but you're going to see every one, and then you can pick the one that you think's best for you. So we'll go through how the long call or put butterfly works, and these are with the trade examples. We'll go through the wide wing butterfly. We'll go through the broken wing butterfly. We'll go through that ratio butterfly, or what I call the ninja butterfly. We'll go through the broken wing ratio butterfly. We'll go through the iron butterfly, and we'll go through the lotto butterfly, the vacation butterfly, long condor. So if you've ever seen the movie Forrest Gump, it's like, Bubba Gump, that place, he likes shrimp, etouffee, boiled shrimp, grilled, whatever, it's all these different variations. So that's the beauty of the course. It takes you through every one, and then you can focus in on the one you like and just know the other variations if you're interested. So then go through what are the best time frames to use that will help you to capitalize, on the butterfly and the condor. And then, what should you use? Stocks, ETFs, index options, futures. Then how do you actually structure those trades where you get that 10 to 1 or greater returns? In that one example of $10 or even $12, you got a return of almost 2,000% or 20 to 1. And then how the option volatility crush works, theta decay works, for the butterfly. And then how to trade. This is a really big part and a fun part, actually, is how to trade the monthly option butterfly strategy for generating those big returns for pennies. So these are 12 times a year. You have that monthly expiration, and these are sometimes some of the best trades that you can get. And so then this boils down to then your penny trades, okay? How to set up a penny trade, with that price target analysis, then using the butterfly or condor to keep the risk low but have potential explosive returns on that risk. Okay. And so go through that, how that is done. And then go through the long condor. Okay. So how, why, and when would you use the long condor spread in your directional trading for that controlled risk and super high returns? So it takes you through the trading advantage of the condor. This is the strategy where you get 100 to 300% returns, very low capital risk, positive returns. And then part three is the hedging part of the course. So go through what I call the progressions of hedging, how that all the different variations of ways you hedge, and then go through how to use the butterfly and condor to hedge a core position. Very, very big part. And then how to use the butterfly long condor to defend a vertical debit spread or credit spread. Then goes through the checklist, step-by-step checklist of when to put them on, how, when to take them off, how to do your execution adjustments and manage the butterfly into expiration. Resource part of the course, what is exchange traded funds that are used, what's assignment risk, how that works, expiration risk, auto exercise, and then you'll get a trading library of over 58 pages of butterflies and long condors that you can go back and look at, which a lot of times that's a great way to learn is just looking at past trades. All right, so here was my member Pam. She said, excellent class, Larry, as usual, under promise, over deliver. Wish I'd known how to do this hedging before I lost so much money. Geez, So here are the bonuses you're going to get. And here, one more time, if you need, is the link. So use that link there. So you'll get the bonus one, start trading options today. And so this is going to go through and take you through the benefits of options versus stocks, insider tips of options, option basics you need to know, what mastering the difference between puts and calls, how option expiration works, and takes you through and teaches you three different strategies: the covered call. It teaches you another strategy, the covered call with the protective put, and then the vertical debit spread. So really nice kind of intermediate course to get you started. And so add that to your option trading library. So that's a free bonus part of the course. And then you're going to get a 30-day trial membership to my trading club. And with this membership, if you want to renew, you stay on to 97, but you're going to get it free. So 9:30 to 10:30 Monday through Friday Eastern. Do a daily video newsletter update. Trades are archived, so you can go back and look at them. Live weekly Q&A, which is recorded. Traders Education Vault, and everything on my website, you'll get a 60% discount with your members code. And so David said, best service ever. Been enjoying my daily sessions, making money to increase my retirement count. Seriously consider it. Truly rewarding education there. So that'll be a nice bonus for you as well. Bonus three is we'll do a follow-up Q&A, which will then be live and recorded. So you can come in and ask any questions on the butterfly or anything else that you want to, find out. Plus you're getting that 30-day trial membership. And then here's another really nice addition, how the pros use the Greeks. So this is a 60-page option guide with videos focused on the Greeks, delta, gamma, theta, how option pricing works, what we call the market maker secret, how standard deviation works, and then option delta and trade probability. So another really nice option class course there. And then not to one more thing that you're going to get is my 15 option strategy guide. So this is if you've been wondering a lot of these other different variations of strategies, like what is a back ratio spread, this will take you through the structure and how it works and when you would use it. what is a ladder spread? What is a calendar spread? What is a diagonal? What is a short straddle, long iron condor? So this will take you through and explain in those strategies. So pretty much this is to cover all the different variations and things that you might come into contact with over your trading, and I think you'll really enjoy it. And then the last thing you're going to get is my simple and brief option reference guide. You can print this out, put it on your desk. It's what is gamma, theta, things like that. So that's pretty much covers it. So hope you'll jump into it for 197. You're going to get some tremendous education, a lot of great additional bonuses as well. So that's kind of where we are. If you have any questions, feel free to fire away. I've got a little bit of time left here. Let me see if I see anything popping up. One thing that we did, I'll show you right now. We did a trade yesterday. I'll just kind of briefly go through it on Google. Okay, so we went long Google. All right, and then these are my trading indicators. And if you want to on that, if you do buy the course, you can buy these indicators at 195. But we went long Google, and then it started to fade. So we ended up hedging the trade and converted it to what we call a long call condor. So here's kind of what we have currently on the trade. So we started out with a debit spread, and then we adjusted this trade to the condor to reduce the risk. And so now I'll show you what we have on currently on this trade. Now, we could lose, but hopefully not. But if we do lose, we've reduced our risk down to $70. Okay. So we've got, for one spread, your risk is $70. That's it. Now you can see this currently actually is up about $25. Okay. And our risk is 70. Now, if this next week goes out in this zone here, settles in this zone here, this would be a profit of $180. All right, so you can see $180 profit on that risk of 70. That's what is that? That's a 257% return, right? So that's what you're looking at. So that's the beauty of it. We can keep our risk super low, and but we've got the potential to make $180. Our risk then is capped at 70. So that's a potential for a 257% return. All right, so that's kind of the things that you're able to do, and keeps that risk low. And when we're in a lot of uncertainty, that's exactly what we want to do with our trading, especially at trading at Power Cycle Trading. So wanted to point that out. And again, I want to say thank you everybody for being here, and Fausto for having me. And I hope you do great trades today, and good luck.
Larry, thank you so much for being here, and it's great having you on. And look, like I said before, we're gonna have you on again on a podcast. Big, great. People love it. Everyone take up on his offer. Like I said, very good deal and a lot of ed training. You could always learn something from somebody. A little here, a little there, actually pays for itself. But thanks for coming, Larry. Really appreciate it.
Thanks so much for having me here, Fausto. Have a great rest of your day.
You too. So we're gonna take we got about 3 minutes, everybody, and then we're going to bring our next speaker, which I'm looking forward to have, Vora. He'll be here from Trading Wins, and he's logged in right now. He'll be starting 2 minutes. So if you want to go hit the restroom or you want to start putting some orders in, go ahead and start doing that now, and we'll be right back. So as you guys are doing that, I'm going to go check out the market and see what's going on. You can see right here that the Dow is down again, 372 points after having a beautiful rally. Looks like everything that is going up has been trending down. We did talk about Amazon, the big support yesterday, around 200. I'm really looking forward to hear what Vince has to say. And you see, and once again, these people that we have close to over a century of education of traders that have been here. So it's not like any of us have not been involved or, seen something and something might click. Ask us, well, hey, what do you think of this? What do you think of that with your strategy, how it works? That's why we're here. You're some of the best minds in trading. And we're just looking forward to, basically have them talk, basically, and show you what they're thinking, because you got to get prepared. I mean, listen, you have a new president. He's making some major changes, and he's not somebody that just promised and got in office and forgot about people. He's actually executing a lot of these things, and it is affecting the market and global around the world too. If it's tariffs, if it's the Green New Deals, changing things around, it's definitely going to change a lot. But let me intro in really quick Vince Vora from Trading Wins, tell you a little bit about him, and he's going to take over. Don't want to take too much of his time. He's basically one of the head traders at Trade Wins, been doing this for over 30 years, another 30-year mentor, okay? Specialized in technical analysis with price action. That's his main goal. He also developed a very defined multiple trading system that he wants to share with you. He focuses on teaching traders how to improve their skills, which has a lot to do with psychology and preparing and game plan. He also has a trading range of how to keep things simple, where he wants to share with you. His strategy does apply towards stocks, options, futures, and Forex, and his system is designed to work in any market condition. So let me pass the mic over to you, Vince. Vince, thanks for being here on your busy schedule, and everyone's looking forward to hear a little bit more about your trading. All right.
Good morning, Fausto. Thanks for having me on. I really appreciate it. Looking forward to it.
Same here. Same here.
All right, I'm going to share my screen here, and there we go. Please confirm if someone can confirm that they can see.
All good.
Excellent. Thanks again, Fausto. Welcome, everybody. I'm happy to be here with you. I'm Vince Vora, the head trader here at Trading Wins. And today I'd like to share with you a system I've been trading with since 2019 now, which is our Victory system. Earlier in 2024, we came out with a second version. So Victory 2.0 is the latest version. And that's what I'd like to share with you today. That's me here, Vince Vora. I've been trading in this business, Fausto said over 30 years. It's been well over 30 years. It's been quite a journey, but so much fun. I have a passion for the markets, glued to charts day after day. And, when you stare at charts for that long, you pick up on a few things. And so along the way, not only do I want to share with you our Victory system, but a lot of little technical analysis tidbits that have served me well over the years. Before we get started, I do want to say that trading can be risky. So please don't go out and trade with real money until you're completely comfortable with the system that you're using. All right, that's it for the slides for me. I'm going to get right into the charts. I want to first start off by explaining what Victory 2.0 is and how it came about. And then I'm going to show you my approach. I take sort of a top-down approach. I start in the monthly time frame for my analysis and move it down. These days, I trade mostly on the daily time frame, but as Fausto said, this system can be used on any time frame, whether you're trading on a 1 minute, 3 minute chart, swing trading on a daily, or investing with a weekly and a monthly chart. It works on any market. So even crypto, it's just based strictly on technical analysis. I'm going to be showing you individual stocks, ETFs, indices, Forex, futures, whatever you like to trade. And before we release this, we did test this on markets, different markets around the world, the Nifty in India, Australia, UK, Canada, US, etc. Again, it's based strictly on technical analysis. And the main benefit behind the Victory system is that it was designed to identify a strong trend with strong momentum behind it. When you're trading with trend and momentum on your side, more than half the battle's won right off the start. So let me start by explaining what you're seeing here on the chart. This is a monthly chart of the SPY, the S&P 500 ETF. We will change time frames. We will change symbols. Please, as we go through this, type in whatever symbol you want to see in the chat. Ask me any question. As Fausto said, be selfish about this. You're here to learn. Ask us whatever questions that you want to know about trading, about the system, and type in whatever symbol you want to see, and I'll bring that up. So here's our victory system. Now, there are buy signals, there are sell signals, exits, these little TPs and little dots here, the ribbons down below. Let me explain everything here. Obviously, when the algorithm comes together, that it identifies a buying opportunity, it's going to pop up a little buy signal here. Once the trade triggers, every candle after that will be colored green as long as we're in a long trade. That is done intentionally. Reason being, we try to keep you disciplined and help you remain in a trade. A lot of times when you get into a trade, it starts going your way, you're feeling good, comfortable, and then you get a couple of red bars against you. You start doubting yourself. You start to wonder if you're going to give back your profits. And a lot of people end up getting out of the trade early, only to watch this thing continue going higher. And, and that messes with your mental state, right? Your psychology. So we thought if we colored everything green when we're in long trades, everything red when we're in short trades, that would just help you along the way. Now, the intention here is not to take every single symbol. Okay, so for example, these sell signals here, we would not be shorting here. Reason being, we're not in a downtrend. We don't have downward momentum, so we ignore these signals. One of the things that the victory system is very good at is helping you avoid those sideways markets, the consolidation periods, the chop. That's where most traders lose money. In something like this where we have a bit of a consolidation, right? Have a look at the price bars here. We're just kind of going sideways through a couple week period here. That's where, you get in, you get stopped out. You go long, you get stopped out. You go short, you get stopped out. And traders just get chopped up and give back all the profits that they made on a nice trade. So I'm going to give you the exact 8 checkpoint list that I use to qualify a signal. Okay, we'll do that in a second. But obviously, buys point to long trades, sells point to shorts. Now, sometimes you'll see the system go directly from a buy to a sell. So what I want you to remember is that any change in color means you exit the trade fully. Okay, so for example, if we were to go long here, you might also see a dot, a green dot. That means the same criteria that came together here for the buy has come together again. The only reason we don't list it as a buy is because we're already in a trade. So we're showing you another good entry point here to give you the opportunity to get in on a trade if you didn't get in on the first one, or if you're a little more aggressive, to add to your position if you see that. And during a consistent trend, sometimes you will see several dots appear. So you can add to that. And then if you see a TP, which stands for take profit, that's just a suggestion of where you might want to take some off the table, not close the trade, but take some profits off the table. If you ever see a change in color or see an exit flag, then you need to close that trade completely. That is the way I trade it. If you see a yellow bar, that means you should not be long, you should not be short. You should be waiting for the next proper signal. Okay? Now, down here below, we have ribbons, 2 of them. I'm going to switch to a daily time frame and show you that the ribbons that appear below here are for 2 higher time frames. So if I'm on the daily, it'll automatically populate weekly and monthly. What this is showing you is the color of the victory algorithm on those time frames. So without me switching to a weekly or a monthly chart, right, you can see here that on the daily time frame, we're in sell mode, we're in red. Weekly is also red, but monthly is still in green. Okay, so what we want when we're looking for a trade is to have everything aligned, all three time frames aligned. So if I was looking at taking this buy signal and the weekly and the monthly are both green, then I know I have a green light to go ahead with that, as long as it meets the other criteria that I will explain in a minute. All right. If I were to switch to a 5-minute time frame, what you're going to see here are the two higher time frames from there, a 15-minute and a 30-minute. Okay. So then if I was going to go short here, for example, I'd want to make sure that the 15-minute and the 30-minute were also trending lower. Okay. Very, very helpful. So at a quick glance, we see what the two higher time frames are doing, and we can make sure we're trading with the same trend on the medium, the short term, the medium, and the long term trend all together. That's what we want. One last feature is this table on the side. Now, this table, right now I have 10 rows. You can do any number you can choose by going into the settings. Here, let me show you the settings. This indicator is fully customizable. You will be able to turn on and off whatever signals you want, customize the table, etc. So you have up to 20 different rows that you can add to this, and you dictate that by here. So I can have 10, I can change that to 5, and this will, you'll see this table shrink down to 5, etc. So you can type in the symbols, and this will alert you on the right side here. It will alert you if there's a buy, a sell, an exit, whatever there is, a symbol on that particular market. Okay, so I like to use this for open positions. For example, if I have an open position on Meta, I put that in here, and that way I will be alerted to a sell or an exit immediately when that happens, without me having to pull up a chart of Meta and having to look at that. But for this presentation, I'm going to remove this table, and I'm going to remove the take profits just to clean it up a little. I like to keep my charts as clean and simple as possible. It's easier to read, it's easier to spot setups, etc. Okay. All right. So let me go through the trade criteria that I look at, and then I'll start going through some of the symbols that some of you have put in there. So again, what I like to do with this is take a top-down approach. So I start with the monthly chart, and I will go through the Dow Jones here, and you'll see currently, we're in along on the monthly, the S&P, the NASDAQ, and the Russell. Now the Russell has gone red. The other three are still green on the monthly time frame. So from there, I will work my way backwards, look at the weekly, and then go to the monthly, or sorry, the daily, where I take most of my trades. Okay, that's just a quick exercise just to kind of get an idea of what the overall markets are doing. Now, again, if I'm on the daily and I bring up a chart of the Dow here, I have the ribbons to tell me whether the weekly and the monthly are there. So I can do it off one time frame with the benefit of the ribbons. What I then do is I have a watch list called main ETFs. So what I have here are the ETFs for the Dow, the S&P, the NASDAQ, etc. But then I have the 12 different sectors for the market. So energy, right? Financials, technology, etc. And so what I do is I go through those, and if there is a new setup or a clear trend, so for example, on technology, we're deep in the red here on the daily and the weekly, but the monthly is not aligned yet. It's still green. So if we were to find a market like this where all three were aligned, there we go. Consumer staples, right? Has been trending higher, green on daily, green on weekly, green on monthly. Now what I would do is break that sector down and look at the components, the stocks that make up that sector, and that's where I would start my search for new trade setups. Okay, and I know that I'm looking for only longs, not shorts. Okay, just to give you an idea of my approach. Now, when it comes to trading, finding an actual setup, here's the criteria I look for. I'm going to put up the 8-point checklist. Here it is. I'm going to go through them for you, and then we're going to go through it on the chart with actual real examples. Okay? So first of all, I'm looking for a clean chart. What do I consider a clean chart? Well, Walmart is a very clean chart here, right? What you will notice when you're in a strong trend is that the price bars are all very similar in size from high to low. They're very consistent throughout, okay? If you find a period where more volatility is coming into the market, like we see right now here, you'll start to see those bars get bigger and bigger in size, bigger fluctuations from high to low on any given day, right? And the movement gets more sporadic. So let me go say to so Zoom, for example, right? Ignore the lines. These are lines we draw in when we meet with our members. We have a membership group that I'll tell you a bit about later. We meet 3 times a week on Zoom for an hour each time. And we review numerous charts and we mark them up and we leave those in for reference. So you may see these trend lines drawn in from chart to chart. But you'll notice that when things are trending strongly, again, the bars are consistent. When you see volatility, they start to get all over the place and you just start going back and forth. So that gives you an idea of the areas that you want to stay away from and compared to the areas that you want to take trades in. Okay. Now let's go back to Walmart and bring up that list again. The second point is we need a reason to trade. So we need a victory signal, either a buy or sell, etc. And then we need slope on the 20. One thing I didn't tell you is the blue line here is a simple period, is a 20 period simple moving average. That's it. Not weighted, not exponential. It's a simple period moving average. I use that for momentum. So what we want to see when we're thinking of going long is we want to see this line sloping upward. Okay. If we're taking a short, we want to see it sloping downward. If this line is flat like it is here, we do not want to take any of those signals. Okay, this is where you lose money. This is your chop. Using a 20 period simple moving average and looking at the flat nature of it will alert you to the fact that we are consolidating. And then you can draw a line across the highs, across the lows, and identify the actual channel and look for a breakout if you like. But we're in a consolidation mode. So all these buys and sells that you see in here, we do not want to take those. We want to take the signals with slope in the direction of the trade. That's a big part of this. Secondly, we want to identify the distance from the 20. So when we do get a signal, a buy, we don't want it to be away from the 20. We want it to be as close to the 20 as possible. Reason being, you'll notice that when it moves away, it tends to snap back. So the last thing we want to do is buy up here only to watch it go against us immediately. We'd rather buy near the 20 and have it go in our favor immediately. That makes it much easier for us to stay in a trade and manage the trade the way we should rather than getting nervous about it, getting in a hole and trying to figure out how we're going to get ourselves out of that hole. Okay? Now, we're looking for where the bar closes on that. So whether you're trading on a daily time frame or a 5-minute, you're looking at the bar that corresponds with that entry, be it a buy or a re-entry here, the dots. And when price closes near the high of the bar, and you can just look at the top half of the bar, right? As long as it closes there, it has a very high chance of following through. So on the particular setup, you want that bar to be close to the 20, but you also want the close to be in the top portion of that bar, and vice versa for a short. Okay? And then a few other things we look for are, we look to our left and we want to see blank space, right? If there was prior activity here, it might act as resistance. We want to avoid that. So the ideal situation for us is to trade signals that are near all-time highs, like this one was, this buy signal. When you look to your left and you see nothing but blank space, the stock has an easy road ahead, a nice, clean, wide open road for it to move. And if you have momentum behind you, meaning that slope on the 20, even better, right? It usually moves nicely in our favor. We also want to look at the ribbons here, right? We want to make sure that they're in line. The higher time frames are in line. And lastly, we want to look at the earnings date. Okay, when is the next earnings date? This, of course, only applies to individual stocks. If you're trading an ETF, you won't have to worry about that. If you're trading Bitcoin, you won't have to worry about that. But on individual stocks, we do want to know when the next earnings date is. We want to make sure that it's far enough away for us to be able to have time for this trade to work out. So the only way I'll take a trade is if the earnings date is more than 10 trading days away from where I am. Okay. So that is the checklist. If these setups meet that criteria, then what I'm looking for, so I'll use this one as an example. Okay. So we have a clean chart, right? We have a signal, a victory signal. We have slope on the 20 in the direction of the trade, right? We have the bar closing near the 20. We have the close on that bar in the top half of the bar. The ribbons are aligned. We look to our left, there's nothing but blank space, and the earnings date is far enough away. And then what I've been looking for is a trade 1 tick or 1 penny above the high of this bar. That's it. Once that happens on the very next day here, that's when I would get in. Okay. And now earnings in this example was pretty close by, but let's say it was further along the way. What I would do once we approach earnings is I would exit the day before earnings. I don't want to stay in with earnings. Earnings can cause a gap one way or the other. I've never been able to find a reliable method to determine which way that stock is going to gap after earnings. So I'm happy taking those profits the day before, and we go from there. Otherwise, if there is no earnings date around, you follow that until you get a change in color, okay? And which means you exit the full trade. If you catch a nice runner like this, we do teach you methods to scale out of your trade a bit at a time. And if you were to get additional entries that, again, meet that 8-point checklist, then you could add to your trade from there. Okay. There are examples or times where we would take a trade that doesn't have slope. Okay. But there's only 2 rules that you would follow for that. Let me zoom in a little and give you the example before we start flipping through numerous trade examples. So when the 20 is flat, if you get a buy signal when the 20 is flat, the only way you're allowed to take that trade is if this bar were to close above a prior high, which in this case it did not, right? Second part is if there were to be a successful retest of the 20. What I mean by that is if price crosses the 20 from below to above, then comes back, touches it here and bounces, okay? This was earnings, so not a great example, but let's say it was just a regular day and it moved above here. So you moved up, came back, touched it, bounced and cleared the prior high. Then you'd be okay to take that trade, okay? Otherwise, without slope on the 20 in the direction of your trade, I would never suggest you taking that trade. So let's look a little further back here. Here's a great example. Let me zoom in, right? So you get that cross, you get a buy signal, right? But you have a negative 20, okay? Here. So what you want to be above is a prior high here, not the prior high below your setup, above your setup here. So if we had this candle closing up here, that'd be one thing. Or second example is a retest, and here it is. So it comes back, touches, we actually get another signal, and we clear this high. So right here is where we could have gotten in. Then we would add, we would add, we would add, etc. We'd be out before earnings. So we'd be out on this day right here. Okay. That's the way we would play that. Now, when you're adding, you don't want to just continue to add, right? You have to think of your account as a whole. We're going to teach you money management rules where you're not overexposing yourself. Okay. A long time ago, when I first started out, as any of you that have followed me have heard the story in the past, but I took a big loss early on when I thought I knew what I was doing, but really didn't. And after that loss, the only way for me to be able to cope and pull the trigger on new trades was to come up with a short list of money management rules that would prevent me from ever taking a big loss again. Losses will happen. You're going to take them. I'm going to take them. They're part of this business. But what you want to make sure of is that you keep them small. When you take a big loss, they're difficult to come back from. A small loss is easy to recover from. And victory alone does a very good job of keeping your losses small. So for example, look at this buy. It's not a valid buy. We don't have slope upwards on the 20, etc. But let's say we had taken this. What you'll notice here is that as soon as the stock starts going against us, it'll get you out. Okay? It'll get you out. So your losses are typically very small, but catching a nice run will more than make up for any loss many times over. Okay. But if you take advantage of the offer that I'll give you later, we will teach you 5 money management rules, very simple money management rules that will guarantee you never take a big loss again if you follow those rules. Okay. And there are not a lot of guarantees in this business, but that is one guarantee I'm happy to stand behind as long as you follow those 5 rules religiously, which are very simple and easy, and you'll never have a big loss again. All right, let's start going through some charts. So Vince wanted NVO. Great name, by the way. Let's look at NVO, and let's go more recently here. So when I'm flipping through charts, what I want you to look at are these areas with slope. And I know this is, hindsight's 2020, obviously, but these are the type of trades that I want you to get used to looking at. When you start using this, it'll only take you a few days to get comfortable with it, and then you'll easily be able to spot these. But for now, what I want you to focus on are not areas like this. This is useless. We would not be taking any of these trades. If you look at and analyze any of these symbols with this 8-point checklist, right, they will fail. There will be 1 or 2 boxes that you cannot check, which means we would not be interested in these trades. Okay. What we would do here is mark the highs, mark the lows, wait for a breakout, and then potentially trade the breakout. But aside from that, this is what you'd be looking for. So any one of these right in here, these 2, when you think of the checklist, you have a clean looking chart. Do you have a slope on the 20? Yes. You have a victory short setup. Is the bar close to the 20? Yes, it is. Did it close in the lower half of the bar? Yes, it did, right? Are the ribbons lined? Well, in this case, no, right? You have the weekly red, you have the monthly still green, so we would ignore it. If this bar was red, that would be the exact kind of trade we would take, okay? Let's look a little further back. Here, see, we were in a strong uptrend. Doesn't take a lot to notice if you're going from bottom right to top, bottom left to top right with price. It's pretty easy to spot. But the other thing is, here's an example, right? You have a clean chart, trending. You have a buy signal close to the 20. 20 is sloping higher. We'll close near the high. Higher time frames are both aligned. You look to your left. There's no resistance overhead, right? You look for the earnings date, and unfortunately, this one was right there. Sometimes that'll happen. But if not, 1 tick or 1 penny above that high, we would get in and manage that trade. So I'll go a little further back for you to have a look at this. There you go, consolidation areas. Here's an area where you had very little slope on the 20, right? It's pretty much flat. So what do you look for? You look for a close above a prior high. If you get that and the higher time frames are aligned, you know, all the other points on the checklist match, then you can take that trade. So you would have gotten in here, potentially added here. This one's a little farther away. I personally would not have added, but this one I might have. And then you get out of the full trade here. Going further back, here's a great example, right? Very small bar near the 20. You look to your left, there's nothing overhead. Higher time frames aligned, great slope. The higher the degree of slope, the better. It means there's more momentum, okay? It trades above the high, you get in, and it moves in your favor immediately, pulls back a little, we could add, continues, and we exit the full trade. This is exactly what we're looking for, okay? So please, when you're typing a symbol, let me know what time frame you want to look at, right? Here's NVO on a monthly, for example. So if you're more of an investor, right, and you're taking these trades, obviously you're going to be in it for a lot longer. But again, another way to use the higher time frame, for example, if we go to now, is to look at it, and you can see there. I mean, the trades are fantastic on the higher time frames. You're just going to have to be in it a little longer. But I mean, look at this one down here, these moves. So if you had avoided this due to the flat nature of the 20, you would have had an opportunity to get in here. Now that it's sloping, get in here, and you know these moves are enormous. But now we're trending lower here on the monthly, okay? On the weekly. So what are we doing? We're looking for a short trade here. So that's what we'd be looking for on NVO now, is for this to come down and give us some sort of sell signal and hopefully have the 20 sloping lower. At that point, we could jump in short, okay? John wanted to look at SO. Here's SO right now, okay? Now you can see that the bars are not all very similar in size. So we are in a period with a little more volatility than just a nice strong trend. But regardless, do any of these match the 8-point checklist? If they do, that's what we'd be jumping on. Now you can see that during this pullback and this move, the higher time frames fell out of line. So we wouldn't want to take that. But going back, consolidations here, like I said, these can be account killers if you try to trade in them, but they could be huge opportunities if you're just patient and wait for the breakout. So what you'll notice here is that we consolidate. Every one of these signals would have been losers in here, okay? Now, the reason why we couldn't eliminate these from the algorithm is if we eliminated these, it would eliminate some of the good signals. So we opted to leave them in and just explain to you that these are not what you want to take. Now, when you get a breakout, right, if you're still fairly close to the 20 sloping, the higher time frames are aligned, you look to your left, there's no resistance, etc. That's a great entry. And so there it is. That's what you'd want, okay? Same thing. So, you know, right now, there's a lot of these charts that are sort of mixed with time frames. But have a look. This one, SO, higher time frames now are both green again. So as we pull back here, any day now, we might get a new entry right along here, which would look pretty good. So again, whether you're looking at the daily, a weekly, or a monthly, you know, especially if you're near all-time highs, that's what you want to focus on, okay? Let me show you an ETF, okay? Communication sector, XLC, here. That's the monthly. Here's the weekly. I love this chart. It is so orderly, so clean, so predictable, right? That I'm always looking for trades on this chart. If you look along these moves, any one of these would have made you money along the way, okay? But whether you're trading this on a monthly, on a weekly, on a daily, or say, let's go to the other extreme, a 1 minute chart. Okay. Obviously, with a 1 minute, a 3 minute, you're going to need something with volume, right? Something that is traded fairly consistently. So, an Apple, a Tesla, anything that is in favor, you can trade on the lower time frames. And again, if you meet that 8-point checklist, your chances of success on these trades are extremely high. Let me go to the 5 minute. Okay, depends on the day. You can trade the spies on a 5 minute, right? But again, you want to be patient and wait for the ones that are fully in line here, meaning you meet all 8 points on that checklist. If you can meet, say, 6 out of the 8, it means you're taking on more risk. Okay, so for me, these are hard and fast rules. These are not, do I want to, do I really care if there's all 8 or not? No, to me, it's a must. There's either all 8 or no trade. That's it. And so, you come down and look for a trade like this here. Are you near the 20? Yep. Is there slope? There's dramatic slope lower during this 5 minute, on this 5 minute bar. Are the 15-minute and the 30-minute aligned? Yes, they are. If you look to your left, is there some blank space? Yes, then off we go. Okay. And, with this indicator, we're going to give you a couple of training classes where we're going to show you, how to set targets, where this thing is likely to find support and bounce and scale out and all those good things. A lot of other technical analysis tidbits. Jerry wants to look at IWM, the small cap ETF. Again, I'm just on a 5-minute chart. And I got here, and quickly you can see back here was a fantastic setup, right? It then turned around. Does this one qualify? Not quite. Higher time frames are not aligned yet. And what are we in now? More of a channel, right? If you connect the highs, connect the lows, it's pretty clear that at least from a 5-minute time frame, have a look at this. It's kind of a descending triangle. I could have drawn this a little lower, but you get what I mean. If we break these lows and we're right, very close to, we're likely to sell off even more. Now, again, this is a 5-minute time frame. Let's look at a daily. There you go. It's falling apart here. Okay. So if you look at this little bit of consolidation, right? Had you drawn a line across the highs and across the lows, right? Right here was potentially a good entry. Now, does it meet the criteria? It does not. We've been, this doesn't even meet the criteria of a clean chart. But so you may at first glance think, well, we're ruling out a lot of trades. That is intentional, and that is a good thing. Believe me, when you run a scan at any given time, any given night, you will find numerous setups. Your job as a trader is to weed out all the bad ones and find the good ones, the easy ones. What happens when you do that is not only will you have way more winners than losers, but your winners are going to be much bigger than your losers. That's the kind of math you need to be consistently profitable with this. Okay. So the Russell has been very choppy, very ugly, even back here. Okay. So not a great chart to trade, meaning it doesn't give you a high probability of making money on this chart when you're trying to time it. If we're going to the higher time frames, overall, hey, we've been trending higher on the monthly. We're now back to support. If we were to get a bounce from here and get a setup long, that would give us an indication that, hey, maybe we're about to make a move back to all-time highs. But we don't have that yet. So we have to wait patiently. Okay. Peter's asking, please check list one more time. I'm pretty sure you'll receive a recording of this. So I'm going to put it up here. When you do, you can just pause that recording and jot these down. Okay. There are a lot of charts I want to get to before I run out of time. I want to show you some different markets. just to show you how it works across the board. So if we go to the futures market, for example, look at gold here. Okay? Now, again, this is a monthly chart of gold. So we were following this since 2021. When it made that high, pulled back, we were looking for a break above that high. That happened in March 22, failed, right? Got back here in March of 23 or May of 23, failed. Then it finally broke out here, okay? What do we have when you see this breakout? You have significant slope higher. You have higher time frames aligned. You look to your left, there's nothing there. This was an all-time high, okay? So even though we don't have a buy at that point, but we're already in a buy. The system is already telling us this is good. And from there, we went from 2,200 to about 3,000. Here, we're currently at 29.27. So is it worth the wait? Absolutely it is. And once it triggered from here, you just go back. If you prefer to trade on a daily time frame, you go back to the daily and you start picking off the trades along the way. Okay. So here was that breakout, right? You had a re-entry on the daily. Beautiful trade right off the start. How easy would it be to sit through that, right? You go through another consolidation. So you wait. You don't want to take these signals. You're going to get chopped out. You come back, you wait for a proper buy, and you take a win in there. You get another one, you take another win. Consolidate, you wait until you're out of there. You get another signal, and off you go. That is what we do day in and day out, whether it's gold, whether it's crude, whether it's, if you want to look at the dollar index, any market, Bitcoin. How many of you trade crypto, right? It works the exact same way. Look at this channel in here that we had marked up. We broke out, came back, retest that level. This buy here, boom. That's exactly what we want. Look at this one with slope. Higher time frames align. Look at the slope on the 20. This was a no-brainer trade right here. This is what we look for. Now, like I said, we meet 3 times a week with our members live on Zoom, where we review dozens of charts and identify these. I send out an email 5 times a week, recapping what happened in the markets, sharing the trades that I'm taking. Here, it's not an alert service. I will tell you, I'm not recommending those trades. What I'm showing you is what I'm doing. Whether you choose to follow along or not, that's up to you. But I'm showing you what it is that I'm identifying as good setups, right? And let's look at some international markets. Okay, so we have members that are from India that trade the Nifty here. Okay, the Nifty was one of the strongest markets for a very long time. And then back in the fall of 2024, October, it started to fall apart. So these may look like small trades. Trust me, they're not. Very significant profits along the way here. What else? Right now, Europe is very hot. Look at Germany here, right? These signals. Again, if there's a flat 20, right? This one here was not above the prior high yet. We cannot take that, okay? Even though the higher time frames were aligned, all those other checkpoints could be ticked off. No overhead resistance, etc. But then look what it did. It came back to retest. And what did we get at the retest? Another entry here. This one we can take. And off we go. It pulls back, we can add. Off it goes. It pulls back, we can add. We can add. Until we hit our money management rule limit, then we just hold on. And we're still in this trade. UK. Look at that consolidation, right? The longer the consolidation, the bigger the move that comes out of it. So if you draw a line from when the channel started to when the breakout was here, you take that line, if it broke out to the upside, and you draw it upward, that is the size of the move that we're expecting. So right now, we've only gone through about a third of that move. There should be much more coming. Friends, real strong move in here. Look at back in here. These ones. When you have that kind of slope on the 20, odds are very, very high of a continuation of that trend. Okay. With that kind of momentum, that is exactly what we're looking for. So again, whether you're trading an index, an ETF, a crypto, anything, it works the same way. 5-minute, 15-minute, daily, weekly, monthly, it doesn't matter. It all works the same. Let's look at a few others. Let me know if anyone else, let's see, maybe there's some questions here. No, I think we got it all right now. Okay. Look at Royal Caribbean, right? Just a beautiful, clean, orderly looking chart. That's what you want to trade. If you ever have time on a weekend, okay, go through as many charts as you can and build a watch list of clean charts. What I mean by clean charts is when you first bring that chart up on your screen, you should be able to quickly tell, immediately tell if there's a uptrend, if there's a downtrend, or if there's no trend, okay? And the second step is you look at the bars, the price bars. Are they all very similar in size, right? If a chart is in a long trend, you create a watch list called long trend. If it's in a short trend, you create a watch list for shorts, okay? But you only include those charts that are trending with slope on the 20, very clean, very orderly, and then you sit and wait for these to appear. That way you shorten your search every night, but you're going to make sure you're on the strongest of the strong charts. Right now, I were to bring up RCL. What do I see here? Can I tell what kind of trend there is? Is there a trend? The answer is no. We're in a consolidation phase. Okay. Maybe we're going to go lower and start a downtrend. We're not there. We have red bars on the daily, red on the weekly. I don't know if you can see behind those signals. There it is. It just turned red, but still green on the monthly. So there is no actual trend. So I would move on. I would not add this to my list. Okay. But if you look back to when this was trending and all the trades we could have taken in either direction, the majority are winners, and that's what matters. Some of those trade ideas that I send out with the nightly emails, I'll give you 4 from the last week that we had, okay? AMD was one. AMD, you know, I've been hearing so much talk about how undervalued it is, right? And how if you look at the valuation compared to NVIDIA or Palantir or anything else, you should be buying AMD. Why in the world would anyone want to buy this chart right now? Yes, maybe months from now, years from now, this will be much higher in price. Right now, it is being sold, okay? Sellers are outpacing buyers here, right? It's a clear trend downward. And that's all you should care about. If you see red on the daily, red on weekly, red on monthly, you know, that's the direction you should trade in. This was the trade we took last time. This was the one I highlighted for our members. Just an easy trade lower. Nothing to the left to worry about. Everything aligned, off it goes. Another recent one was Estee Lauder. Okay. Not as clean. Okay. Kind of choppy here. And look, see, I'm showing you why we do what we do. Okay. This one wasn't as clean, right? Looking back, I should not have taken this trade. Okay. You see the difference between this area and now here, this kind of sideways back and forth, right? You see that? So, but it looked like a real nice close, nice slope, higher time frames were aligned. I was targeting this here, but look what happened. Came down one day, turned around, change of color means we're out. Now, good news is it's a small loss, but you see the difference? This is why traders lose money when they get caught in a chop. Now, it happens to all of us, okay? Let me show you a couple of others. HOG. This one's a nice clean trend, right? This was the short. Took that. It's doing very well for us. Why? trend and momentum in your favor. Higher time frames align, nothing to the left, nice clean open road. That's what you need. Murphy oil, MUR, was another one. Okay. Strong momentum. Look, top left, bottom right, lower highs, lower lows. That's what we want. This was the trade. Boom. Worked out great. So you see, if you look at just those four and you look at the size of the wins compared to the size of that one loss, you're way ahead of the game. You could overcome many, many losses with just one of those wins, let alone having more wins than losses. But the key is to remain disciplined and trade the ones that have a very clean, strong trend in one direction with momentum in that direction. Okay. Let me see if there's any last minute questions here. John says, amazing platform. Thank you. Let's see. How often do you scan for sectors and then the stock? The sectors, that's Deborah's question. Deborah, the sector scan I do nightly. It's only a dozen charts. That's all I do is I look at those sector charts and just to identify when a turning point might happen. The review where I'm talking about looking for clean charts and building a watch list, I do that every weekend. That's what I do for that. And if you're busy one weekend and you skip a weekend, it's not that big of a deal. Usually those watch lists, you'll have quite a few names on there. You can even skip a weekend. It's not that big of a deal. But the sectors I will look at every evening. Okay. Deborah also wanted to look at Siri. Sure. Let's look at Siri. Okay. So Deborah, what do we see here right now when we look at this? Just look at from this area to this area. We're in a channel, right? We can take a line and we can mark the highs here. Okay. And when you're marking the highs, you could just take the highest high and the lowest low. But what I like to do is try to get as many touch points on that line as I can. Okay. Oops, I drew it a little wonky, but anyway, you get the point. So right now we're in a channel. So whether we're getting a buy signal or a sell signal, I'm not taking that trade until we're outside of the channel. We also don't have much of a slope. We also have a mixed look on the higher time frame, so we don't want it. Why would we want to make trading difficult for ourselves? We want to make it simple. Okay? The reason why 90+% of the people that try this fail is they're either not able to stick to the rules. In other words, they can't get caught up in the hype and so on. And they're not disciplined enough to follow it. The two most important characteristics for success are discipline and patience. Okay. Both of those come down to waiting for the right setup and then managing the trade appropriately, which again, we'll teach you. But look at back here. Look how strong this trend was. Look at those bars, how very similar in size they are, right? Look at the degree of slope there. Could anyone argue that this was not a downtrend? No, not only was it a downtrend, it was a strong downtrend. Higher time frames align, okay? There was nothing when we looked to our left. So a trade like this is an absolute no-brainer. Easy as anything to jump on as opposed to this. So now we wait, we exercise discipline and patience, and we wait for a breakout. You can create another watch list of just channels and look for those breakouts. Okay. Let me see. I want to try to get as many questions as possible. Yeah, Deborah, the bars are colored based on the trade signal. So if it's identifying a short, they're going to remain red until we have a change in color, which means you should exit that trade. Okay. If it's a long trade, they will be all green until we get a sell or an exit, and they'll be red. If you see yellow bars, it means there's no long trade, there's no short trade. You should sit on the sidelines and wait for the next signal. Okay. Now, let me briefly just tell you. Oh, wait, another last minute question here. have you created your own $1 million AI market scanner that's able to locate the best high probability setups? No, certainly not an AI scanner. We, again, part of our service is to highlight what I'm trading. We do have this system available both on TradingView and on Metastock. Metastock, we do have a scanner. TradingView, unfortunately, doesn't have the capabilities yet for that. But especially if you're just starting out, I would encourage you to go through the charts manually. You want to train your eyes, okay? Following this checklist initially will take you a bit of extra time, but once you get used to it, you'll be able to whip through charts very quickly. When I first started out, what I started doing was I reviewed over 3,000 charts every night to train my eyes on different technical analysis patterns and et cetera, which has helped me immensely over the rest of my career. So I would encourage you to do that. You don't have to go through 3,000 if you don't want, but once you get good at it, you'll be able to go through 3,000 charts in less than half hour. It really doesn't take very long. John, this is the TradingView platform. Okay. Now, if you're interested in this, please go to tradingwins.com/start. The link is it will be put in the chat for you. Okay. It's tradingwins.com/start. That'll take you to this page. It'll tell you a bit more about myself and our service here and what we do. If you scroll part way down, there's a video here that I'd like you to watch. This does a good job explaining what our service is all about, the things that we do in addition to this indicator. Okay. And then a little further down is the Trading Wins Elite offer that we're offering today. Okay. Normally we sell this for $291 for a 30-day period. Right now it's $7. Okay. Now what you're going to get with this is a full 30 days access to our Elite program, which is 30 hours of videos, of instructional videos, different topics of technical analysis. You'll also be part of our community, which you'll join us live on Zoom 3 times a week. If you can't join live, you can email us a question. We'll answer it during the chat, and then we will email you a copy of the recording, and you can get your answer there. We are also launching tomorrow, actually, a chat feature. We will all be on a chat group. We can text back and forth all hours of the day, share trade ideas, etc. It'll be great. And then you get 30 days access to the indicator that I just showed you, all for $7. If you just come down, click on the link, it'll take you to this page. You'll notice that it's all already set to $7 and go from there. Okay. I'd love to stay on for more questions, but I think I'm out of time. So I'm going to pass it back to Fausto. And Fausto, thank you again for having me on. I really do appreciate it.
Vince, thank you so much for being here, and everyone, thank Vince for being here, and you appreciate everything you've done. And thanks. So we'll look at have you back again. And then once again, like everyone else, take up on his offer. I mean, everything is very within budget for everyone to try a little bit of everyone's stuff. That was the main goal for everybody here, and that's why we do it. Let me just take over the screen, and let me just there we go. All right, so as we're going to get started in about 2 more minutes, so we're going to bring Marina in, and before we do that, let's go hop on here and see what's going on with the market. So we're back still right around the 500. We're testing some major support levels around 42.40. It is a little bit of a bloodbath right now with the market that we see what's going on. You can see all reds going across the board. If you guys were in my morning meeting, I did mention to all of you that I'm still not a fan of swing trading anything right now. I did get in a lot of stocks hit major support levels. I think Monday, my swing trading account was probably the highest it's ever been. I made like 10% on it. And then by the end of the day, I ended up being down 1%. So I said, my God, that was a hell of a swing. So I sold all my positions. I said, screw this. I'm like, that didn't look too good. That was not kosher. And you know what? If I still held on what happened, if you listen to me on Monday, I probably would be down 10% now from where they were, because everything is at major support levels. But as of right now, things are not looking good. What is looking good, which is what you'll hear a lot of the gurus today are going to talk about, just going short. That's really it. So that's basically what we're seeing right now. I mean, even though these stocks are testing some major support levels, even Nvidia, big iceberg order is still hovering there right around 110. All right. Now, let me bring in our next guest here. Okay. So Marina, I know, which is known as the Trader's Chick. I had her on my podcast too, and some of you get a chance to watch her. I think you'll really like it. She does an amazing job, has been a day trading expert, mentor for over 8 years. She travels around the world. You know, she's she's lived around all over the world. I think she's living in Spain now, but it's nice. That's what's great about this job. You could do it anywhere. So what ends up happening, she wanted to share her knowledge over the years. It was great to team up with her. There she is right there. How you doing, Marina? And she founded the Trader's Chick, helped traders build their confidence with their skills. She lived in Central America for nearly almost 2 decades. Now she brings it to the global perspective, going to Europe. She's also the CEO of the Trader's Chick and the Travel Europea, focuses on online businesses, trade education, and financial independence. And she also likes to teach her style to commit to her traders to their success, to help them know where to get in, where to get out, where she spends a lot of times of mentoring, a lot of focus on controlling losses and the psychology part about it. But Marina, thanks for being here again and joining us at the Cyber Expo again. And really look forward to see what new stuff you found in and your new travel adventures, as always.
Sounds good. Well, thank you so much for having me. I actually really love being on your show, and the chats that we've had for your podcast. They've always been really insightful. You have really good questions, and that's usually the best part, right? Getting deep. Thank you, everybody. Okay, let me see if I can figure out how to share my screen. 1 second here. Hold on. Why is this not coming out? Okay, there we go. Okay, let me know if you guys are able to see my screen. Yeah. Okay, wonderful. Hi, everybody. And I am Marina, the Trader Chick. And let me just kind of clean up. Zoom has a lot of windows that they open. That kind of takes over your entire entire screen. Okay, so before I go into my presentation, I just wanted to say hello, and I see that there is a full room today, and this is super fun. I'm so excited to be here. I would love to know, where are you guys from? As Fausto said, I am in Spain. I live in Barcelona, Spain. Where is everybody else coming to me to listen to us today? Can you guys just put that in the chat box? I can see right here, there's a chat box. So go ahead, put it in. Let me know where you guys, oh, Gerard, you're from New York. I grew up in New York. Gerard, which part of New York? John, you are from Phoenix, Arizona. I love Phoenix. Very hot in the summers. I remember I was there. I don't remember. I think it was July, and it was like 125 degrees. It was absolutely insane. Ricky, you are from Krakow. Curacao. Wait, I think I know. Is that a Caribbean island? I'm sorry if that's ignorant of me. Where is Curacao? Gerard, Garden City, New York. Oh, okay. That's more like Long Island, right? John, you are from Arkansas. Wonderful. Oh, there's so many people. I love it. Roy from Vegas. God, I haven't been to Vegas in like 25 years or more. I think it's completely different now. Jerry from Edmonton. Very cool. Is it nice weather there right now? How is the weather in Edmonton? It's cold. There's a lot of Canadians here because it's cold there. Rick is from Pollock Pines, California. Okay. Anna's from London. I actually lived in London. I lived in London a very long time ago, but I did live there. I studied there for a semester. It was amazing. It was wonderful because it was a drought. So I got away with not being rained on. KP, I'm not sure what your name is, but Jackson Heights. So I will explain in a little bit, but I am actually a refugee from the Soviet Union. And when we arrived to the United States, we lived in Jackson Heights. So Jackson Heights has a very big part of my heart because obviously it was the first place that we moved to. Ricky, I think you said right. Ooh, hang on just 1 second here. Okay, John is from Houston. Nice. Okay, I don't think I've ever been to Houston. Deborah is from Connecticut in Mississippi on the Gulf of America now. Okay, cool. Anthony from Los Angeles. How are things in LA? I would imagine and hope that you were not one of the people affected because I can't even imagine what's going on there. I truly hope that things turn around and people find a way to make, I don't know, to make a new life, to make new homes. Damien, you are from Washington, D.C. My brother lives there, Bethesda and Arlington. I used to visit there very often. Cocao is Venezuela. You know, it's funny. I actually wanted to say Venezuela, but I wasn't 100% sure because you can't technically be online like this in Venezuela. I'm not sure. My right-hand man is Venezuelan, lives in Venezuela. John from Gutentag, South Africa, and William from Omaha. Wow, we have such a beautiful, diverse crowd covering half of the globe. I love it. I love to see that because why? Trading is exactly that, right? The reason why trading is magnificent is we could do it from anywhere in the world. And just like Fausto said, me and my family, I should say, not just me, massive travelers. I mean, we travel like 3 or 4 months out of the year easily, and I do need to work once in a while. I'm not a trust fund baby. So trading, you could do it from anywhere in the world. That is the beauty of trading. So this is me. I am Marina, the Trader Chick. I'm just going to turn the video off because I think it's a little bit distracting. And I have a confession for you guys. I have a confession. I am a scalper. I don't know if you guys know what scalping is because I know Fausto was just talking a little bit about swing trading, and then there's also day trading, and then there is scalping. So scalping, if you don't know what it is day trading, but it's quick, right? It's win in and out of trades. Usually my trades do not last longer than 3 to 5 minutes. At one point, when the volatility is low, but the volatility right now, the volume is crazy high, right? I would permit to be more in like 15 minutes, but on a whole, I don't hold for longer than up to 5 minutes. And I'm going to let you know how I stumbled upon scalping because people just don't, it just doesn't happen, right? And honestly, I didn't even know scalping was a thing until I started to talk about how I was winning and how I was hitting profits. And somebody mentioned to me, they're like, oh, you're a scalper. So what exactly is scalping? Like I mentioned earlier, it's going in and out of trades really quickly. But the reason I stumbled upon it was because I was in this academy and it was day trading. You know, you were in and out, and they were really going for like those big romantic targets, and it never worked for me. So the thing is, when you're going for the bigger targets, which look really good on paper, but the reality is 2 things. One is the risk has to be quite big, right? That's the reason why you're going for a big target. You also need to have a bigger risk as well. And on top of that, I couldn't sit through the long targets. I was just in constant analysis paralysis. I was constantly stressed out. So, and I wasn't doing well. I was constantly, I just wasn't doing well. I couldn't hold for the target. Then I was letting myself go too long for the stop losses. I'm sure you guys have all been there, right? And I just, my whole confidence level was just going down the drain. I mean, it was just terrible until I ended up losing a lot of money. So I'm not going to beat around the bush. I ended up losing a lot of money. This was over, I don't know, almost like 8, 9 years ago at this point. And I just felt completely defeated. And I just said, I can't do this anymore. I quit. I ended up leaving, but I could never stay away because I knew that I could do this. So what I decided to do was I went back to the markets. I stripped my markets of all of the indicators. I had 3 different charts. I went down to 1 chart. I made it very simplistic. And that was the beauty of it. And then what I ended up doing was, instead of going for those really big targets, I decided to start to go for the smaller, quicker targets, mainly because when I started to hit those small targets, all of a sudden, it wasn't even about the money that I was making, but more of that I was putting confidence into my emotional bank, right? If you don't have confidence, it doesn't matter how big the targets are and how fantastic all of this is if you're not confident in what you are doing. So when I started to hit those smaller targets, all of a sudden my confidence was growing and I was really enjoying doing it. And what I realized is I could still go for the smaller targets, but just put on more contracts. So my main instrument that I trade is the E-minis. It's the S&P 500 on the futures market, the ES mini. And what I was doing before with these big targets was going for like 4, 5, 8 points, really big points. But I decided to just go for 1 point. 1 point is $50. So as I started to hit those targets, my confidence was growing. And what I started to do was, instead of going for bigger targets, I started to put in more contracts. So even though I was still going for that 1 point, $50, but now I had 10 contracts. That means now I had $500 that I was winning versus the $50, but I was still hitting those smaller targets. And that's how I started to talk about scalping. Talk about what I was doing. And somebody said to me, they're like, you're a scalper. And I had no clue, right, what that was. So as I mentioned, scalping to me came, and I think the majority of our big lessons or our big breakthroughs, like I'm going to have here, usually happen through massive losses and big time lessons, right? And even though I ended up losing all this money, did I stop? No. What happened was I kept on trading, revenge trading, and it was just getting worse and worse and worse. And that's when I literally had a breakdown, because at that point I was trading or trying to trade for like 2 years. I was constantly losing. It was just horrible, horrible. And I had literally a breakdown. And what happens when you have a breakdown? Usually you come to a fork in the road, right? You either have to make a decision of quitting, leaving for good, whatever it is that is giving you that breakdown, or you have a breakthrough. And that's exactly what happened to me. So it's funny. I don't know if you guys had ever seen this movie, Nacho Libre, one of my family's favorite movies. Really, really funny, family-friendly movie. Anyways, if you don't know what it is about, so Nacho, this character, he wants to be a luchador. He wants to be a wrestler. So in Mexico, it's lucha libre. That's their wrestling, and he really wants to be this luchador, and he's just horrible at it. And there's this one scene in the movie where he's standing in church and he's praying and he's saying, Lord, why did you give me this massive passion to be this warrior, to be a luchador, and made me so terrible at it? And I just in that moment felt like me and him just had such a connection, because I was like, why do I have this massive passion to be a trader, and I feel that I am just not good? And of course, in the movie, everything changed. He won the biggest match and became, the hero of his town. I'm obviously not like this mega super crazy successful hero of my town, but I began to become a profitable, consistent trader, and it became my livelihood. And that's really what I wanted to talk to you guys about, was my breakthrough. And what that breakthrough actually happened was, like I mentioned, I actually did quit. I walked away for several months, but I couldn't stay away. So I decided when I came back, as I mentioned earlier, I got rid of all of my charts. I went down to went down to only 1 chart. I used to have 10 indicators, and I eliminated them all, because interestingly enough, we have this perception of indicators, right? We can watch one guru or another trader, and they have their indicators that they're using. Just because those indicators work for them does not mean that they work for us, right? So what happened was, I had all these different indicators and they were just not helping me. I was in constant analysis paralysis. I was always stressed out. And once I got rid of them, I started to just apply the ones that work for me. And now I'm down to 2 indicators. But what also happened is that I realized I was never taught the basics. And I would say the majority of the problems we have, even though we could be looking at the markets and listening to other people and looking at alerts and looking at, these scanners, if you don't know what you are looking at, it does not matter. I will tell you, and I will be so honest with you guys right now, and I need to be on film for this. If you guys do not know what you are looking at, you are never going to win. So you could be in as many chat rooms and buy as many alerts as you want. But if you don't understand the basics, if you do not understand why they are seeing what they are seeing, you cannot apply it to yourself. I was in all these chat rooms and I was not understanding what was going on. And they were saying, oh, here's a trade. And I didn't understand why, but I was jumping in. I was chasing the trades and I didn't know what was going on. I didn't know why. But if they were saying it, then they must have been right. And of course, I was then losing. By the time I entered that trade, it was already too late. That's the other thing with alerts, guys. By the time you get the alert, it's usually too late. Okay, I'm just going to break it to you the real facts, okay? If you're doing alerts, chances are by the time that alert is out, it's too late. So you need to be the one in charge of your own what is going on in front of you, okay? So anyways, and then I used to ask all these questions because no one tells us the basics, right? Like people were talking about what is divergence, like they were mentioning divergences, or they were mentioning about reversal patterns and all this other stuff. But at the end of the day, I was like, can you please explain a little bit more? What does this mean? Or can you explain why you just did that? And I was either ignored or treated as if I was born with this information. And that's not the case, right? None of us are born with any kind of information. We learn everything. And so what I decided was after I quit, I came back. As I said, I went down to 1 chart and 2 indicators. And what I started to do was devote my time to the basics. My wounds were too raw, so I was just studying and practicing in simulation with the basics until I truly, truly understood them, and until it became like a language, and I literally became fluent in the market language. So today we're going to be talking about understanding what the market is telling us about why small profits can lead you to the big targets, and because I can't handle the stress, why scalping could be really great for some people. Okay, before we go into it, I just want to do a really quick intro. What's really important to understand, guys, is that we all bring ourselves to the charts. I don't care if you're going to be buying these AI scanner stuff. By the way, AI is great, but I don't believe it's going to fully work on your charts unless you understand what it is going to be doing for you, which brings it back to understanding what it is there. If you want to write a book and use AI, if you don't know how to write at all or even read what it's telling you, you're not going to be able to write that book, right? So if you're going to have AI do anything for you and you don't know how to read your charts, it doesn't matter what it's going to be telling you, right? AI right now is a very sexy word, but if you don't understand how to utilize it properly, it's not going to work for you, okay? So here I am, as I mentioned before, I am an expat living in Barcelona, and how Fausto explained earlier, I've been an expat now for 22 years. Before that, me and my family lived in Central America, Costa Rica, and Guatemala for 20 years. And so now we live here. Being an expat has been the greatest experience of my life and for my kids. The other thing is I was a fitness instructor before I became a day trader. And why does that matter? Because a lot of people have this misconception that you have to come from a math background, engineering background, finance, economics, and that's not true. I was a fitness instructor, literally. That's what I did before I became into this. And I've also am and still am a travel writer. I have a travel site called Travel Experto, and I am trilingual. Why is this important? So as I mentioned before, that I started to look at the market as if though it has its own language, and I became fluent in it. So I, like I mentioned before, am a Soviet Union refugee. When I was 6 years old, we made the pilgrimage and moved to the United States. So Russian was my mother tongue, but English became my real language because I wasn't learning a new language as much as I was learning a language at 6 years old. However, I learned Spanish in my late 20s. And if any of you here are bilingual or trilingual, you know that learning a second, third language, it takes commitment, discipline, and a whole lot of practice, right? And that's exactly one thing I started to recognize was when I started to really focus on what the charts was telling me is that it's a language. And when I started to read it and understand it, I recognized that I was able to put how I learned Spanish into the charts. And whenever I mention this, people have these massive aha moments and literally changes their style. And the coolest thing about trading, we could do it from anywhere. That's the beauty of it. Before COVID, I know COVID is now 5 years ago. Isn't that insane? But I used to do quite a lot of in-person shows, especially with the Money Show and the Traders Expo. And now I truly love being on shows like Fausto is holding right now. I really appreciate that so much because you could reach so many more people, right? So today I really want to talk to you guys about how scalping works, but it all begins with the basics. So hang on here. I think there are some questions here. Scalping is actually snipping for profits. Maybe so, but it's about the profits. A lot of people don't even have profits. So when scalping came into my life, I started to get those profits, and that changed everything for me. All right. So let's talk about what are the basics of trading. Before I get deep into it, this entire presentation, I have it for you as a worksheet so that you guys could download it for free. Go to makingofadaytrader.com. You could download it for free and follow along. And also when you get the replay, you could then go at your own pace. All right. Go to, again, let me just, oops, hang on one second. Oh, hang on. makingofadaytrader.com. So before anything, it is so important for you guys to understand you cannot be a professional trader if you do not have the proper vehicle, which is the chart platform. All right, you need to have a good chart platform. I know that the person before me was talking about TradingView, MetaStock. There's so many fantastic trading platforms, but you need it. You cannot be a Formula One driver in a minivan, right? That's ludicrous. You cannot be a professional trader or swing trader if you're going to be, playing on rinky-dink stuff like Robinhood. So I use only two indicators. I use EMA lines, and my favorite is the MACDs. The MACDs for me are the best indicators because to me, they are the least lagging indicator. But you guys have to feel out to see what is your indicator, what works best for you. All right, so let's begin with these important understandings. The trend, right? The market. So there are three trends. We technically know that there are two trends, right? We know that there's an upward trend and a downward trend. However, in my opinion, and I actually know for a fact that the majority of people feel the same, the most important trend is the sideways trend. Why? Because I can guarantee if you guys go right now and look at your logging of all your trades, the majority of the money you end up losing is during those consolidation areas, is during those sideways trends, because normally they are like the trader's worst enemy. Okay, this is called the chop, the indecision area, the exhaustion pattern, the consolidation, the slowdown, the channel. I don't care what you call it. You need to stay away from it. And once you understand how to spot it, not only are you going to be able to stay away from those areas, but you're also going to understand when they break through or transition to start taking those truly profitable trades. Okay, so understanding the trending markets is going to be what makes all the difference. So just a really quick understanding: upward trend, each pivot is higher than the next. This is the bull market. This is the market going up. This is when you go long. All right. This is when you are going long. This is when you are buying in the market. What does that mean? Literally means you are entering at a low price point, exiting at a higher price point, and taking the profit in between. That's it. There is no special anything other than that. You see that the technical analysis is telling you to enter here and you exit high. That is buying. Now, downward trend. Again, shorting the market. And right now, because it is a bloodbath, it's crazy for day trading. It's definitely good to short the market. Downward trend. Each pivot is lower than the other. What does this mean? This is when you short the market. What does that mean, guys? It means that you are selling. You are entering, and you are entering at a high price point, exiting at a low price point. And you're taking the profit in between. That's it. Do not think any deeper into it. That is exactly what this is. Entering high, exiting low, take the profit in between. It's the bear market, market going down. Now, let's talk about those consolidation areas, the transition areas. Like I said before, they are the trader's worst enemy. And once we know how to spot them and avoid them, you guys will be able to truly understand what is happening in the market. So, consolidation areas, consolidating markets. What is this? It is the channel. It is when the market is bouncing in between 2 points. There is no real movement here, right? It's just bouncing in between 2 points. So, why is this area the worst possible place, and why the majority of day traders end up losing all their money? Why? It's actually quite simple. It's because it is an emotional area. So the thing is with day trading is that it's very emotionally charged, right? And what happens with a lot of traders, and I would say 99% of them, that's why they fail, is they come up with stories that they tell themselves, right? So what is a story? So a good example of a story is, for instance, you just met somebody new, a new friend, right? And you really like them, you exchange phone numbers, and they say to you, hey, I'm having a party in 2 days. I would love for you to come. I'm going to call you tomorrow and give you the directions. And you're like, okay, cool. You go home. The next day comes around, no phone call. What starts to happen in your head? Stories, right? Did I say something that they didn't like? Maybe they met somebody who said something about me. All these stories, and funny enough, they're always negative, right? It's not like we don't come up with other stories that could be beneficial to us, right? So those are stories until that person calls you 2 days later and they tell you, oh my goodness, I'm so sorry. My phone fell into the toilet. I lost everybody's number. It took me forever to get the contacts back, right? That was the truth, but we damaged ourselves with the stories. It's the same thing when we start to notice these consolidation areas, right? Why? So when we see these areas, a trader who believes in the trend is your friend, they will be telling themselves, you know what, the market's been going up all day, I'm going to go long. Then you have the contrarian trader. Every time they see something like this, they're going to say to themselves, you know what, the market's been going up all day, it's got to correct, I'm going to short the market, right? Those are stories. But the reality is, the market is just consolidating. There is nothing else to it. The only thing you as a pro trader should say is, you know what? I'm going to wait this out. I don't have a clue what the market is going to do. And that is what the pro trader does. There is no story. The only story is what's in front of them. And that is, it's consolidating. It's bouncing back and forth. I don't want to touch this market. I'm going to be smart. I'm going to sit on my hands. That's when you become the real pro trader. And this happens all the time. Okay. And when you start to spot it and understand it, that's when you start to make the real money. Now, let's understand these areas because the market respects them. And if you don't understand, cannot spot them, you cannot respect them as well. And you need to respect what the market is respecting. What are these areas? They are the support and resistance area. And they are so important. So I want to just give this example. Imagine back to the Formula One example. Formula One drivers, it is a known thing that during racing season, 25% of them will either get hurt, get a really serious accident, or even more horribly, have a fatality. 25%. 99% of traders fail, right? Yet, the 25% Formula One driver prepares themselves. They have helmets, they have fireproof uniforms. When they sit into that car, they have like 2 or 3 seat belts, right? We as traders need to protect ourselves as well. Support and resistance areas are those seat belts, and we need to understand them, and we need to use them like that. So what exactly are support and resistance areas? So let's begin with, what's a resistance area? Resistance area is when the market is going up and then boom, it starts to hit a ceiling. And if it hits the ceiling 3 or 4 more times, you have to draw that area in, because the market is respecting it. And you don't want to be pretending that you're going to beat the market and saying that it's going to break and continue. You don't know that, but you do know that there is an area and you need to draw that in. So resistance area, the ceiling of the market. What is a support area? It's the opposite. It's when the market is going down and all of a sudden, boom, it starts to hit those areas. Just like Fausto was saying, there's a lot of support going on in a lot of the stocks right now and equities. Support area, it is hitting the same area over and over and over again. And you need to understand it, draw it in. I personally always say draw it in, because you don't want to have a mental idea of it. Because when you're in that live market, you need to look to the left and see what is there. Okay, so draw in that support area. These areas are so important. They tell us where the market is respecting. And chances are it's not going to break through it when you think it's going to happen. So when it does finally break through, you are ready, or bounces off and transitions. Okay, then we have the channel, which is supported and resisted on both sides, right? The channel, look at this ugly, choppy behavior. Do you really want to be in a market that is showing you this? I don't want my hard-earned money into that. Excuse me. I don't want to put my money into that. Absolutely not. Okay. So how do we recognize these areas before they become really, really obvious to us? Because a lot of times we will end up losing in the very beginning. The problem is that people continue to put the money in, but you could also avoid getting into those areas in the very beginning. And this is what I'm going to show you right now. Those areas are divergences and reversal patterns. I call them the trader's map to shift in direction. I call them the golden symbols of trading, because to me, this is the number one way that I trade. And the coolest thing of all is they are so simple to spot. Reversal patterns, double tops, triple tops, double bottoms, triple bottoms, head and shoulders. These are amazing and they are simple to spot. And once you spot them, then you could understand what is going on. So is it an indication? Is it 100% telling you that it's going to reverse? No, it is an indication that something's about to happen. And chances are it can reverse, but you don't know exactly when until it does. And you are ready when it does. Okay. So what is a divergence? To me, divergence is the holy of the holiest grails for trading. So as you can see here, the price action is going up while my MACDs is going the opposite direction. What does it tell me? It's not telling me that it's going to reverse. It's not going to tell me that. But what it is telling me is that the market is losing its strength. And the last thing I ever want to be in is in a market that is losing its strength, right? We want to sit on our money and put it in where the market is super strong. And divergence shows you this. Now, when you have a double bottom, triple bottom starting, that is also the beginning of a support area, right? Or vice versa, double top, triple top is the beginning of a resistance area. And when you have divergence, I completely stay out. This is just screaming at me that the market is totally slowing down, and chances are it is going to reverse, but I don't want to go in until it shows me that reversal. Okay, so I want to put all of this together. Like I mentioned before, I have this entire presentation that you could go at your own pace completely for free. Go to makingofadaytrader.com. Go to makingofadaytrader.com and you will get this presentation for free. If you are by any chance on Google and you can't open it, so you just have to press on the browser area and remove the S from the HTTPS. Okay, so make sure that it's HTTP. I don't know why there's a firewall, but otherwise it's not only thing, it's Google. They just do that. So makingofadaytrader.com. All right, guys, breaking out of areas. Let's put this all together because we all know that breakouts are probably the most powerful trades out there, right? But if you don't know how to spot them, you're going to miss out. So how do we recognize the breakout trades? First and foremost, you need to draw in that support area or the resistance area, whichever is there. So what is a breakout? It is when the market is moving in one direction. In this particular case, it's moving upward. And then all of a sudden, boom, it starts to hit a ceiling, right? And then guess what? It breaks through that ceiling and continues in the same direction going up. That is a breakout. So when you are understanding when this is happening, you have your areas drawn in. And once it breaks in, that's when you could enter. And that is the breakout. And usually when the breakout happens, that means there is a renewed amount of energy in that market in that same direction. And you want to be in it as much as you can. All right. So this is how I spot my breakout trades. I always have my areas drawn in. I am religious about drawing in my areas and understanding divergences. To me, that is my holy grail. And they're free. These indicators are free and you can spot them on any market that you are trading. It does not matter. And then I also look at the MACDs, which is my red dots below. So as you can see here, there is a dashed black line. That dashed black line is the zero line. That means that there is no strength in the market. And as you can tell, there's very little strength in the market until boom, it breaks out. So that's when, and there's no divergence. That is when I am putting in my order waiting and waiting for me to be filled so that I could have that breakout trade. And that is how I do it. Now, I want to talk about another bonus setup. As I mentioned earlier, we want to know when the market shifts direction. I call this trade the initial instant reaction trade. What is it when the market has a new trend? I'm going to give this to you guys in layman terms. So, for example, imagine you want to go jogging. You are so hyped up. You are ready to go jogging, right? You are ready to run. So, here's the thing. When you are ready to go jogging and you're able to put my money on the fact that you'll probably go 1 or 2 miles, right? Because that is when you have the most amount of enthusiasm and energy. However, is it going to be a good idea for me to put that money in when you're already a mile in? Not as much, right? Because you might be getting tired or you might change your mind, whatever happens. So the same goes for new trends. When you have a new shift in direction, you want to be in as early as possible into that new trend because that is when you can get the most amount of energy. Okay. And that is also by having your areas drawn in and understanding what is actually taking place. Okay. So hang on a second. I see that somebody had a question here. Oh, okay. Thanks for putting in the link for me. All right, guys. So here's the thing. We have absolutely everything we need to take action. We have everything we need to take action, right? We have these amazing presentations. There's a bunch of gurus. There's tons of YouTube videos. There are podcasts. There are books. There are live presentations. But at the end of the day, how do you know if you are doing it right? How do you know that you are doing it right? How do you know that you are looking at the market correctly? If you are understanding what the chart is telling you, right? Because all of this is great, but the real question that I get asked all the time is, how do I actually get started? How do I get started? And this is not from beginners only. As a matter of fact, the majority of people that ask me that are seasoned traders. And they ask me, what can I do to turn this around and be profitable consistently? And honestly, like I mentioned from the beginning, it's usually lacking the basics. It is just simply lacking the understanding what the market is telling you and what it is doing. What I like to say is that we put in windows without having any walls, and our windows just keep on crashing, right? Because when you build that wall, the foundation, the windows could stay in there and they could actually have foundation to hold them. That means your decisions are coming from a smart point of view. And usually it's the basics, right? So imagine jumping into the car. Today, when we hop in, it's all about the basics, right? We know where to put, we know the seatbelt, we know how to put our gear shift into first, we know where the clutch is, we know where the accelerator is, we know where the brake is. But I want you to just go back in time. The first time you sat in the passenger seat, you probably were lost and confused, right? Until somebody showed you where all of this is. Now, I want you to go into a real creative area of your mind and imagine just for a second, somebody who gets into your car has never been in a car, and you tell them, all right, buckle up, put your seatbelt on, it's going to save your life, right? And they're like, oh my goodness, save my life, buckle up. What are they talking about? When nobody showed them what a seatbelt looked like, how could they possibly know what it looks like, right? So until we are taught the basics, we don't really know what they are, and what we don't have is a foundation. And this was my own personal sad truth. I literally spent over $20,000 on my trainings. Oh my goodness, on chat rooms, alerts, you name it. I spent years struggling because I didn't have that foundation. And every time I was asking, can you please explain to me what is the divergence? Can you please tell me what are you talking about the price action? What do you mean about the support area? Nobody was responding to me. They were either treating it like I was born with that information or fully ignoring me, until I was in those chat rooms and I ended up losing almost $4,000 because I was chasing a trade that somebody mentioned with that understanding. And I felt like a total defeated loser because I was just I couldn't take it anymore. And I ended up quitting. I ended up quitting. But here's the thing, guys, and I can guarantee you, everybody in this room, we are all bit by the trading bug, and it never stops itching, right? It never stops itching. And do you know why? Because deep down inside, we know we can do this. And that is exactly what happened to me. I quit. I walked away. I think it was for like 4 or 5 months, but I was constantly watching others or listening to others. And I kept on saying to myself, I'm like, if they can do this, so can I. So can I. And that is when I came back. And when I came back, as I mentioned earlier, I had 3 charts. I had 3 monitors. I literally donated 2 of my monitors, which were high definition, to my garbage men. And I went down to 1 chart, 2 indicators, and I started to learn the basics. And I got really into the basics, and that changed my life. And a couple of years back, one of my students says to me, he's like, Marina, your teaching philosophy is very similar to Coach John Wooden. And I was like, who's Coach John Wooden? I never heard of the guy before. And of course, I looked him up. And if any of you know who Coach John Wooden is, he was a legendary basketball coach and then went on to being a life coach. Legendary. And his entire teaching and training and coaching philosophy was, when in doubt, get back to the basics. And I mean, this guy was incredible. He had 88 national championships, 10 NCAAs. I mean, he trained his A-star, A-list players. Yet every season, It did not matter how many competitions these guys won. You would start from the basics. How to tie your shoe, how to roll up your sock, how to dribble the ball. Why? Because egos get in the way. And if they're going to run out on that court and forget to tie their shoelace properly, they might sprain their ankle. And it doesn't matter how many national championships they have if they're sitting out on the sidelines, right? So today, just for you guys, special or offer only for the participants that are here live today, my introductory course, Bootcamp for Day Trading. And you can do it on any apparatus, laptops, desktops, phones, tablets, you name it. And all of this is one-time fee of $97. Now, I know that you guys have been here for a long time. Just give me 5 more minutes. I want you guys to be really present. If you're going to be here, please come back right now. And I want you guys to go to your computer, go to your browser and put in bootcamp for daytrading.com and follow along with me for everything that you guys are going to be getting. Bootcamp for daytrading.com. Let's go there right now. So what can you get for $97 that brings you the same return on investment? Do you guys like to play golf? I was told the other day that, I think, where is it? In Marin County in California, it's like $675 per person to play golf. Could you imagine? You want to go out to dinners and lunches with your family and friends? Me and my husband had a 24th anniversary yesterday, and we just went out, just the two of us, for a small meal and a glass of wine, way more than $97. Okay, just letting you know. So let me break down everything that you guys will be getting. And please go here, bootcampfordaytrading.com, so you could go read along with me right now. Okay, bootcampfordaytrading.com. You guys will get the full simplified day trading package. And I know how complicated it could feel to set up your platform. So I have that covered. I have a 30-minute tutorial setup. Boom, you are up and running. You do not have to worry about the setup. It's all done for you. Then we dive really deep into the market anatomy, understanding the upward trend, sideways trend, downward trend, understanding those reversals and divergences. Because once you understand that, these are going to be the biggest aha moments for you. Then we get into the defensive zone areas, the reversal patterns, the understanding the support and resistance areas, and divergences. Like I said, divergences for me are the most important thing. And if you understand how to spot them, this whole world opens up for you. Okay. And mastering the breakout trade, because once you master that, you've got a massive trade in your artillery, in your toolbox of trades. And we're going to understand how to avoid the fake out breakouts, because they happen and you want to be able to avoid them. And I show you exactly how we will do that. And you'll have unlimited access to the curriculum. This is all valued at $1,600. Okay, all that you are getting here. Here's what some of my students say, and I have students from all over the world, because that's the cool thing about trading. You can do it from anywhere in the world. Michelle, best money I'd ever spent. Derek, you're the only mentor that truly checks the work and helps you. Adrian, I'm enjoying the boot camp and learning every day. So let me share something very important with you. Remember how I asked you, how do you know you are doing it right? How do you know that you're doing it right? Who is there being your accountability person that you are asking the questions? So what I did is I have included in that one-time price fee, $97, one entire month, one-on-one mentorship with me, unlimited. You can ask me all your questions. We could do Zoom calls, send me your charts, unlimited, 1 month. I mean, this is priceless in itself. Okay, having that mentor could be what takes you to that next level in your trading. Okay, and I also have a live trade chat room where it's me, where we talk about all the different things that we are learning and implementing it in the live market with live trades. Okay, all of this valued at $2,600, but for you guys, $97. Now, I want you to take a screenshot of this. take a screenshot of this and then paste it where you'll be able to go back to it if you can't open it right now. bootcampfordaytrading.com. Okay, let me remind you what you guys are going to be getting in this $97. Everything in the course. 30 days one-on-one mentorship with me and 30 days live chat. All of this, and we all know it, is worth less than one price of a trade. The average trade is between $200 to $400. You guys definitely, come on. This is less than one trade. It is 10x your return on investment, and then you'll be able to go to 100 of these dinners. But here's a really important thing. Like I mentioned before, the room is full. It is a full house. I'm so grateful that Fausto worked so hard and Rich to bring you guys here together. But I also sell out really fast because $97 is kind of a no-brainer because of my mentorship. I could only take 25 people. So I'm just letting you know, I would definitely get on it. So I want to show you guys here. Oops, hang on a second. Hang on, I just need to move this down. Okay. Go into your browser, bootcampfordaytrading.com, and it will bring you here. Oops, hang on a second. It will bring you here. So bootcampfordaytrading.com. If you are having an issue, remember to just go in here and you'll be able to remove the HTTPS. How do you do that? I forgot now. Yeah. So remove the S if you cannot get to this is the order form. Okay. So as you can see here, one-time payment of $97. You can do two-time payment of $59, but you'll automatically, from the first payment, get all the access right away. All right. So this is the order form right here. And go to bootcampfordaytrading.com right here. And this is everything that you guys will be able to get. So again, take a screenshot of this, paste it somewhere that you will be able to return to, bootcampfordaytrading.com. Okay, there are some questions. Let me see here. John, what is your one chart and two indicators? So, oh, Courtney goes to UCLA. Nice. So I'm sure you still hear a lot about him. He was the, the legend to this day. So John, I use EMA lines. I use the 52, the 20, the 135, and the MACDs, just the regular MACDs. And I personally trade the E-minis, but the boot camp is for any instrument, any market that you guys are trading. All right, guys, let me know if there's any other questions. I'm happy to answer any more questions. And I'm super excited to see you guys inside the course. And thank you so much, Fausto, for having me. Really, really appreciate this. Thank you, everybody, for being here. And just one second here. Oops, what's happening? Okay. So, all right. Like I said here, I'm trying to remember how you can go and see where. It's kind of strange, right? I know this is in Chrome. It could only be in Chrome that you would have to remove the S from the boot camp. So I think maybe what it is if I copy this and I paste it. No, I guess not. I don't know. So you guys should not have any problems getting in. All right. So go here. One second. Oh, I just realized I probably could not even see what I was showing you. All right. Thank you, everybody, so much. It's been a real pleasure. And I hope you guys have a great rest of your evening or day. I know that for most of you guys, it's still pretty early. It's almost 8 p.m. here. Okay. Okay, I have show us something about my so you mean the ES mini trading? Yeah. So what do you guys trade? Why don't you guys tell me what you guys are trading so I could also help you and answer some of your questions. What do you guys trade? Hello, hello, hello. Let me know, what is it that you guys are trading? Is anybody in here trading the E-minis? Is anybody in here trading Amazon, Meta? How about Forex, futures, crypto? What are you guys doing right now? Gold, okay. SPY options. How is that working out for you guys? Ricky, you want to learn how to trade Forex? Okay. What would you like? Let me know. Okay, guys. Well, I think if there's no more questions, then I'm going to say thank you so much and have a great rest of your day and the rest of the week. Thank you.
Marina, that was great. Thank you so much for your presentation today. And I just want to, we're going to go into a brief intermission here. We still have about 5 or so minutes before we bring our next guest, AJ Brown from the Trading Trainer. But we're just going to do a quick intermission. But folks will be back in just about 5 minutes at 2 p.m. Eastern Time for our fifth speaker from the Trading Trainer, AJ Brown. Folks will be back in just 5 minutes. Stay tuned. Alrighty, folks, we're going to be starting out again with our fourth guest, AJ Brown. He's from The Trading Trainer. He's widely recognized as the world's most disciplined option trader. He's been actively trading equities and options since 1997 and has published daily insights for his Trading Trainer program participants every single night, 5 days a week since 2002. AJ, the stage is all yours.
Oh, thank you, sir. Everybody can hear me okay? I'm going to take that as a... So I'm going to be giving you, I actually structured my presentation less as a presentation, more as kind of an educational thing. So what I'm going to suggest to all of you, I'm going to talk pretty fast because I actually have a lot of material. I don't want them to have to cut me off at the end. I'm going to suggest that you take some good notes, right? All right. So my presentation, your guide to escaping the pitfalls of trading, leveraging options premium selling. That's really my claim to fame, is options premium selling. And here's some facts, right? A lot of uncertainty with what is happening in the world right now, but what's happening in the markets, if you play it right, it can set you up for months, if not years to come, right? Because money, you got to remember this, money is not created or destroyed in the markets. So despite, you know, what the talking heads are saying when, you know, the market goes down a day and they're like, oh, so many billions of dollars, just trillions of dollars just left the market. It actually is just moving from one person's hand to another, right? So the key is making sure you put yourself on the correct side of the transaction, right? If people are buying and they're raising the price of something, you should be selling. If people are selling and lowering the price, you should be buying, right? You got to put yourself where you're going to be making the profit. Now, I just wanted to throw this in here, and this has, well, I'll just read it first. This is my mentor, and my mentor, you know, I learned how to do a lot of this options trading back in the middle to late 90s, right? And so my mentor is still around, although he's also now pushing 90 himself. But he posted this on Facebook. He's like, I just hate to be the guy to break this to you, but most of the self-described experts out there have their heads, I'm not going to say what the, firmly up their arse, right? There are shortcuts to success, but none involve magic. So shame on you if you get involved in some scheme that you know sounds too good to be true. That's why I like partnering with Cyber Trading University and Fausto on these events, because I know I've known Fausto for, gosh, 15 plus years now, and I know how he scrutinizes who's going to be on these events. But beware, right? There's a lot of stuff out there, especially in trading the markets, that you know it's too good to be true. So, you know, first of all, there's a lot of emotions that can happen no matter what you're trading, you know, Forex, options, crypto. To stay disciplined, make sure, write this down, plan your trade. Always do this, right? Plan your trade, trade your plan. I know that sounds like review, but so many people, you know, it's simple, but not easy, right? A lot of people that I look over their shoulder, some of them don't even plan at all, but many of them, when they do plan, they wind up, you know, not trading their plan at all anyway. So keep that in mind, right? And when you have a plan, make sure you keep it simple and concise, right? I always, when I'm, you know, putting together my plans, whether they are like I used to when I first started on 3x5 cards, or now they're all electronic in the form of Slack messages, but whatever, it doesn't matter the medium. I make sure that it's simple enough that a 10-year-old or a fourth grader can execute it, right? I don't want to be in the heat of the moment and be looking at my plan and not being able to make sense of it. So keep that in mind when you're crafting your trade plans, and back test your plans on similar patterns. In fact, I also tell my program participants to forward test their plans. That means, you know, basically paper trading, but the difference is with forward testing is you're actually, you know, in real time on, you know, potentially similar patterns, seeing how your plan would work. Don't forget as well, because a lot of people forget this, risk management is the #1 thing when you, again, doesn't matter what you're trading or what, you're investing in, knowing your max loss. A lot of folks again, looking over the shoulder of many investors, many traders, they don't pay attention to what is their potential loss. So make sure risk management's at the top of your list. Then, of course, being able to recognize patterns, that's probably second. Third is what sort of trading strategy are you going to apply to those patterns? And finally, the timing, right? So those are the four things. And that's actually in the order that, at least with my type of trading, that's the order of importance. Risk management, number one, being able to recognize patterns, then being able to, find the tool in your toolbox with your trading strategies to, utilize that pattern for profits, and then ultimately timing. So before I go any further, I want to make sure I'm clear. What would be ideal for you with this presentation? Are you somebody who's at this multi-speaker event learning how to invest, and your goal is to be able to do it all by yourself? That's option A. Learn how to fish and be 100% self-reliant. Number two would be learn how to invest, but also have seasoned investors around you, reviewing your investments before you make them. Maybe it's C. Maybe you're not into really like wrapping your head around this stuff at all. What you want to do is just be around those seasoned investors and kind of, do what they're doing. Or maybe you're here for some other reason. Let me know. Okay, I'm getting some of the answers in. And all right, it's a little bit all over the board, mostly A's and B's. So I'm going to structure my training a little bit. I'll skip some stuff just so I can. So let's focus on this. If you earn 6% on your money every month, your investment is more than going to double every year. Now, how do I know? Well, first of all, you guys probably have all seen that whole penny thing where, hey, would you rather take $50,000 right now, or would you rather take a penny that doubles every year or every day for a month, right? And you know that in the beginning, you're like a penny. Maybe I should take the $50,000 and run. But by the end of the month, that penny is up, if it's 31 days, 32 days, it's up over $10 million. So the penny is the answer. But what that doesn't really tell you is that you've got to be in the game for the month, and you have to be taking action, right? You have to be making sure that penny doubles. And that's where in lies the rub, right? Because in the beginning, when you're watching that penny double, it's like 2 cents, 4 cents, 8 cents. It's not really worth the amount of effort, at least if you're, instant gratification oriented, which most of us are. I know I am, right? And you literally have to stick with it for days and days and days before, you're almost towards the end of the month before it really culminates. And with all the shiny objects out there being presented in front of new investors, a lot of times, before you even let what you've learned start to work, you're already on to the next, best, greatest thing or hottest topic. I mean, I've seen things come and go. I mean, Forex is still a big thing, but there was a point 15 years ago where everybody was talking Forex. Before that, binary options, right? And, then crypto came along, all of this stuff. And I'm not saying any one of those is bad or good. I'm just saying pick one that works with your lifestyle, right? And then master it and stick with it, because they all work, right? There's all experts in it. You just got to figure out what works for you. Now, what I did was I realized that, you're not going to really be doubling your portfolio every day. You may, on a good day, right, be able to double your trades and good stuff like that. But for the most part, that ain't going to happen. In fact, if you can double your portfolio every year, that's a big deal. And that's where I started from. I'm like, well, I want to double my portfolio every year. And so what I did is I realized that even with simple interest, not even cumulative interest, if I just focus on that 6% number that I'm going to get to. Now, the truth is with the trading strategies and following along with my program participants, we're actually, making more like 10 or 11% every month, which means we're actually doubling our portfolios every 5 or 6 months. But, you aim for the moon and then maybe you'll get to the stars. So you focus on this. You start with $1,000 in your trading account, which a lot of our option traders, that's about where they start. Then in the first year, it's grown, right? It's $2,012. Second year, it's about $4,000, right? In 5 years, you're just under $33,000. And in 10 years, you're a bona fide millionaire. And it just starts to go up from there. And so now you want to know about a trading strategy or trading strategies where, you could put up most of your portfolio and not have to like babysit and get these type of returns. In fact, let me just put it out there. Right now, being a millionaire, I mean, when I was a kid in the 1970s, being a millionaire, I mean, you'd watch Chips or you watch the Dukes of Hazzard and $1 million. That was always what the criminal had stolen, right? Charlie's Angels. Oh my God, they took $1 million. But nowadays, everybody's a millionaire. The key is you want to grow yourself to a $10 million or more portfolio. So you're going to, focus on that a little bit more. All right. The thing I really like is that if you can grow your portfolio to a critical mass, right? Like $100,000 portfolio, and you use these type of strategies, you're going to generate more than $100,000 a year. Now, right now, the median income in the U.S. is $87,000. Now, I know if you're on the left or the right coast, you're making a lot more than that. But overall, that is the median income. So, if you could figure out your expenses, grow your portfolio to a certain amount, what I don't want you to do is quit your job and expect, that there's a no money down way to generate a bunch of money, even with options, even with day trading, even with, whatever it is, you need to have money to start. So if it's possible, you do this in parallel. And so for me, when I was looking for trading in the late 90s, I was working for Hewlett Packard. I needed something that was end of day because I was pretty busy at Hewlett Packard during the day. I needed to be able to do most of my trading end of day. So that's what I focus on is, doing and now, I haven't had a job since 2005. I hit my critical mass actually well before 2005. I just kept going with Hewlett Packard until 2005. I haven't had a job since 2005. Now that I'm in my early 50s, I don't know what I was thinking, but I now have a toddler. And so I spend most of my day with my toddler. And then once my toddler's in bed and I've had a time to kind of relax with my wife, I then at around 10 o'clock at night, sit down in front of my computer and figure out, what I'm going to do for the next day. So end of day trading is really where I first started because of my day job, but now just because I love freaking life, right? And I don't want to spend time out of my day in front of the computer. I rather program my automatic traders the night before and let them go. So the scoop is grow your portfolio to a critical mass without taking money out of it. And then once it's there, then you can start living off of it, right? So what am I talking about today? I'm talking about selling theta decay optimized option premium. Now that's a lot of freaking word salad, right? What I'm really saying is I'm profiting on time passing by. A lot of people think of options as instruments to leverage stock movements, right? And that is one way they work. But there's other things that influence the option price, like changes in implied volatility is a big one. And another one is just time passing by. You might have heard that options are wasting assets. And I focus on that one because guess what? Time passes by. I know every time I look in the mirror that time has passed by when I see the number of wrinkles on my face. So you can't stop that. And that's a very reliable profit mechanism on options. So before I go any further, I just want to make sure you guys have been paying attention. So what is it? What is the minimum returns we must make monthly on our portfolio if we want to more than double our money annually? What did I say? 0.5%, 1.5%, 5%, 6%, 10%. What do you think? Courtney's got it right. She already typed it in. John got it right. What I said was, let's focus on 6%. If you can do more, that's great. Larry got it right. If you could do more, that's great, but let's aim for 6%. Okay, so I already told you this. Now, a lot of people say, okay, you're talking option strategies now. I might just tune out because aren't those suckers risky? Well, you know that when it comes to options, well, when it comes to, let's say, for instance, equities or foreign currencies or even crypto, right? The scoop is we generally have to buy low, sell high. That's called going long. You have one strategy in your pocket, right? If in some cases you can actually short the symbol, right? That means you sell to open, buy to close. You sell to open high, buy to close low. So you make money when the investment goes down. So two strategies. But the beauty that I found early on in options was you can make money when the underlying symbol goes sideways, right? You can also make money on time passing by. In fact, you can make money on whether there's fear or confidence in the market. In fact, the mathematicians out there have said that with different option strategies, that means combining different options together and or selecting the options, because some people don't realize this, but the expiration date and the strike price of the options, how you select those changes how they behave. There's 27 different ways to profit. Imagine 27 different tools in your toolbox to profit on all the various patterns the markets throw at you, right? So that's what attracted me to the options, was the flexibility to recognize any pattern out there and then dig into my toolbox and not just have one or two strategies to profit on them. So I actually think it's the opposite of risky. I think it actually gives us a way to ultimately hedge against risks, right? So then a lot of people say, okay, you piqued my interest. You've piqued my interest. What is an option? Well, the nerds out there will tell you it's a financial instrument called a derivative. What I'll tell you is these things are typically bought and sold to hedge risk. And the ones I work on, the equity options, are against stocks, indexes, and ETFs, right? But what I'm doing, rather than following the masses there, is I'm actually selling them to gather their premiums, because I like to start kind of an income generating way with them. So first, let me also tell you, so again, in case my training is cut off, if you ever want to check some stuff out, if you want to reach out to us, just jot that down. I didn't give this to the CTU guys, this link, but this is just, I accumulate some links out there where you can get, some stuff from me, free indicators, any sort of beta tools that we're working on. If you want to follow us on the socials, it's called links.tt. That's the name of my company, Trading Trainer. Links.tt4.me. Oh, cool. I just noticed in the chat that the CTU guys threw that in there. So if you want to check that out, go for it, right? And I'm not gonna go through this too much, because you guys, you already know who I am. AJ Brown, right? I founded Trading Trainer. They already put all this into the opening. If you go to any successful option trader, in the last, I'd say 20, 25 years, I guarantee a lot of them have this home study course I put out back in 2008 on their bookshelf. And I want you to realize that I'm a learner just like you. I've got a couple of engineering degrees that I actually never really used. When I worked at Hewlett Packard, I was actually, in their marketing, their product marketing division. I know how to talk to engineers, which they speak their own language, but I've never actually done it ever since leaving and getting my master's degree in automatic controls. I've got also a very strong background in commercial business and investing. And in the last 17 years, I really have focused on how to be a good teacher. And I'm a practitioner of this thing called accelerated learning methods. It's a way to get folks like me that are older, that have to learn different than, young kids. It's a way to get us to remember stuff. So that's kind of a little bit about me. In the 90s, I spent $27,000 on seminars that first year. And back then, you didn't tune in online. I mean, they had WebEx, but man, nobody was really using. You had to go to a hotel on a Saturday. You spent a half day on a hotel. Maybe some of you remember this. And then somehow you'd wind up spending like $400 and you'd come back for all day Sunday. And the next thing you know, you were on a plane going to some 4 or 5 day intensive training. I spent, that was actually more than my undergrad degree cost. And then the crux of it is I followed a lot of these programs, or I thought I was, and I wound up giving $85,000 back to the markets that first year. That was more than all of my degrees, including my master degree. The key here, this is the code. You might want to take notes here. Number one, I had to learn to stop chasing shiny objects, settle on one type of investing, and just learn it well, right? And then here's the key. Find a mentor, right, who is currently doing what you want to be doing. And this is the most important part. And I'm telling you from my trial and error, they know how to teach, right? Because I have hired so many folks that are so good at trading options in so many different ways. And man, they could not convey what they knew to me. They were good at their own thing, but man, they couldn't teach me how to do it. This is called, by the way, in the education world, learning by guided discovery instead of trial and error. Trial and error took me 7 years to kind of figure things out. It wasn't until about 2003, 2004 that things started to make sense for me after, getting into investing in the late 90s, right? Now, my program participants are picking it up literally in weeks. Then I want you to make sure you join an investment group, right? At HP, I learned something really clear. Like Canon or Epson would release a new printer. You know what we would do at HP? We would buy that printer. We would take it all apart, figure out how it worked, figured out any new features or benefits that they, put into the design. And then we would increment and do one thing better and release our new printer, right? In other words, I don't want you to think that joining an investment group, you still have to do everything on your own. The point is I want you to look over other people's shoulders, and I want you to let them look over your shoulder. And I call it not cheating, leveraging with pride. If somebody's doing, got an investment going that's good, you should do it too, right? And last but not least, I want you to surround yourself with like-minded investors, right? That's one thing I did wrong. My family was not really interested in trading the markets. My family was rather risk adverse. And every time I had a losing trade, they'd tell me that I'm crazy. Now, they never did make it big. And my portfolio is well over 8 figures now. So, but just make sure you surround yourself with somebody who's going to, with like-minded investors that be like, yeah, a bad day. And also who will celebrate your wins with you, right? Those are the 4 things I learned in order to crack the code. All right. Last thing I want you to know about me, then we'll get back to the subject at hand. I have a foundation that I started. I take inner city kids. I started this back in 2003, right? With 9 kids. There they are. This was an old picture back in Denver. It was actually Aurora, kind of a rougher suburb of Denver. And I'll tell you, all of those kids, I gave each one of them $2,000 of my own dollars, and each one of those kids paid me back. In fact, one of them's a finance professor at a community college in Denver. And they all went off. We actually learned how to do our trading at the library. None of them had computers to trade on. And the library limited us to 30 minutes of internet time a day. So if I could teach these kids, and every year we've been teaching more, and I have moved my foundation from the Denver area to the Chicago area. We're working with South Side Chicago kids. And so that's kind of cool. I just wanted you to know about my foundation. That's where all the profits of my for-profit trading trainer school actually goes to keep bringing this education to the kids. Last year, after taking a little pause because of the pandemic, last year we graduated 107 kids. All right, back to premium. How do we sell this stuff? 4 simple transactions. Ready? Covered calls, covered puts. And by the way, today I'm going to be talking a lot about covered calls and bull call diagonal debit spreads, but you would behoove yourself to write down writing covered puts and go either you're going to, figure it out from one of us at this multi-speaker event, or you're going to go do some research on, the Google machine yourself. But for what's coming up in the 2025, 2026 at a minimum, you need to know how to write covered puts, in my humble opinion. So go, put it on your to-do list to learn how to flip the covered call upside down. Also, write covered calls against leaps, bull call diagonal debit spread, and the corollary to writing covered puts is the bear put diagonal debit spread. That's how the academicians call it. I call it supercharging the covered put writing and supercharging the covered call writing. And now that you've got those 4 written down, I want you to put like an asterisk against writing covered calls against leaps, and writing covered puts against leaps. Those all require a cash account. And depending on where you're at and who your broker is, those can actually all be done in a retirement account, right? Tax-free, tax-deferred. Hopefully you're doing tax-free Roth, right? This guy over here, because of the initial covering position, you need to have a margin account. In order to write a covered put, you start off by shorting an underlying symbol, right? So you need a margin account. What's nice though, and let me see if I can figure out how to draw on the screen. I think I can do it just with this thing right here. Yeah. These 2 are related and these 2 are related. So if you still have a cash account and you want to be able to take advantage of the patterns that are for covered puts, most of the time you can substitute and do this guy with a cash account. So again, kind of giving some advanced topics here. I just wanted to make sure you're on the same page with me. All right. So let's talk about option premium. I keep throwing this money around. First of all, realize when you look up an option price on the big board and you see it going up and down, it's really composed of 2 components, something I call the in-the-money value and something I call the premium value. Now, again, if you talk to the academicians, the nerds out there, they won't call it in the money. They'll call it intrinsic value. And they won't call it premium value. They'll call it extrinsic value. Sometimes you'll hear the premium value called time value. That actually irks me because there's a lot more going on in that premium value than just time. So you'll never hear me. Yeah, you might. Sometimes I slip. But in the most part, you'll see that I talk about the in-the-money value and the premium value. Now, here's where I want to start with this whole, how we sell premium, right? I looked up yesterday, end of day, Oscar Health. Oscar Health is a company out there who's kind of, realizing that there's a niche for getting personal health care rather than going through insurance and primary care. And they think that's broken. And so Oscar Health's in a few states and they're expanding all the time. Anyway, Oscar Health closed at $16.25 a share yesterday. So if I bought some Oscar Health, right, and then immediately sold the Oscar March 21, so this is going to expire on the 3rd Friday of March, and the strike price is $17. If I immediately sold that, I'd get 75 cents back. Let me see if I can, by the way, clear all the chicken scratch that I put on the screen. Clear all drawings. There we go. So here's the scoop. If I did this, first of all, by getting that 75 cents back, that would act as kind of a discount on that stock, right? I'd be able to basically put out less money on buying a share of that stock. So it acts as kind of a discount on the underlying security. But realize it expires on March 21st. So the minute I sell that, it's got a timer, right? And it's losing value. And ultimately, on March 21st, the premium component of that option, and this is an out-of-the-money option, that premium component of that option is going to be 0, right? That means I get to keep all the, so it acts as kind of a coupon. I've sold a coupon and nobody ever uses it. The other thing is I even though it's not officially a dividend, like a company dividend, options are sold in lots of 100, right? 100 shares. They're called contracts. So every contract I sell in this case, I'm going to make $75, right? All right, let's keep going. Now, 3 things are going to happen. What happens if Oscar Health closes above $17 on March 21st? Well, first of all, I paid $16.25 a share. If I get exercised at $17, I'm going to get $17 back if it gets exercised. Plus, I get to keep that 75 cents I collected per share in the first place. So that's $1.50 in total profit so far, right? 75 cents on getting exercised and 75 cents by selling that premium, $1.50. That's 9.7%. Remember, our number is 6% that we're looking for, right? So that's good. But now, what if it goes sideways? What if Oscar Health goes sideways? In fact, this is my ideal situation. I would rather it go sideways because, again, I bought it for $16.25 a share. I get my 75 cents per share back. I get to keep that 75 cents because it expires worthless. I've made 4.8% ROI so far. And then because I get to keep the stock, I get to do it again next month. In fact, monthly options expire every 3rd Friday of the month. So every 3rd Friday of the month is payday for me, right? So I like to do it again and again and again, basically renting out my stock. Now, what about if Oscar Health drops by March 21st? Well, first of all, I'm going to, in a few minutes, show you how you can reduce the risk on return even further. But I want to show you inherent in this strategy is that because we collected 75 cents up front, we've reduced our break-even price. We've basically created a profit buffer, meaning the stock would have to go all the way down below $15.50 before we were trading in the red. So inherent in this strategy, we create a profit buffer as well as the instant dividend, as well as the expiring coupon scenario, as well as the discount on the underlying security. So, well, I just gave you the answers. I'd like you to answer all that applies. What does investing by selling premium create? Does it create an instant dividend, a discount on a security, a profit buffer? Does it act like an expiring coupon? Now, I notice I said answer all that applies, and I kind of gave you the answer ahead of time. It's all of them, right? And I like all these aspects of selling premium. Now, before I go any further, I would be remiss to not show you some real trades. This is one, and I want you to pay attention here because I want you to look at the fact that you don't need to have a lot of stocks to do this on. Notice I started this trade on Ford back in January, not of 2025, 2024. And the first month I collected 23 cents. The next month I collected 80 cents, 35 cents, 45 cents. So basically every month I'm just renting out my Ford stock by selling the call against it. Ultimately, I got exercised out last July. But what did I do? And by the way, from January to July, I walked away with 30, it depends on, again, the accounting method, about 30%, right? What did I do? In August, I reopened it because Ford's a great stock to sell premium on. And I took my gains from the first time around and just rolled them in. The first time around, I was doing 900 shares. Now I'm doing 1,000 shares, right? I bought Ford stock and again, did it all the way up through January. Just notice the amount of time. See, I'm not out there looking for the next best stock to trade. All I'm doing is once a month, I'm doing a single transaction. I'm selling premium and I'm just collecting it. This time, I walked away with another 12% for the few months that I was in it, right? So not bad for a basic covered call writing strategy. That was a real trade. A lot of my program participants did. So now I'm going to start asking you questions. They're going to get harder here. So if you kind of dozed off a little bit there for the first part of my presentation, let's ramp this up. How can we make this a cheaper investment, lower our investment, and increase our returns, and in some cases, even convert what would need to be a margin trade into a crash trade? What should we do? Should we A, sell out in time options, B, replace the security with options trading at parity, maybe C, give up and buy mutual funds, or D, what you're talking about isn't even possible? What do you guys think? All right. If you came up with replacing the security with options trading at parity, you're on the right track. Now, a lot of people might have been thinking sell out in time options. I saw some of those answers coming through the chat. You don't want to go further out than about 3 to 5 weeks. Put that in your notes, right? Because then the obligation you take on and the amount of time you're in the option doesn't pay for itself in the theta decay, right? In other words, options get the most bang for their buck when it comes to selling premium that's optimized for time passing by when they're about 3 to 5 weeks to expiration. So selling farther out in time, that's not what we want to do. What we want to do is replace the security with an option trading at parity. So now you're saying, well, what the heck is an option trading at parity? It's the most premium, right? That premium component. It's the most when the option is at the money. But when we go very deep in the money, the option has very little premium, and we actually target less than 5%, and it's almost completely in the money value. Now, again, gosh, that's a lot of word salad. Let me summarize it. We go deep in the money and we'll get an option that behaves like the stock or the ETF or the index, right? It's going to move dollar for dollar. So if the stock goes up $1, this substitute option will go up $1, right? But the substitute option is going to be at a much cheaper price. And now you're saying to yourself, okay, I'm going to substitute a stock with an option, but this option has an expiration date. How far out should we go? Well, we want to go far enough out in time so that we can not interfere with selling many cycles of that premium. You saw here, I sold what? 1, 2, 3, 4. The previous month, 1, 2, 3, 4, 5 months, right? If I kind of foreshadow here, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. In fact, on average, our positions last about 5 months, but it's a pretty flat bell curve. Some of them last 2 months. Some of them last 8 months, right? 8 months is kind of the extreme. I've had some that have lasted longer than 8 months, but I can count them on my fingers and toes. And I've been doing this now for just under, 30 years. So the magic number is, let's go at least 8 months out. And realize, you can go 8 months out, but if you go a little bit further out to the next leap, leaps are options that expire in January, you'll have more liquidity, more of a market. So we typically use the leaps, not always, right? Sometimes we can find enough liquidity, like in this case, in the October, November options, but Most times we'll go out to, in our case, January 2026. So remember that Oscar Health example? I used end of day prices from yesterday. I could buy Oscar Health, or I could buy the Oscar Health $5 call for cheaper, and that's my substitute option. In this case, this Oscar January 2026 $5 call, it's got 3% extrinsic value. In other words, it's going to move pretty much dollar for dollar, and I'm getting it for about 2/3 the price. So I buy my Oscar substitute option. I still sell the same, at the money option that expires March 21. I get my instant dividend to $75. So the big question is, what happens if Oscar Health goes up? Well, I'm going to get exercise. Now, I'm going to get exercise for the difference between the two strike prices. So the $5 substitute option strike price and the $17 front month option, I'm going to get $12. So you can see here, and my numbers are getting cut off here. My presentation has some numbers cutting off, but you can see here that I made over 30 cents per share profit plus the 75 cents. There's $1.05 in total profit. That's 9.6% ROI, right? Just by doing these trades one right after each other. But now, what if Oscar Health goes sideways? Okay, so we buy it at a discount for $11.70. We keep the 75 cents, and we have made 6.8% ROI so far. We're going to do it again and again and again, right? This is what I like. I like collecting the premiums and not getting exercised for as long as possible. And 6.8%, remember, our goal is 6% or more. That fits the bill. Now, what happens if it drops? Well, just like in the covered call strategy, this bull call diagonal debit spread strategy has a profit buffer built in, right? We reduce our break-even price. Now, I am going to show you, like I told you earlier, I'm going to show you how we reduce our risk, our risk on return even further. But just know, inherent in these strategies is this profit buffer. All right, so I have a second. I want to show you my AT&T. Very similar to what I did with Ford, except instead of using the stock, I bought a substitute option. This one I actually started all the way back in November 2023. And then once a month, I sold premium, sold premium, sold premium, sold premium, got exercised. And then what did I do in June? I waited because AT&T had a couple of, but I waited for the perfect opportunity. And I got back in September. In fact, I'll be honest, I've been trading the same 20 to 30 underlying symbols, God, for however long, 20 years. I just am able to take the same symbols. They're boring stocks. You're not going to find them on the high flyer list. In fact, we like stocks that aren't in the news, right? Because we just want them to be going sideways, and we just want to sell premium on them every month, creating that income. Look at this. The first time around, I walked away with 56% on my buy. The second time around, I almost doubled my money just in the 1, 2, 3, 4, 5, 92.7% ROI. There's something to substituting the stock with an option, or the underlying symbol, the ETF. All right. You get the picture. Now, let's talk about one of the most important parts, and then we'll sum up my presentation. How can we drastically reduce our return on risk? Should we sell half as much option premium? Should we go farther out in time with the options we're selling? Should we collar the investment by marrying a protective option, or is what we're talking about not even possible? What do you think? if you're saying collar the investment by marrying a protective option, I see a lot of you said that. You're absolutely right. Let me show you actually a trade where this is just class. This is one of those ones that did last past 8 months, but I just want to show you some highlights out of it, right? So I bought 600 shares of this stock, and then I sold the premium, and immediately the same day that I sold the premium, I bought myself a protective put option, right? So let's do the math here. 34.73. Then I made $1.76, and then I went ahead and spent $4.75. Now time went by. I got to the third Friday of the month. That $1.76 wound up expiring worthless, so I got to keep that whole amount. And then I didn't need the insurance anymore. I didn't need the protective option. The protective option works perfect when you have that obligation, that premium selling obligation. But once you're out of it, you can roll that protective option out to the next one. And in rolling it out, I sold for $4.75. I sold it for $5.90. So check it out. Not only do I get, in this case, it was about 24 days worth of insurance to make sure that if this thing went against me, it wouldn't blow my, blow out my portfolio. But now, because of my strategic timing, a lot of times when you talk about hedging your trades, that usually costs people money, when you buy that insurance. But because we're selecting the option 3 to 6 months, we're picking the right strike price, and we're timing it right, we actually turn our collar into a moneymaker. This is like frosting on the cake. We made the $1.76, and then what did we make here? About what is that? $1.15 additional. I've turned the insurance into a whole nother trade. I do that again. $1.47, bought the insurance for $3 and a penny, sold the insurance when I didn't need it anymore for $3.62. Again, sold the premium, $1.50. Bought the insurance, $1.20. In this case, the underlying symbol actually moved. So when I sold back the insurance, I actually got a little payout, $3.07. Did it again. And so you just rinse and repeat. So yes, I've added an additional trade every month. So in addition to selling the premium, on the same day, I buy protection. And then once the premium's gone, I sell the protection. So now there's 2 transactions a month instead of 1. And on the day that I sell the premium, I also buy the protection. So, but it gives you so much peace of mind. Here's the other thing. Notice this column here where it talks about the break-even price. Notice that when I sold my protection back just that first month, my break-even price after I collected this premium, it dropped all the way to $31.86. Now, I want you to notice when I sell my protection, it's at the $34 strike price. So what does that mean? What does it mean to have your protection protecting you more than what your break-even price is? Think about that a second. This is that trade, by the way. Here's that break-even price. Now, I want you to know, first of all, I want you to notice that the profits don't accrue linearly. They accrue parabolically. That's that compounding. So the longer I can leave my symbol in place and just continually sell premium against it every month, the more that the profits go exponential on me. And now there's the range low and the range high. That means either getting exercised or getting risked out, getting stopped out. And what's beauty is I'm profiting on time passing by. A lot of people come to me and say, AJ, they're not sure they really can wrap their heads around holding a position and having it profit based on the amount of time you hold it. Instead, they're like, what's your win-loss ratio? Well, the beautiful part is if the underlying symbol goes against me, I still work out with money, right? If it goes for me in 5 months, I've made 65%. If the underlying symbol goes against me, I still make 50%, right? That's the beauty. I don't care whether the underlying symbol is a win or a loss because I just care, within 1 month, my overall position is risk-free. Do you guys get that? I just have to hold my position for a month and continue to just sell premium and roll out the insurance every month. And very quickly, it's a risk-free position, and it's just, there's no money on the table. It's all the dealer's money. What do we have when our cost basis, our break-even price is less than our protective bailout price? Is it a risk-free investment? Is it a losing trade? Is it too much complexity? Is 2 trades a month too complex for you? Is all of this a pipe dream? Has AJ been hitting the crack pipe? It's a risk-free investment. All right, let's review, and then let's button this up. 3 steps. You're going to buy or short an underlying security, a stock, an ETF, an index. Or even better, you're going to buy a substitute option trading at parity. And again, go research writing covered puts and doing legging into bull call diagonal debit spreads and bear put diagonal debit spreads. Step 2, you're going to sell a near term 3 to 5 weeks at the money option for its premium value. You're going to collect an instant dividend and create that profit buffer. And finally, you're going to collar with a married option that's 3 to 6 months out in expiration to protect your investment. And then you're going to rinse and repeat steps 2 and 3 every month. And you'll notice on all my trades that I leg into the positions. That means I do each one. I look for these sideways stocks like Oscar Health. If you pull up that ticker right now, it's one of those. I look for those sideways stocks. And if I'm at the bottom of a sideways channel, that's where I use the covered call. So I'll buy the stock or I'll buy the substitute option. I'll put a stop loss in place. Then when it peaks, I sell the call. I buy the protective option. The call expires on the 3rd Friday of the month. I sell the protective option for an additional profit. Rinse and repeat. That covered put, which we didn't really talk about much today, you start at the top. You short or you buy a substitute put option. Again, put a stop loss in place to the top side. Sell the near-term put, buy a protective call. Near-term put expires worthless. Protective call, you roll out, rinse and repeat, steps 2 and 3. How would you like to never miss a pick, minimize the amount of time you spend away from your loved ones, have support whenever you need it? Because that's what we're talking about, right? We're talking about how to do this, but also save time, create clarity, and get results. So would it be okay if I take just a couple of these last minutes and tell you a little bit about my materials, my training, and my tools to see if they might be a match for you? Thank you. What I've got in my program is for someone who doesn't want to pay for multiple data subscription, wants everything they need in one place, doesn't want to miss any opportunities. They want to spend more time doing other things, and they don't want to be doing this alone. They want step-by-step instructions. Summed up, it's for somebody who wants consistent and reliable results, right? This is a testimonial about Charlene. I'm going to bypass it just so I don't, have them cut me off early. But Charlene was a great story about how she got cancer, but then survived and needed a source of income, and now she sells premium. So there's a few things part of this program, right? What's it all worth to you? We give you video tutorials. In fact, I've got my web portal. We give you members only access to this here web portal right here. And we've got all sorts of things that you access, including the video tutorials on how to get it done. We have monthly live lecture classes and all their replays. I've been running this program since 2007. We have the replays going all the way back to 2007. We also have a bunch of screeners. You might be like, how do I find the underlying stocks? We actually have 4 different screeners that run every evening to help us find the underlying symbols we should pull these strategies on. We've got planning tools, right? I talked about how important it is to trade your plan and understand your risk. We have all the planning tools that you can have and take with you. And this is what a lot of people like. The weekly live workshops. People bring their tickers every Thursday. We're having one this evening at 9 p.m. Eastern time. Right? They bring their tickers, they throw them at myself and my coach, my head coach. And we kind of help people. We call it learn by doing, right? Learn while you earn. That's even better. I just thought of that. We go through their tickers and we help them understand why it might be good or bad. We pick one, we go through it thoroughly, we plan it out. In fact, I've had people come to the end of their program and then they renew. And I'm like, why haven't you picked it up? I used to interview them. Why are you coming back? They're like, every Thursday you give us a whole trade plan in order to trade the next week. Why would I give that up? It's cheaper to be part of your program and attend your workshops than it is for me to sit down and, find. So very good. We also have trade review. If you want to plan your own trades, you send them in through our private messaging link and we'll review them for you and tell you whether we think you missed something or not. Invaluable. So what's all that worth to you? Because there's also a double your money back guarantee. I want you to try our program for 6 months. This is how long my, folks in my foundation do the program, is 6 months. Now, I don't think it's going to take you 6 months. I think it's going to take you about 2 to 3 weeks to pick it up. But I want you to come every Thursday, get a free trade plan, learn while you earn. I want you to be able to send, all your own trade plans to us for review. I want to look over your shoulder. So I want you to try it for 6 months. At the end of 6 months, if you're not turning a profit, not only will I give you the money that you paid for my program, I'll double it. That's how confident I am that the 6 months will be worth your while. I told you my head coach and I run the workshops. We also have coaching. I'm going to give you a free coaching session with one of our coaches. They'll help you, you tell them where you are right now, where you want to be at the end of the 6 months, and they'll help you navigate how best to get from point A to point B. So if I add in the double your money back guarantee and the bonus strategy session, now what's it all worth to you? Think about a number. Because if you go on my website, you'll see that the 6-month program is about $100 a month, $597. But because I love Cyber Trading University, Fausto, like I said, I've known him since Hammer was a hatchet. He's top notch and he puts together a good event. I'm taking $100 off for you guys. So for you guys at this event, we're tracking it. You're going to get $497. Here's how you do it. You go to optioninvesting.org/CTU, and then you have to put that promo code into the discount. In fact, what I want to do is I want to try that out just to make sure my programmers did it right. So here we go. I'm at the optioninvesting.org/CTU. And then over here, I'm going to say 100, capital D, capital I, capital S, capital C. Click apply. Yep. Dropped it to $497. So you can pay with a credit card. You can pay with PayPal. So that's how you do that. If you have any sort of problems, you can phone us. We accept orders over the phone as well, and we'll make sure we track them correctly. That's our phone number. And folks, good luck. Please pursue that covered put writing, whether you do it with us, whether you do it with somebody else, or whether you do it on your own. I think that's going to be invaluable. I hope you got a lot out of my presentation. Thank you, Fausto and team.
AJ, thanks for coming here. And that is awesome. Appreciate you taking the time. And everybody just take him up on his offer. You got the QR code up there and just scan it and go from there.
Fausto, you're my hero.
AJ, it's always great to hear from you. And I got to get you back on my podcast. Let me tell you, it did great. Everyone loved it. And love to chat with you again and kind of brainstorm, but love you too, my man.
Can't wait. Talk to you soon.
Save too. Keep straight safe. All right, everyone. So before we bring in our next speaker, I just want to just go out there and just show you what's going on in the market. And like as always, see what's happening. We're literally getting to the end of the day. We got about an hour to go. And the market is obviously not looking too good. We just took a big turn right here. The market just dropped 300 smacking points right now. Testing the lows of the day, major support levels, a lot of bleeding going on. Amazon finally broke 200. iBid is down about $1 at the lows of the day. What else we got here? Palantir just broke a big support levels, which is right around the 80, almost there. SMCI, another one close to the lows of the day. So not looking too good. Like I said, tomorrow's numbers are really going to be key. And we need to see what's going to happen with these job reports and see what's going on. But tariffs obviously not looking good. I told you I got out of my positions on Monday. And even though those rally came back, it doesn't still look good. So big thing we got to focus on is cash is king. But what is very important is this. The next speaker. Our next speaker, I think everyone is here ready to listen to a little bit what he has to say. Jerry Allison, which is an amazing accountant when it comes to trading. They've been around since as long as I know them for. I mean, there's only one of the company out there that I know, and there's not too many people that could kind of answer these questions in detail. I know everyone here would love to ask questions on tax purposes, on trading, and Jerry's been doing this for over 30 years. He's does some advanced education, how to basically indoctrinate businesses with mastermind in the mathematics. He's also an educator, a mentor, former university college professor too, teaches businesses how to effectively run their accounting. He helps set up certain companies for people like you to make sure you make the right choices on your trading strategies, because accounting is not easy when it comes to trading. It is a little bit of a science. Not typical accountants know, how to deal with it. So you don't know if you're going to be hit with capital gains and all that stuff, but he's here to kind of explain it. So Jerry, it is absolutely great to have you here. And I know you're our last speaker. I know everyone's looking forward to listening to what you have to say. So like I said, the stage is all yours, my friend.
Well, thanks, Fausto. That was a great introduction. I'm almost flattered myself. So we are going to talk about taxes today. And of course, this is the time of year where everybody should be getting their taxes ready and to file for 2024. So it's kind of an appropriate thing at this point in time that we actually look at this. And taxes for trading is, like as Fausto said, a little bit different. And you really need somebody that knows what's going on. We will actually look at some things today, some strategies that you can use starting in 2025 and then going forward. And then you can get some ideas about things. I'm not going to try to sell you anything, but I am going to tell you what we do in our preferences as well. So let's go ahead and get into this. Before we do that, I have to make the lawyers happy. And so we're going to do this disclaimer here. To the best of our knowledge, the information given in this presentation is accurate as of today's date. Tax changes do happen constantly, and so prior to using this information, you should consult with your tax professional. I'm going to come back to that kind of at the end of this program too. Also, this presentation does not establish a professional or confidential relationship between you, me, or Traders Accounting. And Traders Accounting is not a law firm or a CPA firm. The information provided should not be construed as legal or tax advice. Now, before we get into it, I do want to give you some contact information, and I will put this back up towards the end of the program. Our website is www.tradersaccounting.com/CTU. That is a special link for you all. And when you go there, you can download a free ebook that you can download to your computer and read about it. It has a lot of the stuff that I'm talking about today. and some more stuff, and that's free, no obligation there. But if you would like to, if you do want to schedule an appointment, then you can certainly do that. There is a free 30-minute consultation with Raven Johnson. She's our business manager. She's been doing this for decades, and she'll talk to you about the entity that's right for you. So that's up to you. The phone number is 800-938-9513, and our email is learn@tradersaccounting.com. As I said, I'll bring this up towards the end of our slide presentation. Now, what I like to do here is I want to start off at ground level with some basic information. Call it a Business 101 class. And we're not going to get too deep into this, but there are some principles that are very important when trading. And particularly since if you're going to do this if you're going to treat it seriously and you want to deduct expenses and things like that, the IRS demands that you treat it like a business. So we're going to go over some principles here that are very important to know. And the first principle is going to probably surprise you. It's be concerned about your cash flow. Cash coming in, cash coming out. Now, you guys have all been looking at how to get cash in. I would just listen to part of the last speaker, and that's, how to get money in, how to securely make a profit and get that money in. Well, there's two sides to cash flow. There's getting the money in, but there's also the money going out for expenses or for whatever it is that you have to pay for. And businesses that succeed pay attention to both of those. I have a client or a person that I do business with. It's personal. I've known him for decades. And I do his personal books and that. And he has millions of dollars coming in, but he's not making any money. And the reason for it, he doesn't really understand where the cash is going out. And so as a business person, you need to act like a business person as a trader. You need to be concerned with the cash going out. And that includes taxes, not just your expenses, but also the taxes going out. And that's what we're going to talk about today. Also, and this is a big one, make your financial decisions based on your business's needs, not the tax code. Every year, usually around December, I start getting calls saying, well, what do I need to do to save on my taxes? Do I need to go buy a car? Do I need to buy an airplane in some cases? Or do you need to buy this and buy this? And I will go through and talk and say, okay, what are you going to use it for? Well, I just want to save on taxes. That's very bad decision making right there. Let me give you an example. I had a guy 20 years ago, I think it was. He was an automobile mechanic and came to me in November, December, and he said, I want to buy a tire machine to save on taxes. I said, okay, how much is the machine going to cost? He said, $20,000. I said, okay, that's going to save you $6,000 in taxes. He said, okay. I said, how much are you going to use it? And he said, maybe once or twice a year. And I looked at him, I said, that's never going to pay for itself. You save $6,000 in taxes, you're going to pay $20,000. You're still shelling out a net total of $14,000. And that has to pay for itself in the long run. So my point here is when you start looking at buying things for your business, whether it's a computer or whatever, don't just buy it to save taxes, because that's always a losing proposition. Buy it if you need it for your business, but don't just buy it to save taxes, because that's not going to work very well for you. Next thing. Now, I want you to be aware of all your tax and your protection options. It is very important that you understand the basics of the tax code, at least where we're going to be going with trading, and so that you can use this for your advantage and set up what you need to set up in order to make everything happen in the right way. And that's what we're going to talk about here. And then actually, this is the outline of what we're going to look at today. First thing we're going to look at is trader tax status, or some people call trader status or professional trader status. There's a lot of different names for it. And that applies to every type of trader, whether you're trading stocks, options, Forex, cryptocurrency, whatever it is. It all applies to this. And we will talk about that, how to use that. The next thing we will talk about is mark to market. Now, mark to market only applies to stock and options traders. Technically, it can apply to futures, but we do not recommend it because you end up losing some very good tax benefits as a result of it. And then finally, at the end here, we're going to talk about entities. A lot of people have heard, well, I need to set up an entity in order to save taxes or do things better. Well, we will talk about that and what that means for traders. So let's turn our attention first to trader tax status. And trader tax status is actually a choice. I've underlined that, put it in bold, and italicized it. It is a choice. You get to choose whether you do it or not, assuming you meet the criteria. So if you don't meet the criteria, then you can't do this. And what this is deducting your trading expenses on your tax return. So there's a lot of expenses that traders have. You've got data feeds, you've got software subscriptions, your education. I know through Fausto's group here and Cyber Trading and other things that you pay some money for that, and those are deductible if you meet these criteria. And getting those things deducted can actually save some money, obviously, in taxes. We're looking at decreasing the amount of tax outflow, if you will, a cash outflow. So now, if you go to the IRS literature, you'll find that the criteria are very vague. I think the IRS does that intentionally sometimes to allow their examiners a lot of wiggle room. But what we do is we go back to court cases where the tax court has decided certain cases where taxpayers have sued the IRS. They've gone in, they've won these cases, and now we have some criteria to know that when you can use trader tax status or not. So here's the court cases and the decisions that we found out, or actually not the court cases, but first of all, and this is the big one, you have to have 720 trades in a year. Now, that again, that has come out of one of the court cases where somebody sued and won, so they have trader tax status on that. So if you meet that, we can point back to this court case and say, yeah, we've got a court case that says this. What happens if you don't have 720 trades per year? We don't know. I mean, if you want to do it and try to challenge the IRS, maybe we can get some criteria and some guidance on that, but that would be kind of costly to do. The second one, there's trading in over 75% of the trading days per year. In other words, we're not counting weekends and holidays, but in the trading days, you need to be trading in 3/4 of those. Now, these two criteria, well, let me get the third criteria before I say that. The third criteria that's come out of a court case, there has to be over 500 hours in trading, research, and education. So really, you should be keeping some type of a logbook to show the number of hours a day that you're doing trading, you're doing research, education. I mean, this right here qualifies as education, attending Cyber Trading University. If you go watch a video on YouTube, that qualifies as trading or education. So just keep a logbook of what you're doing and the amount of time it takes. And that takes care of it right there. So what we recommend is that you meet all three of these. And one of the reasons that we recommend that is if you go to the IRS literature, and the big thing that you can get, if you want to get it from the IRS, it's publication 550. You can go to the IRS website, and in their search bar in the upper right, you can type in publication 550, and you can download that to a computer. You can read it on the screen, whatever. But it's really long. It's about 120 pages now, I believe, and it talks about all types of investing. And so you can go to trader tax status and read about the criteria the IRS has, and you find out it's vague. But you do get the sense that they want you treating it like a business. They don't want you just haphazardly trading, making 2 trades a year and then trying to deduct $20,000 of expenses. That's not going to fly. So what they want you to do is they want you to treat it like a business, and these criteria actually do that. You're making a lot of trades. Now, some of you may not think 720 is a lot of trades. I've got clients that do. They do some swing trading, and that 720 may be a little bit tough in a year, trading in 75% of the trading days. So you have to actually put this, and you have to treat it like a business. Now, the tax savings here depend upon your current tax bracket. So I'm not going to give you any definitive numbers as to how much you can save, because if you're in the 22% tax bracket, you're going to save 22 cents of taxes on every dollar that you can deduct. If you're in the 37% tax bracket, you're going to save 37 cents on every dollar you can deduct. So a lot depends upon the tax brackets there, and there's really no way to manipulate that, if you will. Now, trader tax status applies to traders, any trader, doesn't matter, Forex, cryptocurrency, stocks, options, for or futures, whatever, doesn't matter. But if you meet these criteria, you can deduct those expenses. Now, if you're an individual trader, a personal trader, and you don't have an LLC, you don't have a business set up, you can still do this. However, there is a warning here. If you do this as an individual, or frankly as a single member LLC, the two are identical really as far as trading goes. There are some things that happen, and you have to be aware of these. First of all, a person deducting trading expenses on the personal tax return must use a Schedule C. Now you say, okay, that's an extra form on my return. Well, there's some problems that come up with that Schedule C. First, because of the Schedule C, your audit risk is increased. The Schedule C is the #1 most audited form by the IRS. The IRS kind of targets it. Now, I'm not saying you're absolutely 100% guaranteed that you're going to get audited, but it does happen more frequently than anything else. So your audit risk goes up if you do this on your personal tax return. Second of all, the Schedule C is kind of wonky. The home office deduction may not be obtainable. There are cases where you could take a full home office deduction. There are cases where it gets limited. There are cases, and which is a lot of times, it gets completely eliminated. So a lot of cases, you can't even use that home office deduction. So that becomes a problem. Now, there's no asset protection. This applies just as an individual trading. With a single member LLC, you do have some asset protection there. And the reason I bring this up is because asset protection is getting to be a very big thing. And you may say, I don't need that. Well, if somebody gets on your property and gets hurt, and they sue you, and the limits go beyond your homeowner's policy, then your trading assets are wide open. And so they can grab those in a lawsuit, or same thing with a vehicle accident or something like that. So sometimes it pays to have some asset protection. #4, it is difficult to justify with the IRS having a W-2 job and being an active trader. For whatever reason, the IRS doesn't feel that a person can do both. And you guys and myself have always, you've had 2 jobs or more in life at times, and that's fine. You make things work. Well, for whatever reason, the IRS doesn't like this combination. And so if they see on your tax return you've got a W-2 job and you're trading securities full time, they start to question things. Now, let me go back. So these are the 4 problems here that go. And we do have a solution to this. The solution is going to come up here in a little bit after we talk about mark-to-market. So now let me talk about the mark-to-market election. Now, this is just for stocks and options traders. We generally don't recommend this for futures, and it's not for any other type of trading. But this is an election with the IRS. For stock and options, and any entity or person can make the election provided the TTS or trader tax status qualifications are met, which is why I led off with those qualifications first. Now, what does the mark-to-market election do? Well, first of all, the election eliminates wash sale losses. You pay tax on what you actually earn. Those of you who have been trading for a while know that if you trade the same stock or option over and over again, you can accumulate wash sale losses, which are basically deferred losses. They move in time. And I won't get into a lengthy discussion about what it is, but sometimes those losses actually can carry over into the next year. What does that mean? That means you end up paying taxes now on stuff you actually had lost money on. And that's not good. The mark-to-market takes away that. There's no wash sales. So you pay tax on what you actually earned. Also, the election eliminates the $3,000 loss limitation. Under cost basis accounting for wash sales, if you lose money in a year, then you are limited to taking $3,000 and then the rest carries forward to next year. So for example, if I'm trading along under cost basis accounting and I lose $20,000, I can only deduct $3,000 on my tax return, and the remaining $17,000 gets carried over to next year to be used up against other capital gains or take another $3,000 on the return. With mark to market, that's not the case. It eliminates that limitation, and if you lose $20,000 a year, you get to write $20,000 off, which is a great safety net. So if you have a bad year, you can write this off against your W-2 income, 1099 income, any other income that you've got. And then if there's still loss left over, that carries over to next year. But the idea is you're wiping out your taxable income, basically. Now, that is a great thing, and I recommend that for stocks and options traders, particularly if you're actively trading, because it makes a lot of sense for stock and options traders to do that. Now, I do want to emphasize that this is an election. So this is something that you have to get from the IRS, although they don't respond to it, but you still have to file the paperwork with them. So it's not a choice like trader tax status. Trader tax status is a choice. You can go back to 2023 and amend your return if you want to deduct expenses for 2023. You could probably still get 2022 in and amend that. There's a 3-year statute of limitations, and certainly for 2024. But mark to market, you can't go backwards with it, with one exception, and I'll talk about that here in a second. This is an election with the IRS. You're going to have to fill out a form 3115 and send that in and before the tax return date. So what does that mean? Well, as an individual, this election has to be made by April 15th of this year. Period. No extensions on that. You can extend your tax return, but you can't extend this. So as an individual, or frankly as a C Corp, this election for 2025 has to be made by April 15th. And it will go back to January 1st of this year. But you got to get it in, because you get to April 19th or 20th, you're out of luck for the rest of the year. Now, for S Corps and for partnerships, those are informational returns. Those elections have to be in by March 15th, which we are pushing that deadline right now. So if that's something that you're interested in, you might want to move on that and get that moving very quickly. Now, the exception to that, if you form a brand new entity, a brand new LLC, it doesn't matter whether it's a partnership, it could be S corporation, whatever, you can actually make the mark to market election when you first form that. We put it in what we do when we set up entities is we actually put that in the business records. So there's an official document that you're making the mark to market election. And then the IRS, this is a special rule, the IRS does not have to be notified until the first tax return is due, which would be March 15th of next year or April 15th, depending upon the type of entity. So that is something that you might want to consider, because if you're not ready to pull the trigger on this yet, that's fine. You can always create an entity, let's say in August, And then if you do that in August and you set up your brokerage accounting, brokerage accounts for the LLC, and start trading there, then you can actually have mark to market at that point. So that'd be a way to kind of get around this. And also, the other thing is, if you're currently under cost basis and you set up an LLC, let's say in August, we'll just use that as an example. It doesn't really matter when. Once you stop trading in your personal account and you start trading in the LLC account under mark to market, let's say, your personal account goes dormant, and after 30 days, those wash sales will clear out of your personal account. And so you get a kind of a double blessing there, because you've got now mark to market on the LLC side, and your wash sales are clearing out on the personal side. So that's going to save you a bunch of taxes as well. So that is something really consider. Now, everybody asks me, okay, that sounds awesome. Mark to market's great. Are there any downsides? Well, there are some warnings here. Just like with trader tax status, you got to be careful. First of all, it is not advisable to hold long-term securities in a mark to market account. We recommend that if you're going to do mark to market personally, that you have an account for long-term securities and you have an account for day trading or swing trading, whatever the quick stuff. And long-term we define as anything more than 1 year. And the reason for this is long-term capital gains has a maximum tax rate of 20%. Most people will fall into the 15% category. You don't want to lose that. And so if you get it close to market, you no longer have capital gains. Now you have ordinary gains, and mark to market will actually get rid of that long-term capital gain benefit tax rate. So you don't want to do that. So you want to separate long-term and short-term into two different accounts. Also, now this is another reason for doing an LLC, particularly like a partnership or an S corp, is you can move the short-term stuff off into the entity, and that is under mark to market, and then you keep the long-term stuff under your personal side. So the long-term stuff is kept as far away from mark to market as we can get it, so that there's no doubt that about it's the long-term capital gains there, and you keep and preserve that capital gains rate for that will benefit you in the long run. Next thing, it's possible in some years to have a larger mark-to-market gain than what is reported on the 1099-B. Every year I deal with some clients who say, well, you calculated the mark-to-market gain, but it doesn't match what's on my 1099-B. And I tell them it doesn't. It's not going to ever. The 1099-B is very heavily dependent on wash sales. You actually have two columns on the 1099-B. Now, the 1099-B is your notice from your broker, your 1099, that tells you what the sale amount was, total sale amount, total cost basis, and then your wash sale amount, and then of course your gain or loss. Well, two of those columns, actually three if you count the gain and the loss, the mark to market, or not the mark to market, but the wash sale column obviously is affected by wash sales, but most people don't realize that that cost basis column is heavily affected by wash sales as well. And so you can't really depend on those numbers at all in order to determine what your mark to market gain is or loss, as the case may be. So the two really don't reconcile very well. And so it's possible in some years, as in most years, you'll have a mark-to-market gain that's smaller than the 1099 gain. In other words, you're saving taxes. But there can be a year where your mark-to-market gain is bigger than the 1099 because some of the wash sales on the 1099 are catching up. So it is possible there, but it's still beneficial just to pay tax on what you actually did rather than having to deal with all this wash sale stuff. Next thing, if you make mark to market personally, and this is for you, and you don't meet the TTS qualifications, you can lose mark to market. Remember I mentioned that those trader tax status qualifications were kind of the key to applying for mark to market. So if you make the mark to market election and all of a sudden you don't trade much, or you have a bad year, like for example, you got family members that have medical problems. We've had clients where that's happened and they haven't, then the IRS can take the mark to market election from you. So that's possible. Now, I found that that doesn't necessarily happen if you've got an LLC, like a partnership or an S corp. So that's we've got a safe haven there. So now, turning away from this, now that I've mentioned entities, let's go ahead and turn to entities and see how that helps us. There's several different types of entities. There's sole proprietorship, single member LLC, general partnership, limited partnerships, multi-member LLC, S corporations, LLC S corporations, C corporations, and LLC S C corporations. We're not going to deal with all these. Matter of fact, we're going to narrow it down right now, and we're going to eliminate two of them right off the bat. The sole proprietorship and the single member LLC don't do much for a trader. Both of them, sole proprietorship is trading as an individual. And so just doing it on your personal return. The single member LLC reports just like doing it on your personal tax return. So it's really no different. You end up using the Schedule C, you put the deductions on the Schedule C, and your income is listed as normal. And as I mentioned before, you have all those problems that come with the Schedule C, like the audit risk increases, and you have potential limitation to the home office deduction and all that stuff that goes on there. So we don't recommend a sole proprietorship or a single member LLC unless the single member LLC is going to go and be an S corp right away. But we'll talk about that in a little bit. The type of entity that's right for you depends upon your situation. Now, in most cases, we don't recommend general partnerships, limited partnerships, or S corporations and C corporations of either type. So basically, we limit our focus to help people. When we try to help people, we limit it to either a multi-member LLC, which is an LLC partnership, or an LLC S corporation. And the reasons for that are several. First of all, the LLC part is critical. One, that gives you asset protection, but also, more importantly, and a lot of people don't realize this, an LLC can change how it's going to be taxed. For example, if you set up a multi-member LLC, a partnership, and you go as a partnership, you file as a partnership for 2 or 3 years, and then maybe tax laws change, or you're doing really well and you want to go to an S corporation, that's a simple election with the IRS. You don't have to change anything about what you're doing. You don't have to change EINs. You just have to send an election into the IRS and say, hey, I want to be treated as an S corp now. Also, theoretically, you could be treated as a C corp. And then 5 years down the road, you say tax laws have changed again. I want to go back and be treated like a partnership. You can do that as well. So there's some flexibility here that if tax laws change, then you've got some flexibility with an LLC to actually go where the tax savings are the best. So, but for our purposes, we're going to start looking at a multi-member LLC, an LLC partnership. Now, why? Well, there's a couple reasons, and some of these apply to an S corp as well. But I'm one of these people that when I talk to you, I am going to talk to you about not just the pros, but also the cons. I'm not going to set you up for a fall. I want you to know the whole story, and you make a decision based upon that. First of all, here's the cons. If you have an LLC, more than likely you will have a yearly LLC fee. That's true with a single member LLC as well. Most states, you have to renew that LLC, the registration with them. Some cases, like South Carolina, it's $25 a year. Other cases, like California, it's $800 a year. And that's the range. Some states don't have an LLC fee. So I will tell you that. But you do have an annual report that has to be filed every year. So you possibly have an extra fee there. You also possibly, well, with a partnership or an S corporation, you will have a tax prep fee. And you say, well, I don't know about that. Well, the idea is to get this off your personal tax return. We do not want this interfacing with that Schedule C on your personal return, or else you're going to have problems there. So we are going to decrease your audit risk in that by setting it up as a partnership or an S corp. And so you will have a tax prep fee. Now hang on to that, because I'm going to tell you how to get it paid for here in a little bit. You also have some increased broker fees. For whatever reason, the brokers seem to think if you're setting up a business account, then you've got scads of money and you can pay more in fees. There's some ways to mitigate that a little bit. Some people keep their personal accounts going and they use some of the free stuff on the personal side, but do the trading on the LLC side. There's ways to do that. But I do want to tell you about that before, so you do know about it. All right, here's the pros of this. First of all, with an LLC, you have asset protection. And so whatever happens out and this depends upon state too, because LLC laws are different in every state. But by and large, if you get sued personally on the outside, it can't get into the LLC where your trading assets are. So that's a good thing. So you want that asset protection. You know, somebody gets, like I mentioned earlier, gets hurt on your yard, or you get into an accident on the road and it's your fault, something like that. They can't go after your assets if they're in the LLC. Number two, I mentioned this a little bit ago, you have a choice in taxation methods. An LLC can change how it's going to be taxed. Now, you can't change this every year, but as tax laws change, you can change how it's going to be taxed periodically, and therefore go to the optimal place for being taxed. Number three, this is a big one, whether most people realize it or not. It's a reduction in IRS scrutiny. I mentioned a little bit ago that on the Schedule C, if you're doing this on your personal return, either as a sole proprietorship or an individual, or as a single member LLC, you have to use that Schedule C to deduct those expenses. And that raises your audit risk. By putting this into a partnership, LLC partnership, or an LLC S corporation, you bring your audit risk down to almost nothing. Partnerships and S corps are audited at a rate of less than 0.1%. It's rare that the IRS ever looks at them. I've been in accounting for 35 years at least. I've kind of lost track of how long it's been, but I've seen a lot of audits. Every audit except one has revolved around that Schedule C. And the one that I saw that wasn't actually was an S corp, but it was a payroll audit, had nothing to do with income tax. And those are messy too. But we won't worry about that right now. So I haven't even seen an income tax audit for a partnership or an S corporation. I'm sure they exist, but I haven't seen them. Number four, the home office deduction. When you get off into the partnership or you get off into an S corporation, that home office deduction opens up without limitations. And so we can find the percentage at your home office is, we use square footage, find the percentage your office is of your house or apartment, and that gives us a percentage. And then we can write off percentage of your mortgage interest, real estate taxes, or rent, as the case may be, insurance, all your utilities, including cell phone and internet, HOA dues if you've got those, repairs and maintenance. Just about anything that goes into your living accommodations, we could take a percentage of that on the home office deduction without restriction. And kind of hang on to that one, because I'm going to come back to it in a little bit. Number five, it solves the W-2 trading issue. I mentioned a little bit ago that if you're trading on your personal return, the IRS doesn't like it if you have a W-2 job and you're trying to be a full-time trader. They whatever reason have a conflict. Well, what this does, your W-2 job stays on your personal return, and your partnership now is doing the trading. So they're separated. And what it looks like on your personal return is that you got a W-2 job and you're investing in this other business. And so the conflict is resolved there. So that's really a beautiful thing. It solves the mark-to-market long-term, short-term dilemma. I mentioned this a little bit ago that you don't want to get long-term holdings, your investments that you're holding for 1 year or more. You don't want to get those anywhere close to long-term. Well, this solves that because in a partnership or S corporation, you can move your short-term trading off into those entities and then keep the long-term investments on your personal side. And it works out really well. And then the last one is where I want to explore a little bit. The tax savings from this can pay for the LLC. Now, I'm going to focus on the partnership here, but it's true of the S Corp as well. And one of the reasons we don't promote the S Corp right away is there some extra expenses there, like a salary requirement. You got payroll taxes. You probably need a payroll company. So there's some extra fees there that we only recommend that you go to an S Corp when you're really good, making some solid money, and then can go that way. But the tax savings can pay for the LLC. You say, wait a minute. How is that happening? Well, think for a second. You've got the yearly LLC fee that you have to pay to your state, whatever that is, and you got a tax prep fee and maybe some increased broker's fees. Those are the fees, extra fees that you get with an LLC. But by picking up these extra deductions that you get, like the home office deduction and some other things, you can actually use those deductions to reduce your tax enough to pay for those things. Let's take some examples. So if you already have yearly trading expenses, the refund you get from deducting those expenses could pay for the LLC fee, the tax prep fee, your brokerage fees, and then some other things. Matter of fact, you end up start making a profit after a little bit. Here's an example. Suppose a person lives in Illinois, and this is just an example. Your situation is going to be a little bit different, but the yearly LLC fee is $75 per year. And the tax prep fee, we're going to assume, is $600 per year. I'm just pulling that out of the air. I don't know what our fee is. I don't keep track of our fees, quite frankly, or anybody else's, but let's just assume. And so that's an extra $675 a year. And people look at that and say, man, I don't want to pay extra $675 a year just to get a pipe dream. No, because what's happening is if this person's in the 35% tax bracket and Illinois has a flat, not 4.95% tax rate, then what can happen if this person has $1,015 in trading expenses and they can get the government to pay for the LLC? Think about that for a second. All you would need is $1,015 in this case to get a refund back to have the government pay for your LLC. Most people have that in the home office deduction. It's my experience, and I've been doing this for quite a while, the home office deduction is usually worth $1,200 a year at least. Some people, if renting an apartment or something, they can go a lot higher than that. I've seen $10,000, $12,000. So at that rate, this will pay for your LLC right away. So let me go back. So in other words, all you need to do is pick up these deductions, and then you could pay for your LLC. You get enough back in refund or lower taxes, and the government will give you that money back to pay for your LLC. And it really does work out well. It pays for itself when you use it properly. Okay, so what we're going to do is we're going to go to a summary at this point, and then I've got some other things to watch out for here. So here's what we've talked about. First of all, trader tax status allows you to deduct trading expenses if you qualify. Any type of trader can do this if they have at least 720 trades per year, they're trading at 3/4 of the trading days per year, and they've got 500 hours in trading research and education. The mark-to-market election, which we are running out of on the time of doing that for 2025, allows stock and options traders to pay tax on what was really earned and write off entirely what was lost. The great safety net, but it also gets rid of the wash sale, so you're only paying tax on what you actually did. And then, of course, forming a multi-member LLC provides asset protection, decreases your audit scrutiny, and it could be free. And something else that this is my opinion, but it's a gray area with the IRS. I seem to think that if you form a multi-member LLC or an S corp, quite frankly, um, that those trader tax status criteria don't apply nearly as much. And so you get mark to market and then you're not going to lose it. You don't have to worry about the keeping up the trading levels and things like that. You still have to do that on your personal return if you do it there. But on the LLC side, the multi-member LLC, you don't have to worry about it so much. So a multi-member LLC is great. And by the way, one of the things that we recommend to our clients is you start off as a multi-member LLC or an LLC partnership. They're the same thing. And once you've got your trading really well and you're making between 75,000 and 100,000 a year, that's when you want to move into the S corp. We file an election to be treated as an S corp, and then we can set up payroll. We don't do payroll, but together we set up the payroll. We start talking about 401ks where you can start getting maximum benefits out of this and things like that. So that's kind of a roadmap of where we tell our clients to go. Now, there are some things to watch out for here in the future, and I would be remiss if I didn't tell you this. First of all, you probably heard about prop firm trading. That changes everything I just told you. Um, Normal trading, like, you're trading your own money, just subject to income tax. That's it. Prop firm trading, you are actually trading for somebody, another company, and that is actually independent contractor area. And so now you not only have to pay income tax, you got to pay self-employment tax on that as well. So it changes the dynamics of everything. So if you're going to get into prop firm trading, I would suggest you get some advice on that, on how to handle that. Number two, and this is one that a lot of people are surprised at, some ETFs, and SPX is the big one, are treated like futures contracts. SPX, VIX, NDX, there's 6 or 7 more. They aren't traded in New York like the other ETFs, and they're not traded like stocks and options. They're actually traded in Chicago on the Mercantile Exchange. And so therefore, they are treated like futures contracts. So if you start trading SPX, as an example, you're not trading regular stocks and options anymore. And mark to market's not going to apply. You're now trading like futures, even though it's not classified as futures, but it's treated like futures tax-wise. And now you've got a whole different ball game going on. So that might be something to get advice on if you're going to go down that road. Number three, trading other people's money or even giving them advice can create major problems. You'll notice in the webinars that you've been taking here, and probably maybe some other things that you've been doing, they don't recommend to you stocks to buy. They'll tell you how to do your research, how to find them for yourself, but they will not recommend which stocks to buy. And that's because once you start recommending stocks, you have to be licensed by the SEC. The same is true for investing other people's money. And invariably, I have maybe 1, 2 a month that people will ask me, I'm setting up the LLC here. My wife's the other partner. And I got some family members that want me to invest their money. And I say, don't do it because you can get into a lot of trouble that way. There are ways to kind of structure things to help get around it a little bit where they have to be partners or something like that. But that's another thing you're going to need to get advice on. But just don't take somebody's money and manage it, or even get into their account and manage it, because you can get into a lot of trouble that way. And the last one, which is everybody spooking everybody, is the new administration. I know I was watching, talking about the tariffs and how that's kind of upsetting the market. There's other things going on, and it's part of the natural cycle, I'm sure. But we're also watching other things, and this is a time right now of uncertainty, quite frankly. And we will get through it. Traders always do, and probably bounce back even better. But the tariffs are playing a part in the stock market right now. Um, there's a lot of talk about eliminating the IRS. I was reading about that today. Well, you're not going to get Congress to make any changes in the tax laws right now. Matter of fact, I've heard people saying, well, I may not file my taxes until I find out if they're going to eliminate the IRS. Well, they're not going to eliminate it this year. I mean, well, at least not right now, not before tax time. So if you're waiting on that, you might as well just file your tax return, because Congress has to take care of that. And Congress, that's not even on their plate right now. So it's probably they will pick something up, tax tax changes, eliminating IRS, whatever it is. That's going to happen probably at the end of the summer, maybe in the fall of this year. Too late for anything as far as 2024's taxes. So don't wait for anything like that, but do keep an eye on it, because we could eliminate the IRS. We could get major tax law changes, something like that. There could be a lot of things going on. So that is something to really keep an eye out on, watch for, and get good advice on what you're doing, and somebody that you can rely upon. Now, let me go back to our information here. I said I would bring this back up. Again, our website is www.tradersaccounting.com/CTU. There is a free ebook there that you can download. It has a lot of stuff that I was talking about, and some more stuff there. You can download that, no obligation necessary. We don't even know you went on the website. I think there's a counter, and that's about it. But you can download that. You can read through it. You got some advice there. The phone 800-938-9513 if you want us to do your taxes. Let me tell you what we do here real quick. First of all, we can set up those LLCs for you. If you're interested in setting up a multi-member LLC, we can do that for you. If you're interested, and by the way, with LLCs, multi-member, you say, well, I'm alone. I don't have any partners. I don't have any family. There's ways to do it. Give us a call. There's ways to actually get it done, believe it or not. So we set up LLCs. We do bookkeeping for trading clients to keep track of their profits and their loss. Matter of fact, mark to market every month. We can tell you what you made, you lost, and your expenses. Also, of course, tax preparation. We do personal tax prep as well as any of the entities that I've mentioned above. So we can take care of those needs for you. We don't do the payroll for the S corporation, though, just kind of let you know. But we'll help you give some recommendations as to who to contact for that. And then also our email is learn@tradersaccounting.com. So we will be standing by if you want to give us a call to set up an appointment. I think you can go to the website there and you can make an appointment right there. And certainly that would that'd be great if we could talk to you. Again, there's a free 30-minute consultation with Raven Johnson. It's not with me. It's with Raven Johnson to talk about what type of entity would be good for you. You'll have to tell her about your situation, what you're trading, and how things are going with you. And then, that will come into play, and she will be happy to sit down with you and do that for you. So what I'm going to do here is I am going to stop the share. Hopefully you've got the information off of the screen there. Again, the tradersaccounting.com/CTU, and then our phone number is 800-938-9513. And then I'm going to turn to questions here. So I'm going to bring up the chat. And Fausto, you here?
Yeah, I'm here, Jim. Everything looks, Jerry, everything's good here.
All right, good.
I had a question for you. So, is there any new changes for 2025 that anyone should be concerned about?
Actually, Congress has not done anything major in the last few years. The only thing, there is one thing coming across. If you remember back in 2017, they had the major tax revision then, where we got bonus depreciation and the new standard deduction for individuals and things like that. Well, when they made that tax plan or that tax policy in 2017, they did not set it up permanently. And so those things are phasing out. So the bonus depreciation now is down to, I think, 60% this year. The standard deduction is set to go back to what it was with the exemptions and the standard deduction at lower rates here in a couple years, which is why Congress is going to have to act on this fairly soon. So as far as nothing major from last year to this year, but we do have some things that are going on in the next couple years.
And then just to reiterate, I know you mentioned this before, and I'll just remind everybody one more time. So regarding about the deductions, the money you spend towards education, is that tax deductible?
Absolutely. If you meet the criteria for trader tax status on your personal return, or if you do it in a multi-member LLC or an S corp, that's fully deductible.
Okay.
Absolutely.
And if I go on vacation and I do a class, or if I'm trading on a vacation, can I write up that vacation?
That is something you have to be very, very careful with. I have clients ask me that all the time, actually. And what I tell them is if you go on a trip, you need to have a business purpose for that trip, and you need to document it well. Now, if it just so happens you see family members, or you just happen to go to the beach or whatever at the same time, fine. But make sure you've got enough documentation there to show that it is business related, then you can do that.
Okay. So if they log into my webinar or something in my class or something, will that count for it?
Well, I think it's got to be when you go to the place, there's got to be something indicative at the place that not just because you can log into your website anywhere, right?
Yeah, of course.
You're well known all over.
Well, like I said, and just to let everybody know, I always get this all the time, and people ask me this, and it's just it boggles my mind, Jerry. But everyone's like, "So you make all this money? How you pay now you got to pay taxes on this?" And I always tell everybody, "Listen, if you're worrying about if you're paying taxes, that's a good thing. That means you're making money. It's when you're not paying taxes that's a major problem. That means you're not making money.
That's right.
You got guys like you got Traders Accounting that will help you figure that stuff out, and that's why they're here today. So don't worry about paying, how much taxes you're going to pay in this. You actually probably will pay less, I think, doing this as a business, because that's another misconception people get. They think like, oh, my account says it's going to be in this tax bracket now. It's going to be capital gains and all this stuff. And I just tell them, your accountant doesn't understand the trading business.
Yeah.
That's really comes down to it.
It is complex, and then you need to find somebody that does understand what's going on so that you can maximize your deductions. Now, as I led off with, you don't go out and just spend money to save taxes, because you always lose money that way. But to maximize the deductions you have and make sure you get the best tax advantage, you need somebody to help work with you, and you need a partner there.
Yeah.
Really.
And Dame has a question right here coming across. Is you're able to write off losses from our trading activity as well?
Yes. Well, losses, it depends on whether you have mark to market or not. If you're not under mark to market, if you're doing the cost, I can't think, the cost method of accounting, then you're limited 3,000 in a year, but the rest carries forward to next year so that you can offset other capital gains next year. Now, if you've got mark to market, you can write it all off, no matter how much it is.
Is it still the $3,000 the most you could write off?
Yeah, under the cash basis method, 3,000 is the most that you can write off on your tax return.
Okay. Before I let you go, and I was trying to still figure this one out, but I know that the Biden administration was trying to pass a law that, if you made money in the stock market, they're going to tax you on it. But my thing is like, well, how do you tax somebody when you didn't even take a profit yet? And then what happens? What about my losses? If I lose 50 grand and I don't have any money to pay for it, you're going to give me the money, pay me back the taxes on that? So like,
yeah, that actually, what they were trying to do is convert everything to market. And mark to market, if you put that long-term investments under mark to market, you do end up paying tax on money that you haven't even realized yet, which is why I went through the whole spiel about keeping your long-term holdings away from mark to market. But the last administration was going to make everything mark to market, and it would have turned out to be a mess, because it would have destroyed the market.
It would have destroyed the market. It would destroy the market. So I just don't get it. But anyway, Jerry, thanks for coming here. And once again, I got to have you back on my podcast, and so we can sit down and have these type of conversations.
Sounds great.
You know, I know you gave a great lesson here, and that's why we had you here. But last time we were on the mic and we had a podcast, everyone loved it. We had a great response, and I have a lot more questions, but I want to take your time because we're out of time and people have been here all day. So thanks for coming, Jerry, and everyone. Thanks for coming here at Cyber Trading University Cyber Expo, and we will see you all tomorrow morning. I will be broadcasting another event tomorrow at 12. We'll send you the link. Hopefully, guys, if you missed my morning, we're going to do a totally different one tomorrow. So, Jerry, thanks for coming, and
All right,
everyone,
thank you.
happy trading. And we'll see you then.